Very good morning, everyone. So it's been a while we have completed the science and tech classes. So today we are starting with economy. So what our basic agenda in economy is? कितना क्वेश्चन आता है economy से? 15 to 20 maximum. And what is the nature of questions being asked? As I already told, it's very much related to conceptual. More or less, most of the questions are asking from concept. Even though there is current affairs linkages with XYZ things, question are very fact bhi nahi aa raha hai. Conceptual linkages, how XYZ is conceptually related to XYZ. Money supply bola, how taking money from the ATM disrupts the money supply in the economy. These kind of questions are being asked in the exam. So our objective is little different from what we have done in science and tech. Here what we are doing is we are more focused on static part of the economy. And I assuring you this series will serve as a very fast revision for your economy basic concepts. And when we are discussing the basic concept, there is a recent development regarding that we will discuss as a part of current affairs also. So that will be our approach for this economy series. So in this first class, we will be discussing breaking down basically about the payment settlement system. RBI related XYZ cheese kya hai? Then NPCA, what are different programs and PSCA has come into picture. These two things we will discuss today in detail. Okay, let's get started. Start first with some basic fundamentals. What is fiat money? Give me example, give me definition. Absolutely wrong. Those money which is issued by the order of government, central bank, or some countries mein king hai, like Saudi Arabia mein to king. So those sovereign authority backed currency is called fiat currency. India mein kya hoga fiat currency? Coins, notes, CBDC. What is CBDC? Central bank crypto digital currency, something like that. So this is also issued by RBI or central bank of XYZ country. So these all comes under fiat money. And India में coin कौन issue करता है? Coins issued by government under Coinage Act 2011. Notes is 1 rupee note is issued by not 1 rupee issued by government but distributed by RBI itself. All other notes issuing, distributing, designing, everything is function of RBI only. This is done under RBI Act 1934. Now come back, what is legal tender? Give me first, what is legal tender? It's not legal tender. Again, you are making conceptually mistake. He's saying any currency that is associated with any backed by a physical asset is legal tender. This is not correct. Absolutely wrong definition. Cannot make a mistake in basic definition of these terms. If you are making a mistake here, means there is basic understanding mein something is wrong. Fiat money means main function is that is issued by sovereign authority. It can be government, king, RBI, central bank, anyone. Legal authority means legal tender means this is issued, this is a fiat money, that is it is issued by sovereign authority, plus this is legally valid for settling all debts and transactions within the country. What does that mean? If I have to pay you 1000 rupees, I am giving you this legal tender XYZ, then you cannot refuse. You cannot say I will not accept this, I need that kind of only. You cannot take that kind of demands. Every settlement or transaction happening in the country can be done using XYZ currency. And that currency should be issued by sovereign authority also. When these two conditions are met, we call it as legal tender. What is examples? Notes, CBDC ये सब legal tender ही है. Yeah, that is we are going to discuss next. What is limited legal tender? What is limited legal tender? Legal tender, you understood what is the concept. Limited legal tender is that which To a limit, you can accept, you cannot refuse it. But beyond that limit, you can say, I will not accept this tender. Best example is coin. Somebody is repaying you with coins. Till 1000 rupees, you cannot refuse it legally. Beyond 1000, if someone is, you are paying all the fees in the institute by a 1 rupee coin, then institute can say, ye acceptable nahi hai. समझ रहा है? So coins are one best example of limited legal tender. Now unlimited legal tender means exactly opposite of this. Like you cannot absolutely refuse the acceptance of or in settling debts or settling any transaction. Is notes unlimited legal tender? Technically it is unlimited legal tender, but there is restrictions on this also. What is restrictions? Under IT Act, under finance bill, budget, all these restrictions रखता है. कितना रखता है? 50,000, 2 lakh. Beyond that, you cannot give in notes. You have to depend on DD, check, or online transactions. It is unlimited legal tender. In, for exam perspective, notes is example of unlimited legal tender. Coins are examples of limited legal tender. Clear? Confused nahi hona. It is backing with any physical assets, backing with gold. This has no XYZ relations. Pehle there was conditions like that. It should be backed by X kg of gold. Now abhi there is no such conditions. It should be backed by X kg of gold. And what is the promise that government is giving? Sovereign authority coin hai. What is 500 rupees coin? What is the RBI promise you are getting? RBI is liable to accept it. It is RBI is not liable to give you gold for this. 500 rupees gold RBI नहीं देगा. Maximum RBI इधर तक देगा. If 500 rupees दे दिया, it will exchange you with any other legal tender. 100 rupees का notes दे देगा. That is acceptable in the country. But here be RBI is not mandated to accept those currency which are demonetized. Demonetization means what? क्या होता है? ये लीगल टेंडर स्टेटस कैंसिल कर देता है. So RBI is not mandated to keep that promise of giving you that exchange for XYZ services for that tenders. 500 rupees or 1000 rupees, that is demonetized. Now what are functions of RBI? Lot many functions it has. This is very basic. I am not, like in the whole lecture I am assuming that you know all of this. We are just a refreshing kind of discussion we are having. Banking functions, what are banking functions RBI does? So many. Banking regulator, banker to bank. Banker to banks means what? Lender of last resort will also come into it. What does that mean? Lender of last resort means? If some bank run situation happens, then RBI will act as protector of that bank. Maintain CRR, SLR ratio, how much should be CRR, how much should be SLR. Interbank settlements are carried out by RBI, loans to the banks, advances to the banks, lender of last resort, banker. Now tell me issue of notes. This is under everything related to notes except 1 rupee note. Even distribution of 1 rupee note is function of RBI. Rest all other rupee, design, XYZ, finalizing the design and distribution, printing, everything comes under RBI. What are monetary functions? Monetary policy functions, what does that mean? What is objective of monetary policy functions? We will discuss this in much detail in later part. Actually, monetary policy can be designed by different aspects. Either you can do it to promote, maintain the inflation or price stability, maintain price stability or have a control over inflation. और क्या हो सकता है? Growth can be prioritized. और क्या हो सकता है? Savings, forex reserves, government spending, all this can be related to monetary policy. Now what is India's approach or what is India's monetary policy का objective क्या है? We have redefined this in 2016. So after 2016, what is the objective of Indian monetary policy? Tell me, it's only inflation targeting. Inflation targeting considering the growth. That is the objective of India's monetary policy, whatever XYZ. Who conducts this? Who decides the rates? Monetary Policy Committee. This all will details later. Why inflation and growth are taken? Thing is, all this how they do control inflation by controlling money supply. Now inflation has correlation with growth. If higher inflation is there, general tendency is higher growth you can also achieve by having higher money supply. Now if you over control the inflation, make inflation zero, what is the issue? It will depromote growth. You are constraining money supply too much to have your inflation very low, like zero inflation, then growth will stagnate. So these are like going in opposite direction. If inflation is going like this, growth is going like this. So RBI is told to have a balance between both. And we have this variable targeting system. 4% inflation should be the 2% band you can have 2 to 6%. All this we will discuss later. Now come to other functions. Public debt function. What does that mean? All debt functions of public government debt functions are carried out by RBI. What does that mean? Government need money. How government get money? How government raise money from the market? Issuing government securities. Then who issue government securities? Is on behalf of government, RBI is doing this. So all these functions are carried out by RBI only. State governments who does? RBI itself does it for the state government also. Now what is the conflict here? Now at what rate RBI can sell this government securities? Based on what this is decided? It is decided based on interest rate in the market. This interest rate कौन set करता है? It is based on monetary policy. It भी RBI set करता है. So both interest rate भी वो करता है, उसके interest rate में पैसे लेना काम भी RBI करता है. So there is a conflicting interest between money supply objectives as well as the public debt functions of RBI. इसके कारण से हम क्या सोच रहे हैं? Government was proposing PDMA. What is PDMA? Public Debt Management Agency. And what is the function of it? All this public debt management will be carried out as a separate function. But RBI was not in the same footing, so this has not been implemented. It was just being proposed and still in a proposal mode. Other function, forex management reserves. We have discussed before also. Like rupee is falling, RBI is selling dollars through open market operations to support the rupee. FEMA, under Foreign Exchange Management Act, RBI different functions for managing foreign exchange is defined. Banking regulation and supervision. Yes, bank fail हो रहा है. Yes, bank stress feel कर रहा है. Then कौन come to rescue? Rescue plans are being decided. PCA framework. What is PCA framework? What does it prompt corrective action? What does it mean? All this, if some bank is not following XYZ norms and it is having stress, it will be kept under this framework. So all these regulatory functions are done by regulation of NBFCs, cooperative banks, RRBs, differentiated banks, all these. Money market instruments, payment settlement, consumer protection is also part of RBI. Give me an example for this. A lot of ads. You should mutual fund में देख के invest करो. ये सब ads आता है. और cryptocurrency आ गया. One major RBI का point was cryptocurrency is a risky investment. There is no backup assets for this. Bitcoin especially. There is no backing asset for this. And its value can vary in any ways. If something is varying like this, if you are investing too much money, what will happen? It can cause risk to the people. If all people are going and investing there, it can cause to the people. So this is one reason why RBI came with a ban on these cryptocurrencies or the wallets that is operating cryptocurrencies. RBI came with a ban in 2018. So one reason was protecting consumer financial inclusion and growth, innovation in payment system. All these are one way or the other coming under the basic functions of RBI. Go ahead. Now we are not too much spending time on small currency issues. We are going something related to currently in use. What is cryptocurrency? We discussed, I think, so much aspects of this in science and tech class itself. So here our focus will not be too much on technological aspect. What is cryptocurrency first? It is having cryptographic features, then plus it uses blockchain technology. Blockchain technology has these features like decentralization and all this. These are examples. Ethereum, Bitcoin is there, XRP market, XRP is there. How does this works?
Based on solving some very
puzzle is there. What is the reason for coming of this Bitcoin, advent of this Bitcoin or cryptocurrencies? Like its all origin one way or other is related to 2008 financial crisis. So what happened in 2008 financial crisis? All crash of the dollar happened. When crash of the dollar, Lehman Bank failed, crash of dollar happened. So what happened? So people who have invested in dollars, put their money in dollar, lost their value. Now after one crisis happened, what government do? We have seen during this pandemic also. What government does during a crisis? Government want to kickstart the growth. How government kickstart the growth? By increasing money supply. How government increases money supply? By pushing people to take more loans. How it is done? By reducing the interest rate. So repo rate kam rakhega. So indirectly government will try to directly or indirectly print more money. Now printing more money and GDP growth is not happening, then what happens? Very simple concept. If 100 rupees is only there in the economy and there is 10 apples, how much will be price of one apple? Only 10 apples are there, 100 rupees is there only in the economy. This is the only product, this is the only money that is. So one apple will be sold at 10 rupees. Now tomorrow there you printed 200 rupees and you pushed into the system, economy. But GDP growth hasn't happened. There is 200 apples, 200 rupees and 10 apples only. GDP growth is not happening. You are simply pushing the money. Then क्या हो गया? एक apple का price 20 हो गया. One way or the other क्या हो गया? Inflation हो गया. Value of the money become half. So this, after printing the money, inflation happened. So in inflation also people lost huge amount of money, value worth of their investment that is having. So one way or the other, so many sections of the society lost interest in fiat currencies. Why this is happening? Because government can do literally anything. Government have absolute control of how much money should be printed, how much money supply should happen. All this government have absolute control. And this control should be taken away, or this control should not be there. There should be a system that prevents printing of unlimited supply. And from that idea, we have started the origin of Bitcoins and blockchain technology. Here there is puzzle and the number of Bitcoins is limited. Now there are different variants of blockchain and Bitcoin technologies, cryptocurrency technologies, which can, this algorithm also can be designed such that you can control the number of XYZ money supply in cryptocurrencies also. But the basic idea is number of Bitcoins, in Bitcoin is the best example, number of Bitcoins remains constant. Depending on solving the mining capabilities, you get more Bitcoin into the system. Now Bitcoin come into force. Now Bitcoin come, government is, now our focus is not too much on Bitcoin technology. Our focus is on what is legal status of cryptocurrencies in India, what government is doing, what RBI is doing. Now, why RBI and government literally don't like this Bitcoins or cryptocurrencies? Why government, if you are watching online, comment the answer. Why government or RBI? You can see what they are done. Fiscal control means? There are two aspects to this. One is the end use. There is no regulation. It can be used for terrorist financing. It can be used for money laundering. It can be used for a lot other purposes. But that is only one aspect of it. Major issue is how government is ensuring macroeconomic stability. How government is ensuring macroeconomic stability? By controlling the money supply. When pandemic is there, increase the money supply. When pandemic inflation is coming, restrict the money supply. So this control government is doing through different repo rate, CRR, SLR, all these tools we are seeing. So this tool is used to bring the macroeconomic stability. What does macroeconomic stability means? There is inflation is in the rate, forex exchange rate is in the limits. So all these are controlled by controlling the money supply. Now if private currencies are taking a true form, currency form in the true nature, what will happen? The whole government's control over or central bank's control over the money supply goes. Now if anything happens, wherever the value of rupee goes or currency goes, government cannot do anything, you just have to sit and watch. So this is why government, RBI throughout the world, one way or the other doesn't like at least these private cryptocurrencies. Now, but cryptocurrencies are like, how much you can ignore them. Blockchain technology is like like sweeping technology. So many applications you are getting, more innovations are coming. So one way or the other, government has to address this void. Somewhere or the other, we are moving towards something like more decentralization. It brings advantages. Decentralization advantages is the unlimited printing advantages is the non-unlimited printing. Even though there is advantages with this decentralization system, there is so much risk associated with this. Now what else? So what government is doing? They cannot ignore this for too long. Now government is coming with their own digital currency. CBDCs are. That's the advent of CBDCs. Now we will discuss a little bit this. 2013 RBI started warning people don't invest in cryptos. They are not. Then 2019 what RBI does? They took the extreme step. They banned everything. Everything means what? All wallets which were doing transaction in cryptocurrencies, they banned everything. This is illegal business बोल के सबको बंद करने के लिए बोला. Indian banks को instruction दिया nobody should interact with them or nobody should do businesses with them. Then what happened? These wallets went to Supreme Court. On what basis they questioned it? This is a part of Article 19, our right to freedom, right to do the business is part of right to freedom. So we have to do this business. Then what the RBI Supreme Court came up with? Supreme Court ordered in favor of the wallet. Supreme Court say complete ban is not following the test of proportionality. Instructor RBI can do some regulation, RBI can do some XYZ standards, but complete banning means somebody's right to business or this new technology is being completely taken away. That cannot be accepted. So the ban was lifted in 2019. After that, there has been little bit confusion on where exactly this cryptocurrencies is lying. Now what government is doing on the other hand? In 2018 budget is clarified that cryptocurrencies, Bitcoin is not a legal tender. So ho nahi sakta, it's not a fiat currency, it's a private currency. And 2019 came up with a draft bill. So much interesting feature in this draft bill is it also contains a provisions if somebody is using this 10-year jail term will also be given for some offenses using these cryptocurrencies. What else? 2022 budget, 30% tax on cryptocurrencies and 1% TDS was charged on cryptocurrencies. All transactions on cryptocurrency. What is more interesting in this? ये तो डिजिटल टैक्सेशन कर दिया क्रिप्टोकरेंसी क्रिप्टो शेयर मार्केट ट्रेडिंग आप कर रहे हैं गेन ले रहे हैं similarly if you are doing cryptocurrency trade and making gain you have to pay 30% digital tax or TDS. Now what is a more interesting fact about it? If you are doing two transactions, suppose एक transaction में you made a profit of 1 lakh rupees, another transaction you made a loss of 1 lakh rupees. So what is your net profit? 0. But what government said? इसको हमको कोई मतलब नहीं है, इसमें 30% टैक्स डालो. This is what government does. Our individual transaction we are not cared about. You cannot make it net. That is on every transaction there will be there. 30% tax is on every profit you make, pay 30%. but you cannot make the net profit. If you are making loss, you make loss, उसमें tax नहीं देना. So this is what government come up with. Somewhere they are depromoting people from investing in all these riskier investment options. Yes, yes, there are reports Indians are the biggest investors in. Lot of people are already investing in this. But risk to hai. If you are affordable, don't risk. But what time be Bitcoin has, for some long it was making really huge strides. अभी तो risky है. Bitcoin winter season भी था. 70,000 to 40,000 आ गया within few weeks value. So now it's, you cannot actually predict where it will go. That much high risk is considerable. Now these are some facts regarding what these universal institutions are doing. Either they are implementing the blockchain technology in different applications. UNICEF, what they does, the first UN organization to accept donations in cryptocurrencies. Now Bond I by World Bank, what it does? Blockchain dominated in Australian dollar. It is a new system developed by World Bank. It is a blockchain technology cryptocurrency denominated in Australian dollar. Now Bill of Rights by World Economic Forum. Similarly, OECD has came up with this crypto asset reporting framework. What all this they are doing? Some applications of cryptocurrency. What these guys are doing? They're trying to develop some standards. Anyway, blockchain technology is here to say it will impact. So at least set some standards so there is some level playing field. Blockchain related to currencies. Idea is they are trying to set some standards or they are trying to leverage the application of the blockchain technology. So some kind of developments more you can add. Indian government is also implementing blockchain in different fields. So you can add those into it. So these developments are continuously happening. Go ahead. What is stablecoin? Here what you were discussing has some importance. What is stablecoin? Tell me. Bitcoin, what is the backing asset of Bitcoin? There is no backing asset of Bitcoin. If some coin has some asset pegged to it, like as a value of this will be related to US dollar, or value of this will be related to gold, value of gold. If you are pegging some asset value to some coin or some currencies or some cryptos, then that kind of coins are called stable coins. They have some backing asset to them. Now what is algorithmic stable coin? वो तो है सब ऐसे ही है. Basically, I told that what is one difficulty we are finding with this Bitcoin cryptocurrencies? There is no way to manipulate the money supply. So algorithmic Bitcoin means you can manipulate the algorithm itself to control the money supply, a number of coins to be released or number of coin already released. उधर भी control आप ले आ सकता है. That kind of coins are called. These are like a next level advancements of Bitcoin. Algorithmic stable coin. Only definition you need to know. Basic definition. बाकी सब चीज ज़्यादा technical जाने का जरूरत नहीं. Backed by some kind of assets. Some kind of assets, other currencies or some backing asset is there for stable coins. Now we have central bank digital currencies. What is CBDC?
It is blockchain and cryptography based coin.
What is the major defining factor? It is really issued by central bank. In India, it should be issued by. Did RBI issued any CBDCs? Which all are they? RBI issued two models now. Which are two models? E-rupee retail was there, E-rupee wholesale was also there. So both these pilot project has been released. Anybody tried? Some cities they have released this. So all these cryptocurrency basic all will apply. Only difference is instead of private, it should be issued by RBI or central bank. Go ahead. Now RBI released a concept note on cryptocurrencies or CBDCs. Concept note. ये quite interesting है. इसमें सब details लगा है. And RBI defines cryptocurrencies, CBDCs as what? They are legal tenders. कोई option आया ये fiat money है? Are they fiat money? Tell me CBDCs are the fiat money? Why not? CBDC कौन issue करता है?
वो लीगल वो नहीं है, वो
Physical
फिजिकल एसेट से बैक नहीं है।
assets से back नहीं है. You're still in that cycle. Physical asset कोई concept नहीं है अभी. That is outdated. No currency is pegged to any physical assets. Earlier dollar was pegged to gold and all. अभी कोई currency not pegged to, only promise is there. We'll give you exchange value of XYZ. No currency, वो concept छोड़ो mind से. CBDC is a legal tender. CBDC is a fiat money. It is issued by central bank. It is a legal tender. Exchangeable at par with existing currency. That means what? 1 rupee will be equal to 1 rupee note, 1 rupee already which you are having. Value will be same. Appear as liability side on this. That is all notes, coins, all these are liabilities of central bank. And e-rupee if they are issuing, they will also come in the same sections. It's a liability of the central bank. Go ahead. Why RBI is doing this e-rupee, CBDC? Exchangeable with physical assets. Written now. Exchangeable and at par with physical assets. Now, what is key motivations in bringing this CBDCs? RBI is saying they have this central bank का all advantages है. What advantages? Trust, safety, liquidity, settlement, finality, integrity, everything is there. Everything you enjoy with a actual money, piece of paper money, that you can enjoy with CBDC. That you cannot get in Bitcoin or any private money. Reduction in operational cost, like you don't have to print. Digital form में आ गया तो printing, distribution, replacement, all these costs are gone. Fostering financial inclusion, offline CBDCs are being introduced. Rural areas में internet नहीं, उधर भी CBDCs you can use. Resilient efficiency, innovations आएगा, new systems आएगा. Then issues of private cryptos. This is the big game they are trying to tackle. ये हम अभी कितना भी discuss किया, ये सब this will come under this. So this is what the reasons keyboard. This is just I want to put this because it is explicitly written in the concept note of RBI. Go ahead. What else we have? This is very interesting. We have CBDC different kind of design choices. One we told that retail and wholesale. What is the difference between these? Is maybe you don't need to go too much in detail, but you should know the conceptual differences. If any statement will come, micro detail questioning will not come because all these are like abstract theories or abstract design. Nothing is fully implemented. So question में आया तो भी conceptual level में ही आएगा, abstract level में ही आएगा. तो conceptually आपको understanding होना चाहिए ये सब क्या है. इसका अलावा micro detailing study is not required. Tell me what is wholesale and retail CBDC?
Wholesaler may be a very big quantity.
No. Retail means it will be issued to me. I can settle for your transaction. I can settle for merchant transaction. I can do whatever with it. Wholesale means it will be specifically for some segments. We will see this in next slide also. It will be for settling government securities transactions, GSEGs, or it will be for secondary markets functioning. So these kind of areas only you can apply this. So this kind of interbank settlements, etc. This will only go into this wholesale. Now direct, indirect, and hybrid. What is this? Tell me what is this? CBDC models, direct, indirect, and hybrid. ठीक है, doesn't require, saying it doesn't require interbank settlements. Okay, what is direct, indirect फिर भी? See, these are different models. These are different models of CBDCs that can be designed. In direct model, what happened? Who issues CBDC? That is central bank. RBI issues. Now there is data on CBDC. Who keeps this data? RBI keeps this data. And to whom this will be issued? General public. This is direct model. Data will be with RBI. XYZ will be directly issued to the public. Public can still come and use it. And what is indirect? Indirect means RBI is still issuing the authority, but RBI doesn't keep any data. RBI issues the CBDC number of XYZ to banks. Banks keep the data. Then it is banks' duty to distribute it to public. That is indirect model. Now, what is hybrid? RBI issues it to bank. It is responsibility of bank to give it to public, but data will be kept by both. Data will be kept by bank as well as RBI. Clear? Now give me what exactly our European retail is. Which model RBI adapted? You have read the news, European retail. December में आया था ना? Most of you are go through the news. Think something and tell me which model is RBI chosen. Direct, indirect or hybrid. What was the news on European retail?
Here RBI purchased Apple.
Hmm.
CBDC are she settled
ठीक है. How, which model RBI chosen?
direct has to keep a data.
Thing is, if you have read the news, RBI launched pilot e-retail project in 4 cities. Later it was expanded to 10 cities or so. 4 cities were Bangalore, Mumbai, Delhi, something like that. 4 cities and 10 banks or something, 4 banks. Some number of banks were also part of it. HDFC, ICICI, some major banks, SBI will be part of it. If banks are a part of it, then which model it is? It is purely indirect model RBI has chosen. All we are talking mostly is about European retail. Now tell me what is account based and token based.
Token you can only be used for specific purpose. Let's say you have coupon of to have to purchase a certain thing or to settle in a restaurant only.
No. You are saying it token can be only used for XYZ purposes. No, it is not the point. Any other suggestion? What is token based CBDC and account based CBDC? Our currency notes what it is. Is it token based or account based? Currency notes, if I hold 100 rupee, that is my 100 rupee. Whoever is holding it, he is considered to be the owner of this. That is token based system. We are not keeping a track of where the money XYZ is going, where the transaction is happening. At the end of the day, who is holding XYZ money? He is considered to be the owner of this. Account based means like bank accounts. You are keeping every bank's details, every account person's details, and if XYZ transferring X amount to this person, then you will have this balance sheet. इधर से इधर गया. ये सब detail data ledger form में या blockchain form में आप maintain कर सकते हैं. That is account based. Now European retail is token based. European retail here is indirect. Remunerated, non-remunerated, what does it mean? Suppose you are keeping 1 lakh in your savings account, at least some interest will be there paying by the bank. Remunerated means if you are keeping e-rupee, will RBI pay any interest? Yes or no? Don't be too confident it is non-remunerated. Tell me why? RBI doesn't pay any interest rate. Even if bank is involved, if you are keeping e-rupee, that is simply like you are keeping a note in your pocket. There will not be it will not become 101 rupee after 1 year or so. There is no interest rate paid by RBI. Why RBI choose this? What is risk or issues in making this e-rupee remunerated or keeping an interest rate for e-rupee also?
It is not the bank. If it had been with the bank, bank would have created more money out of it. It would have given it to loan to the people.
We have discussed so many functions of RBI. If you look how RBI functions, banks are like working arms of RBI. Now, if you bring in with e-rupee, so one way or the other, e-rupee is directly handling with central bank. People start directly handling with central bank. The whole concept of having an intermediary is getting lost. Now, if you pay interest also here, then what is the core purpose of having an intermediary? So this, if you implemented, even though it may be good, but disruption level it can cause is sometimes can lead to instabilities. So whatever e-rupee RBI launch, it is no interest model only. Degree of anonymity, I don't think there is much to say in this. How much you can track, how much details will be available with central bank, all this. This is one of the best thing of CBDC. What rupee you cannot say with whom it is. But if CBDC become popular or people start using instead of rupee CBDC, RBI exactly can track everything. Now wallet money, bank money they can track. But if somebody is physically keeping X amount of crores of rupees, RBI cannot do anything. Here that means complete data set RBI can have. Even though data is collected by bank, that data also RBI can have for XYZ regulation or other purposes. Clear defined design choices. All these are explicitly defined in the concept note of released by the RBI. And this is the selections that are done by the RBI. In e-rupee, all this we are talking about e-rupee retail. Go ahead. This is we already covered this e-rupee wholesale versus e-rupee retail. Wholesale means it is for specific transaction like government securities, interbank, capital market, etc. E-rupee retail means it is 4 cities, 4 banks are part of it. Digital token denomination as same currency. Issued through intermediaries, that is indirect, it is no interest rate will be there, it is P2P and P2M. P2P and P2M means peer to peer or peer to merchant. You can do for merchant transactions also. Go ahead. So already we covered the basic concept. What is difference between CBDC and mobile money? Mobile money means that wallets, Paytms, all these kind of wallets. What is the main difference? Interbank settlement happens here or inter-wallet settlement happens here. Some other intermediary is there. And it is a liability of commercial bank. Here it's a central bank, it's a totally new payment instrument. There will be so much KYC limitations. If token based is there will not be much KYC complications. Requires intermediary. Here means directly I am transferring to you without any other intermediary. Otherwise I need some bank, I need some payment system like NEFT, RTGS. Some payment system should be there. If I am relying on this mobile wallet money. CBDC means I am directly transferring to you. There is no need of any intermediary. Any statement, this is very easy, you should be able to pick. Bank is the intermediary. Yes. Bank should be there, payment system should also be there. NPCI what does is they control the payment system. Intermediary is the bank. Either bank से इधर लेके money इधर से लेके इधर डालना. That work is done by NPCI and other payment gateways, different. We will see in the next slide, coming slides. Go ahead. I think itna hi hai. Non-fungible tokens, what it is? We already discussed so many XYZ about it. Only understand, we have different JPG, MP3, all these formats. If this is XYZ form saved in blockchain technology, then we call it as non-fungible tokens. What is fungible, non-fungible means?
It can be
Here non-fungible means then क्या हो गया? It cannot be subdivided. It is having like a song is there means a complete a song it has value. Subdivided means it cannot have value. Used for storing physical assets also. Physical assets means this ownership documents or bank data. All this can also be stored in NFTs. Cannot be subdivided, values differ. In cryptocurrency, similar technologies, but values is same. Every cryptocurrency will have same value. Here every node will have different values. Go ahead. Technological aspects, I don't think we should focus much of this. Now we are shifting to payment system. चले? Payment and settlement system, what does it mean? अभी बोलना इधर से मनी लेके इधर डालना है. So what is the different ways you can do this? पहले people को only पैसे दे सकता था. There was no other options. अभी पैसा देने के लिए हजार ऑप्शंस है. मोबाइल ऐप है, ये इवन मोबाइल में इंटरनेट नहीं है उसके लिए भी सोल्यूशन है. आपको स्मार्टफोन नहीं है उसके लिए भी ऑप्शंस है. There are different ways you can transfer XYZ money, XYZ different applications and different तरीके से. So all this will be included under payment system. And which one, who regulates all this? All these are regulated under Payments and Settlement Act. Which year it is? 2007. All India's, this is generalized act which defines XYZ responsibilities of different organizations for payment systems. And NPCA is formed under this act. What is NPCA? National Payment Corporation of India. This organization, this is like what people say, uncelebrated hero. Why? We are celebrating ISRO. Rocket gaya, ISRO ko celebrate kar raha hai. UPI is like such great innovation that never happened in the world. It even took the digital market or digital XYZ economy in India advanced 5, 6, 7, 10 years. Then nobody is appreciating NPCA. It's not just UPI. A huge number of developments in last 10 years has been brought by NPCA. Has been a core part in India's all this digital revolution what we are seeing today. Now what is NPCA? It is an umbrella organization for operating retail payments and settlement systems. It controls not just UPI, it controls RuPay, everything. All the payment systems are controlled XYZ by NPCA. Who is the ownership shareholding of NPCA? It is by RBI is having shares, then Indian Bank Association is having shares. These Indian Bank Associations, when it started, there were 10 banks. Now across 56 banks, shares of NPCA is being distributed. All these banks have some say in the decisions taken by the NPCA. It is registered as a non-profit company under the Section 25 of Companies Act. What else? 10 promoter banks. 10 was when it was started. Now it has 56 promoter banks. No need to remember each one and bank. This you should take into. It is a non-profit company and it is registered under Companies Act. Something like that is there in the statement. You should take it as right. Then these are a long list of products that is being released by NPCA. And question usually comes from either one of these products, mostly. From RuPay to IMPS and SCHVP. What we will do is we roughly go through fastly all through basic features of all this. If anything recent development is there, then only you should know the peculiar features. Otherwise, at least itna janna hai, ye sab products of NPCA hai. This will come under India's payment and settlement system. Go ahead, what is RuPay? Let's start with this. What is different between RTGS and NEFT and IMPS? RTGS and NEFT, these are by products of RBI. IMPS is by NPCI. RTGS means it is real time, it is instant. And it should for bulk transaction, minimum 2 lakh should be there. Now after reforms 24/7 it is available and no transaction charges. पहले there was transaction charge, पहले it was only available on weekends, on this number of time gap it will be available. अभी ये सब हटाया 24/7 and no time span. Now this can be issued by banks as well as non-bank entities. What is Amazon Pay like? Non-bank entities, both these can do this NEFT RTGS. NEFT means same RBI launch up to 10 lakh smaller transactions. Now intervals of it will not be settled instantly. It will be settled in intervals of 30 minutes. It is available 24/7. There is no charges. And this 30 interval means what? What is this? What is purpose of this 30 minutes of intervals? Only every transaction will not be settled. Suppose there is ICICI Bank and there is SBI Bank. Suppose SBI may somebody transfer 1,000 rupees here. ICICI may somebody transfer 1,000 rupees here in 30 minutes. So net transaction क्या हुआ? Zero हुआ. तो RTGS will not and NEFT will not do any transaction. Just instruct इसका money इधर डाल दो. So this 30 minutes तक कितना हुआ वो सब कलेक्ट करके रखेगा and 30 minutes में प्रोसेस करेगा. So there is a time span gap in NEFT, but it is available 24/7. There is no charges and it can be provided by banks as well as non-bank entities. Now IMPS is totally new system that is being introduced by NPCI. It can have a limit up to 5 lakh, 1 rupee to 5 lakh. It is also instant 24/7 service available, but the main difference is IMPS will have carries a fee as well as GST charges. This you will have to pay extra. Banks, prepaid instruments, all these mobile wallets, all these can issue IMPS. Clear? Any statement, any confusing statement, you should be able to pick correct option out of this. Now tell me something basics about RuPay. What RuPay does? Global Card Payment Network of India. It is simply पहले ATM card और ये plastic money कौन release करता था? Master and Visa and all these are foreign companies. So if you are depending on them, you need to pay charges. You need to incur more charges. So India came up with its own system, that is RuPay. Here the advantage is you can have very less charges. There is no country transfer of your data, more data security features is there. All these are advantages of RuPay. And what it can do everything what a card does. Every features. Who can issue these RuPay cards? Public sector bank, private sector bank, any scheduled commercial bank, even regional rural bank, cooperative bank, all these banks can issue this RuPay card. Now tokenization, we'll discuss this later, but all these features which you are available in other cards are equally available in RuPay also. Tokenization feature is there, Bharat e-commerce payment gateway system is there. For doing this e-commerce online transaction, all these facilities are pre-packed in RuPay card. Go ahead. Micro details, we are not going into this. What is NACH? That is for conducting these online transactions, e-commerce transactions, all for these purposes. What is NACH? This is also product of NPCI, National Automated Clearing House. For what it does? Not interbank. National Automated Clearing House. What it does, there is huge number of settlements to be done. Suppose salaries is to be given, subsidies is to be given, Manrega salaries has to be given. That means lakhs of people has to be, this kind of XYZ can be feeded into NACH. So you can automate it and you can do XYZ revisions, process become easier. That is NACH. For carrying out this distribution of subsidies, dividends, interest, salary, pensions, etc. Okay, entire core banking services will be packed into this. Mechanism, not that much important. What is important is purpose of this, objective of this. What is NACH objective? You have bulk transaction, bulk nahi, number of transaction to be done is too huge. Like you have to pay the salaries of all people. Private company Infosys, more than lakh people का salary एक position से pay करना है. या मनरेगा पेमेंट करना है. So these kind of applications we developed in NACH. Now this not just having this bulk transaction, it will have our core banking solution features. That means you can design the salaries. अगर ये इतना काम किया इतना सैलरी दो, ये फीचर्स सब आप सेट करके रख सकता है. देन आप जस्ट वो डिजाइन फीचर्स फिक्स करो, देन इतना सैलरी डिस्पैच करो. So this kind of large dispatches centralized system we use NACH. Then Hero UPI. What UPI does? What UPI is? It's a payment gateway. Everything is payment gateway we are discussing. Power multiple bank account settlement in single mobile application. Peer-to-peer collect request. It can do so many things with just a mobile. What is basic features? How you should know? It functions 24/7. This all you would know. It functions all days, anytime, no leave is there. Single mobile application is using for all bank different bank accounts. You need only one application. For example, one Google Pay is required for all these banks applications. Single click two-factor authentication is there. What is this two-factor authentication? ठीक है. 2 levels of checking is security check will be done before. A beam, how much it have? Beam has three levels of authentication. Now pull and push means what? You can either demand paisa also. You can either send the money or you can ask the money also. 5,000 pay me. That is also can be done using this. Then customers are not required to enter all these card details, account details, IFSC. If somebody has to send money, only phone number is required. Yeah, only QR code is required. All these micro details of who to send the money, that is not required. Functions with QR code, hassles नहीं है, बाकी सब आपको पता है वही है. Donation सब जगह use होता है. इसमें से ज्यादा नहीं आ सकता, but these things are more chances of coming because these are new. ये क्या है? 1, 2, 3 pay for feature phones. Somebody who is not having smartphone, उसको भी UPI चाहिए. तो हाँ उससे भी हो जाएगा. If somebody is having normal phone, उसको भी UPI दे रहा है. That is 1, 2, 3 pay for. How do it work through phone call? Different modes है. It work through phone call, it work through missed call, even it work through this mobile connectivity. Only mobile connectivity is required. You will get the menu details. Press 1, press 2. उधर से जाके different modes you operate it and you will get the transaction done. Basic 2-3 things, different modes है. You can call it, you can miss call it, you can connect using the mobile. All these applications are feasible. And basic the objective it is providing the UPI facilities for feature phone also. What is UPI Lite? Now feature phone को हम दिया, हम somebody offline है, internet नहीं है, उसको भी UPI चाहिए, तो there is UPI Lite. ये confuse मत हो जाना. UPI Lite is for somebody who is having good phone or smartphone but not having internet. What he can do, he can download this app. Download किया ये भी नहीं, Play Store में है UPI Lite. So इसमें हाँ है, इसमें क्या कर सकता है? Low value transaction के लिए, like maximum per transaction is 200 rupees. एक आपका वैलेट में maximum 2000 rupees एक समय डाल सकता है. एक दिन का लिमिट है 4000 rupees. So ये लिमिट का अंदर आने का ट्रांजैक्शंस आप ऑफलाइन भी कंडक्ट कर सकता है. The data will be stored and reclaimed later. So this numbers याद रखो, objective याद रखो. This is for offline conduct of UPI. Go ahead. What is UPI One World? This is more interesting. अभी UPI से बहुत countries inspire हो रहे हैं. India is also signing deals with other countries to start using UPI. Singapore has started developing its own UPI. Some UPI similar, name I forgot, but some system Singapore has developed similar to UPI. They are getting inspired from this and they are developing in this. but that has nothing to give and take with UPI One World. Don't confuse it with all these developments going on. UPI One World is specifically for G20 summit हो रहा है इधर. G20 summit के लिए बहुत लोग इधर आएगा. ये लोग को इंडियन पेमेंट सिस्टम का टेस्ट देना है. इंडियन 20 दिन इधर होगा या 10 दिन इधर होगा. उस टाइम ये लोग को ट्रांजैक्शन करने के लिए यूपीआई यूज करना है. इसके लिए आप यूपीआई वन वर्ल्ड डाउनलोड करो. इसमें फॉरेन डॉलर से आप पैसा डाल सकता है. Then this you can use it throughout the country for this much of days. Then when you are giving back, if there is balance, you can make a dollar in the exchange, or you can make it transferred back into your XYZ source account. All this कर सकते हैं. This is especially for people who are coming for G20. Maybe in future it will be expanded further, but right now it is only for G20. Don't confuse it with the World One World and no other application it have right now. Go ahead. RBI allows credit card payment via UPI also. Pehle only debit card you can use. Now credit card also you can club it with this UPI. Then all your transaction you can do from the credit card, and it can be clubbed later into when credit month payment cycle come, you can pay this. पेटीएम ने सब लॉन्च किया है. हाँ, सब जगह यू कैन लिंक क्रेडिट कार्ड आल्सो विद दिस यूपीआई एप्स, गूगल पे, एवरीथिंग. कैश 99 क्या है? 123 पे हम फीचर फोन के लिए बोला. दैट इज फॉर फीचर पे यूपीआई फीचर्स. Ash 99 is very old one. If you need to do some transaction using a feature fan, इसके लिए you launch किया था Ash 99. This is not exactly connected to UPI, but objective तो similar है. Work in GSM handset, does not require data connectivity, round clock availability. Just press this, then using mobile connectivity you navigate through the screens and you will do the control. All these services are available in Ash 99. Not too much to learn, at least learn that this is not exactly related to UPI, but this is something which was launched long before in 2011-12 that time for having similar objectives to having with similar objectives. Go ahead. What is National Electronic Toll Collection, NETC, FASTag? FASTag all we discussed many times. RFID technology, what frequency ranges it is, all this covered in science and tech classes. So who done this? This is also a product of NPCI. Toll collection के लिए. This is a payment gateway especially for functioning toll collection. They will take the money from your FASTag automatically. Just scan it. Money will be collected for XYZ purposes. NFS, what it does? There was a prelims question, right? Banks are, ATMs are operated by? There was a prelims question, right? 2018, I guess. ATMs are operated by? NPCI was the answer. How NPCI? Which instrument? That is National Financial Switch. NFS connects all the ATMs network to throughout the country. Even NFS में कौन सा है? Even 50,000 ATMs. These ATMs include those ATMs also, like RRB ATM. Even NBFCs are started in some ATMs. So all these ATMs, every ATM in the country is connected by National Financial Switch. 99.99 कुछ है इसका efficiency level. So it doesn't make so much of mistakes. Makes the whole system very check truncation system. What it is? CTS is a old system. पहले क्या था? देखा है पुराना old movies if you see, check withdraw करना है क्या होता है process देखा है? It says 2 weeks होता है या 1 month लगता है, maximum 1 month, minimum 2 weeks बोलता है. 1980s कोई movie देखो, check withdraw करना है तो. So how it works? If you submit a check, it will go to the next office, which will be in Bombay. Then they will cross check it, they will finalize it, then money will come back. Whole this process will minimum take 2 weeks, maximum 1 month. So that was the whole process, so difficult. Now CTS क्या किया? You don't need to send the check, just take a photo and send. Then photo में QR code, QR नहीं barcode जैसे जिसका numbers होगा, इससे वो verify करके deal settle करेगा. And it becomes instant or 1 day काम. That is check transaction system. All these are products of NPCI itself. Now Aadhaar enabled payment system. What is it for? Don't confuse it with Beam or other something app. ये कौन करता है? Wait. Business correspondence. Business correspondent क्या होता है? Suppose in village, those people are not so educated to go and use these all facilities. So इसके लिए आप village correspondent लगाता है. Village correspondent will go then he will write down and take the money from this. He will do the transaction for them, for these common rural people. Now if a village XYZ correspondent is going, he can himself authenticate he is the exact person by giving all these data. Your name दे दो, Aadhaar number दे दो, fingerprint दे दो. Then he will operate your transaction. You can take 5,000 rupees from him. It will be deducted from your bank account. He will be having some machines to process all this. So for this application, it is Aadhaar enabled payment system, AEPS. These are list of different services that is available in AEPS. You can do cash deposit, cash withdrawal. There will be some limits. ऐसे नहीं बहुत ज़्यादा amount आप नहीं कर सकता correspondent कर रहा है few thousand rupees only you कर सकता but this all mini statement ले सकता है Aadhaar to other fund transfer authentication all these facilities are available under this eKYC fingerprint detection demo all this. Okay. Tokenization, I think we have some slide. We'll discuss that. Go ahead. E-rupee क्या है? Don't confuse this with the other e-rupee which we were discussing. This is totally different. RUPI is totally different. कोई relation नहीं है इसके बीच में. Only बोलने में similar लगता है, बाकी में कोई relation नहीं है. E-rupee is also a product of NPCI, but not just NPCI. Department of Financial Services, National Health Authority, Ministry of Health and Family Welfare, all these are partners of in making this e-rupee. And what is the purpose of e-rupee?
Given a token, let's say you have to conduct a tertiary services, then you can go to hospital.
Yes. This time you are correct. Suppose government is giving, suppose direct DBI, DBT, direct money transfer कर रहा है कुछ scheme का under 500 rupees दिया. How can government ensure that this 500 rupee क्यों दे रहा है? Suppose rice खरीदने के लिए दे रहा है. But कैसे ensure कर सकता है rice खरीदेगा? Mostly accounts are handled by men and we have alcoholic men so much. So mostly this money will go to this part also. Alcoholic or leisure consumption when there is no rice, malnutrition is going at home. So हमको ये ensure करना है बैलेंस है. हम किसके गवर्नमेंट को किस चीज के लिए एंड यूज क्या है उधर ही पैसा खर्चा हो रहा है. सो व्हाट यू डू इंस्टेड ऑफ गिविंग मनी यू गिव वाउचर. दिस वाउचर इज कॉल्ड e-rupee. Now what this voucher is, you with this voucher you go to shops which accept this voucher. When using this voucher you can only get this service. You cannot use this voucher for getting any other service. If this is for treatment, tertiary treatment, then it can be only used for that XYZ treatment. So this voucher system is e-rupee. This is also something linked with NPCI, but there are other partners also for this. Basic objective is end use आपको ensure करना है. Intended objective ही fulfill हो रहा है. Now card tokenization. What is card tokenization? Aadhaar में also ये masked Aadhaar. Anyone downloaded it? Masked Aadhaar, you can download it from that site. Difference is Aadhaar is 12 numbers you have 444. ऐसा होता है ना? 12 numbers in Aadhaar card you have. Masked Aadhaar बहुत जगह देना है. Aadhaar data is linked to everything. PAN card, account number. If somebody learn to misuse your Aadhaar data means he can get everything. So इसको कंट्रोल करने के लिए masked Aadhaar, if you government says that your UPSC says that masked Aadhaar is absolutely valid. ऐसे नहीं कि invalid है. बहुत जगह काम के लिए ये valid ही है. Exactly आपको ये नंबर चाहिए उधर जाके ये नहीं देना, then काम नहीं होगा. बट बाकी बहुत जगह आइडेंटिटी के लिए यूज कर रहे हैं. मास्क्ड आधार इज इक्वली वैलिड. मास्क्ड आधार में ये डाटा सब ब्लॉक्ड होगा. ओनली ये 4 डिजिट विल बी देयर. Only 4 digit will be visible. So you wherever you are using, they cannot get the complete information. Now tokenization क्या करता है? Tokenization क्या करता है? Same thing. If you are giving your credit card data, that credit card data will be linked to your bank account. That bank account will be linked to your financial details. So all this leak नहीं होना है. या Amazon को दे रहा है या कोई और payment system को दे रहा है. You need to ensure that your original data is not being misused. So इसके लिए you give it for masking. So that if 1, 2, 3 is your original number, they will give you a masked number 4, 5, 6. Now this masked number will not have any connection with your original data. Whichever hacker got this, he cannot come back to your original sources and get your original data from this masked XYZ number. So getting this process is called tokenization. इसमें question क्या आ सकता है? This is guy who want to mask his XYZ. ये mask कौन issue करता है? RBI नहीं करता ये. हाँ, whoever issue cards. एक मास्टर कार्ड है तो मास्टर कार्ड करता है, बैंक का कार्ड है बैंक करता है, ये इंटरमीडियरीज करता है ये मास्किंग ऑपरेशन. आरबीआई ओनली इंस्ट्रक्शन देता है मास्क करो एंड यू स्टार्टेड द मास्किंग प्रोसेस, ये इंडिविजुअल स्टार्ट करना है. ऑब्जेक्टिव इज आपका डाटा लीकेज नहीं होना है, आप बहुत जगह यूज करना है. दैट्स इट. So what all we have completed? We started with different forms of money. Fiat money. Fiat money is not something having base value. Don't say that. Don't keep that out of your mind. Fiat money has nothing to do with whether there is a value asset pegged to it. It is only that some sovereign authority is issuing it. So we have done different tender, legal tender, all this. After that, we have looked a little bit on RBI. We will come into detail in later classes. Next, then we done detail NPCA and payment and settlement system. That was the core part of our lecture. And whole this lecture was one way or the other very factual. Question इसमें ज़्यादा conceptual नहीं है, but later class we will have move into more kind of conceptual aspects. Next class we have on what? Next class we have on this money supply. Exactly dynamics of money supply, how RBI is controlling money supply, all these aspects related to it. After that we have banking issues. So we will cover RBI in detail. Today class RBI was covered in just a fraction of it. So that's all. I hope you enjoyed the class. Thank you so much. Very good morning. Welcome to the 12th session on current edge sessions. So what we have done in last class, we have done basics on RBI, different kinds of money. Then we have done a detailed class on payment and settlement system. Now in this class what we are doing is, mainly we are focusing on money supply. Money supply means it contains almost lot many things. What lot many things? From money multiplier, how money is being functioning in the economy, to how money is being generated, what banks are doing, what central bank is doing, what the main monetary functions of central bank. All these aspects plus some recent development that happened in this sector. All this will covering in this class. Go ahead. This will be more like a conceptual class compared to the last class what we have seen. So let's start with very interesting concept, that is money multiplier effect. What is this? What is it? Give me some fair, what you are thinking, what are your observations on this. If you are watching online, do comment in the comment section. बैंक में मनी रख रहे तो इंटरेस्ट मिल रहा है आपको, तो नहीं मनी इंक्रीज हो रहा है, दैट यू आर सेइंग. No, that is nothing to take away with, do or give with money multiplier. Give me any other suggestions. Based on yes. This is more feasible answer. So we have an economy. Suppose this is our economy. What RBI does? So if RBI need to increase the money supply, RBI will come here, then put some money into it. Suppose RBI put 100 rupees. कितना डाला RBI? 100 rupees. So it doesn't mean that money supply increased by 100. Money supply increased by many times. Maybe 1000 increase किया होगा, maybe 2000 increase किया होगा. So this process, like even if you infuse only X percentage of money, the total output or the total money supply will increase by many multiple times. This XYZ dynamics is called money multiplier. ये how कैसे होता है, ये बताओ कैसे होता है?
That he possesses. So he gets that money in the bank. Then bank can use it for its banking activity.
Yes. Somewhere it is correct. Suppose RBI put 100. RBI cannot give directly to the people. Don't bring CBDC here. Don't create problems. RBI given this 100 rupees to bank. What bank does? There will be some reserve. Suppose we start with here. RBI or this guy put 100 rupees in the bank. Then bank has some reserve. Reserve means what? SRR, CLR also. Whatever XYZ bank is getting, X amount of money bank should withhold with them or put it with RBI. Rest of the money only they can lend it for further purposes. So suppose 10 is our reserve limit. So 10 rupees this bank hold, 90 rupees it lend to the next person who is requiring the money. Now what he does, he may be doing some business. Our bank mainly give loan to those people who do the business. Now this person will send this money to salaries of different person, rent of his whatever land he is having, all these factors of income he will distribute the money. So this will go to the households. Now households, what will they? They will spend this and consume the products, and completing the whole cycle this will reach again the bank. All 90 rupees will reach the next bank. Now next bank ko 90 rupees mila as different kind of investment. They will also have to keep 10% reserve. Then 9 rupees will be kept as reserve. Then rest of the 81 rupees will be sent to the loan to the another person. So only 100 rupees is only injected into the system. 100 rupees है, 100 रुपये पहले लोन दिया, 90 रुपीस फिर लोन दे रहा है, 81 रुपीस फिर लोन दे रहा है, तो 100 लोन दिया. आप सोचेगा आपका अकाउंट में 100 है, देन 90 रुपीस फिर लोन लिया, इसका अकाउंट में भी 90 लिखा है ना, देन 81 लोन दे रहे हैं, देन इससे जा रहा है. 10 is there, it will go till 10 cycles, then it will enter, it becomes total 1000 will be total money generated. Now this total is the net increase in the money supply. This 100 is the net money that is injected into the system. Now money multiplier is net कितना create हुआ divided by कितना inject हुआ. Here it is 10. If 10% is the reserve ratio, then what you will get is 1 by reserve ratio is the money multiplier number you are getting. Here money multiplier number will be 10. Now give me what all factors which affect money multiplier. What all different factors which affect money multiplier. If suppose this R is not there, if banks, we are telling that banks don't keep any reserves, then what will happen? Happen with money multiplier. It will ideally become infinite. ये कभी रिजर्व ने नहीं करना है. 100 इधर आएगा, 100 इधर जाएगा, 100 इधर आएगा, ये प्रोसेस इंफिनिटी तक खत्म हो जाएगा. Now what is the issues with this system? Higher money multiplier is always good. We feel that money multiplier अच्छा हो रहा है, सही है, जा रहा है. Then हम infinite क्यों नहीं रखता, हम ये reserves क्यों रखता है?
Everybody wants money at the same time. Government bank may not having sufficient money at point of time.
Bank run, you are saying. Any other aspects you can think of?
The government does not still have money for building infrastructure.
Inflation. First, when economics started, what is this idea of economics? How it started? Who is the father of economics, you know? Adam Smith. What was the ideas propounded by Adam Smith? Everything is market world will adjust itself and balances itself. What does that mean? Government has no role in the market. Government should not come there and control the market. This was a system in late 1980s. Then when this collapsed, when this whole idea collapsed, during the 1930s, Great Depression happened. 35, Great Depression. Like thousands of banks even collapsed in India. So you can see the gravity of things that happened in whole Adam Smith open market system. Economic ideologies collapsed during that time. Then came the rise of Keynesian economics. All the economic, most of the economic system we see today is somewhere or other related to Keynesian economics. And what does the Keynesian economics says? Government should play a role to regulate the cheese. Otherwise, things will go out of the control and we will have catastrophic incidents like Great Depression of 1930s. Government should play a definitive role. And how should then started coming this? How should government play a role? That then started having some reserves. Why we are having these reserves? For controlling the money supply. I already told inflation, monetary supply, everything is controlled by controlling money supply. Now with controlling the reserves, you can control the money multiplier effect. That means even you are not touching this RBI economy में कुछ भी नहीं कर रहा है, but फिर भी money कुछ ज़्यादा नहीं डाल रहा है, कुछ ले नहीं रहा है, but फिर भी RBI just control this reserve ratio, they can increase or decrease the money supply. समझ रहा है? सर्कुलेशन मनी को टच नहीं करना, टच नहीं करने का जरूरत है नहीं है, बट दे कैन इवन इन्फ्लुएंस द मनी सप्लाई जस्ट बाय XYZ regulating the reserve ratios. Main objective is having a government control to have some control over these cash reserves or these money supply market. That is the whole purpose of having XYZ reserves. Now this reserves has taken different forms. That is CRR in most countries we will see. What are the other factors that affects money multiplier? Now suppose we are assuming that 90 rupees isko diya, he done to households will consume, then घूम के 90 rupees वापस आ गया. We are assuming this. Suppose ये बीच में किसी ऐसे आदमी का पास गया, कैसे आदमी का पास, हाँ, he is not having any bank account, ये क्या करेगा? छुपा के रखेगा गद्दे के नीचे या ऐसे कुछ जगह. देन क्या होगा? वो सिस्टम वापस में नहीं आएगा, वो बाकी लेंडिंग साइकिल में वो मनी नहीं होगा, तो बीच में से कुछ वेस्ट हो जाएगा या साइकिल में से हट जाएगा. So due to this effect, also the money multiplier will decrease. Now you can think too much on this. There is no end to this, which all factors will affect the money supply. But answer this question first. It's a PYQ question. Which year it was? 2000, I don't remember. Answer this question. Money multiplier in an economy increases with which one of the following? So हमको money multiplier को increase करना है. Increase in cash reserve ratio means you have to keep more money. हम 10% लिया था, 50% रख रहे तो number of cycles reduce हो जाएगा. Multiplier will not increase, multiplier will decrease. Increase in SLR means same effect. Theoretically SLR and CLR are doing, at least for in this perspective, doing the same thing. So here also money XYZ will decrease. Money multiplier will decrease. Increasing banking habit of the people. So वो आदमी था, वो छुपा के रखता था, वो आदमी इधर नहीं है, सबको बैंक अकाउंट है, जनधन है, सबको वो है, तो वो आदमी इसको हटाया, तो all this money are coming back into the bank. So this will increase the money supply. Increase in population, इससे क्या मतलब है? इससे मनी सप्लाई बढ़ गया तो इंडिया बहुत हाई में पहुंचा था. पॉपुलेशन हमारा तो बढ़ के ही जा रहा है 1950 से. इसका ज़्यादा कुछ अब कंक्लूसिवली नहीं बोल सकता मनी सप्लाई इधर जाएगा उधर जाएगा, बट दीज थ्री आर वेरी कंक्लूसिव, सो आंसर हियर इज सी इटसेल्फ. सो बेसिक फीचर से क्या रिलेशन है ये क्लियर होना चाहिए. बाकी स्पेसिफिकली आप रिसर्च करने जाए, मनी सप्लाई इज डिपेंडिंग ऑन एवरीथिंग, मनी मल्टीप्लायर इज डिपेंडेंट ऑन एवरीथिंग, यू कैन ओवरथिंक एंड वेस्ट वन फुल डे ऑन दिस, डोंट डू दैट. बेसिक फीचर्स को कैसे डिफाइन करता है, डिफाइन या बेसिक एलिमेंट्स से कैसे रिलेटेड है वो सीखो. थैंक यू. वर्किंग या गुड. सो मनी मल्टीप्लायर है क्या हम देख लिया. नाउ इससे रिलेटेड है दिस कंसेप्ट ऑफ M1, M2, M3 एंड M4. ठीक है, एग्जैक्टली टू मच इन द डिटेल्स में नहीं जा रहा है. इफ यू वांट यू कैन रीड दिस. M1 is that money which we say we are injecting into the system. RBI inject into the system. MI में क्या है? Circulate currency notes, currency in circulation है. Then demand deposits of commercial banks है. Now M3 is our India में total money supply कैसे calculate होता है? M3 से calculate होता है. This is India's money supply calculation. Now M3 में क्या है? M1 plus net time deposits with the banks. करेंसी नोट्स और कॉइन से डिमांड डिपॉजिट है, टर्म डिपॉजिट, सब डिपॉजिट बैंक में कितना डिपॉजिट आ गया ये सब मिला के हमको मिलेगा M3. नाउ M3 by M1 we will get money multiplier. Okay, M3 by M1. M4 is much broader money, but we are not, India में M3 is considered as the क्या है, मनी सप्लाई कोएफिशिएंट. दैट्स व्हाई सेइंग इंडिया में M3 इज कंसिडर्ड एज मनी सप्लाई कोएफिशिएंट और मनी सप्लाई वेरिएबल वी आर टेकिंग. RBI website you go check the money supply. This is a money supply in India. They are mentioning it as M3 is being referred to as money supply. So we are taking M3 as by M1 as the money multiplier limit. न्यूमेरिकल नहीं आएगा, ज्यादा मत सोचना. अभी कितना सीखा है, that is the base of all this. Now 1 by reserve ratio, we already discussed this. Now US has a money multiplier of 3, India has money multiplier of 5.1. This has been increasing over the years. In 1960s it was 2, 1990s it became 3 point something. Now it becomes 5.8 or 5.5 something. European zone is having much higher XYZ. Go ahead. Too much of money supply. Now tell me what is monetary policy. We already discussed this, right? What is monetary policy? Some quantitative tools use करके you will try to attain the control the money supply and try to attain what? Macroeconomic fundamentals. India में ये macroeconomic fundamentals क्या है? Inflation और price stability and growth. ये दोनों क्यों select किया? We discussed in the last class. Because these are opposing. If you have higher inflation, you are supposed to get higher growth. If you too much control inflation, if you keep only inflation, problem क्या आएगा? You will over constrain the inflation, then that will lead to stagnation and lesser growth. Now if only growth रखा तो क्या होगा? Money supply बढ़ के increase करके जाओ, then आपको growth ज़्यादा मिलेगा. But problem is inflation will also come into the picture. Like Apple का story बोला. तो if you only look at growth, growth तो हो रहा है, but कितना products बढ़ रहा है उसका corresponding only money बढ़ना है. उसका ज़्यादा money आप system में डाल के जग गया, then inflation will come and it will affect the macroeconomic stability. That's why we are India में objective inflation considering the growth, that is the managing inflation considering the growth, that is the objective of monetary policy. Go ahead. Fiscal policy क्या है? Just to an understanding basic that we are asking. बताओ. yes. Monetary policy सेंट्रल बैंक करता है, मनी सप्लाई कंट्रोल करके मैक्रो इकोनॉमिक प्रूडेंशियल्स आपको मेंटेन करना है. फिजिकल सप्लाई इज नथिंग रिलेटेड टू दिस और फिजिकल पॉलिसी ओनली मींस गवर्नमेंट टैक्स डिसाइड करता है, इतना टैक्स रखता है, देन वो टैक्स कलेक्ट करता है, देन कितना वो टैक्स कैसे खर्चा करना है ये डिसाइड करता है. दिस प्रोसेस इज कॉल्ड fiscal policy. Government ka expenditure game is fiscal, while money supply and central bank will come into picture in monetary policy. All these differences you can have a look here. I'm not going too much into this. Go ahead. Now, this is the change which I have already discussed too much of times. Like, we need inflation plus growth. And after 2016, we have given a specific target to the RBI. What is the specific target? That is 4% plus or minus 2%. Minimum 2% you can go and maximum 6% you can go. If the inflation is outside this for 2 quarters, then RBI has to give XYZ explanation and what measures want to be taken to bring the inflation within the limits. All this will have to be done. And this target is constant or variable? Not constant, it is set for 5 years. In 2000 it was set for till 2021. Then in 2021 government again extended it till 2026. Okay. Now who decides this? That is decided by Monetary Policy Committee. Monetary Policy Committee में कौन hai? I think we have. Target is decided by Government of India. How to achieve this target is the function of Central Bank Monetary Policy Committee. Monetary Policy Committee में 6 लोग हैं. 6 लोग से एक कौन है? RBI Governor हो गया. He is the chairperson of this XYZ committee. Second, 2 people are from where it went? Yeah. One person is RBI Governor. He is the ex officio chairperson of the XYZ committee. Now, who are the 2 other members? They are RBI deputy governors who are associated with these functions, monetary policy functions, and a central board member will be, deputy governors of RBI will be 2 other members in monetary policy committee. 3 others are, these are independent members. Person of the economic knowledge, professors will be there. These are independent members. These people, how they are selected? These people are appointed by Government of India. These 6 people constitute our Monetary Policy Committee. And for how many years, what is the term of these members? They are ex officio members. Till what time he is RBI Governor, he is ex officio member of this. When he is not RBI Governor, he will be out of this. These 4 members have a term of maximum 4 years or until the XYZ government order says. Some orders say 2 years, some orders 3 years. So government order can specifically specify the term of these members. Otherwise, it is 4 years. Now, what is other conditions? MPC should meet at least 4 times a year. It is only at least. Nowadays, you can see every 2 months they were meeting in the pandemic times, during after pandemic, post pandemic times and all. And minimum quorum is 4 members. Quorum is important because voting, every decision is taken by voting. And in voting also, every member should state, this is my, like repo rate should increase because of this reason. Repo rate, other members should, if it is not voting against it, repo rate should decrease because these are the reasons. All these reasons will be published after 14 days of this XYZ meeting. Okay. Now, what are the different instruments? Here, just look at at least the name of the instruments. We will have individual comparison in the later part of this lecture. So, what is repo rate? What is repo rate? Give me first. RBI lends to bank. Will they take collateral? By taking collateral as government securities as collateral. It is a short term. Overnight or fortnight it can happen. 14 days or overnight, 1 day also it can happen. Short term loans, repo rate it is. Now what is SDF? What is SDF? It is recently introduced. What is the purpose of this? What is reverse repo? if there is excess liquidity with the banking system, then what banks will do? उसके पास कितना भी पैसा है वो आरबीआई को दे देगा. Then RBI has to give back what? Collateral as government securities as collateral back to the bank. Then there will be agreement later date में repurchase करेगा. That is reverse repo and reverse repo. So if excess liquidity is with the bank, bank will park the money with RBI. Now then RBI has to give collateral. Now what if RBI doesn't have that much of collateral? During pandemic it happens. During pandemic government was reducing interest rate like nothing. So क्या हो गया, बैंक का सिस्टम, बैंक में बहुत लिक्विडिटी है because bank was not able to distribute the money to the public. Nobody is taking the loan, nobody is starting the businesses. So bank liquidity was too high. And RBI को इतना collateral नहीं था, RBI को इतना collateral देना नहीं है. तो what RBI does? We will come up with something else. इसके this is reverse repo itself, but without collaterals. What is SDF? Reverse repo without collaterals. Now what is MSF? Marginal standing. Not beyond SLR. Here repo rate, reverse repo rate, you understand. What is SLR? 18% is the current SLR rate. So 18% of net deposits you have to keep in liquid assets. लिक्विड एसेट्स में क्या सब आएगा? गोल्ड आएगा, करेंसी, कैश आएगा, गवर्नमेंट सिक्योरिटीज आएगा, ये सब आएगा, स्टेट डेवलपमेंट लोन्स, ये सब आएगा. सो इफ यू वांट मोर मनी फ्रॉम आरबीआई, रेपो रेट से आप कितना भी आपका गवर्नमेंट सिक्योरिटीज है ये सब कोलैटरल देके पैसा ले लिया आरबीआई से. इफ बैंक नीड मोर मनी, कोलैटरल नहीं है देने के लिए, देन बैंक क्या करेगा? देयर इज सम कोलैटरल हियर एज गवर्नमेंट सिक्योरिटीज विद पार्ट ऑफ SLR. नाउ ये SLR में क्या है, ये प्लेज करके आरबीआई से पैसा ले लेगा. समझ लिया? विच इज SLR government securities which are part of SLR quota, they pledge with this RBI and take the money from RBI. So MSF will be greater than repo rate. Repo rate plus some higher percent will have to be given as because the SLR quota is being deposited in the as collateral. Now liquidity adjustment facility, all these XYZ examples are one way or the other doing to do this liquidity adjustment itself. What is this is very important. Liquidity adjustment corridor or LF facility corridor, LF corridor. What is it? Yes, earlier it was MSF and reverse repo rate. Now what happened is after introducing standing deposit facility, it became MSF and standing deposit facility. Now SDF and reverse repo, if you look at this, they are doing exactly same thing. They are doing exactly same thing. Excess liquidity बैंक से absorb करना है. Now here बैंक को collateral मिलेगा, इधर collateral नहीं मिलेगा. Now if something like this is there, if you are giving two same options to the banks, ये दोनों एक साथ काम नहीं कर सकता. If you are giving two options to the bank, two exactly same है. Exactly आपको क्या चाहिए वो दे देगा. Government what banks will do, इसका benefit किधर है, सब उधर डालेगा, इधर कोई नहीं डालेगा. तो आरबीआई क्या किया इसको एडजस्ट करने के लिए? पहले रिवर्स रिपो वाज अवेलेबल फॉर एवरी बैंक्स फॉर एनी अमाउंट. अभी दिस इज ओनली डिस्क्रिमिनेटरी फंक्शन ऑफ और डिस्क्रिशनरी फंक्शन ऑफ आरबीआई. नाउ रिवर्स रिपो व्हेन आरबीआई अलाउज बैंक्स कैन अवेल दिस, बट आरबीआई नहीं अलाउज मींस बैंक्स विल अवेल only avail SDF facility is the available option with banks. So this is being promoted as major policy tool than reverse repo. Now फिर भी आपको बैंक को SDF नहीं चाहिए, reverse repo ही जाना है. There is one more other alternative, that is बताओ, variable reverse repo. Variable reverse repo में कितना था उसका रेट थोड़ा ज्यादा करके दे देगा. So ये this is also discretionary function of RBI. ये भी उसका रेट इंक्रीज करेगा, उसका लिमिट रखेगा, उसका लिमिट के ऊपर आप नहीं कर सकता. इसका लिमिट के ऊपर आपको लिक्विडिटी आरबीआई के पास रखना है. इफ बैंक्स हैज टू कीप लिक्विडिटी विद द आरबीआई, then they have to go with SDF. So SDF is now decided as the floor rate of the policy. That's why liquidity corridor is, LAF corridor is MSF minus SDF. This is the new LAF corridor that is being, previously this was reverse repo rate.
Does SDF comes with repurchase obligation? With RBI?
SDI comes with
SDF.
this one. Everything has obligation, repurchase obligations. Go ahead. Not spending too much here. What is bank rate? Main liquidity management tool. This is like different kind of auctions, different term of auctions, fine tuning operations, some minute changes. Not very important. Reverse repo we already discussed.
The bank rate is the minimum rate which it gives loan.
Bank rate, Reserve Bank is ready to buy discounted bills, exchange of commercial papers. Suppose we have seen this excess liquidity in the bank. If bank want to take the money, this bank rate में money लेता है RBI से. Then bank rate is something that can be done without collaterals also. With collateral means it comes under repo reverse repo agreement. If it is done without collaterals, that is being done under bank rate. You don't need to invest too much time on this also. Why? Now bank rate is not, government is not interested in bank rate. That is also being discouraged. Instead of bank rate, what it is? Bank rate now is kept as same as MSF. Government is promoting MSF as the key policy deciding tool. What other things you have to discuss? Cash, CRR, SLR. This we will discuss in detail. Open market operations, and this also we will discuss. One thing I need to clarify here. Here everything we are discussing, SLR, CRR, reverse repo, all these operations में क्या हो रहा है? बैंक RBI को पैसा दे रहा है या RBI बैंक को पैसा दे रहा है, collateral ले रहा है, collateral नहीं ले रहा है, यही game है. What is difference between open market operations and whatever we are seeing right now? What is OMOS? OMOS क्या है? तो है ये वही डिस्कस कर रहा है. Monetary policy, everything is monetary policy tools we are discussing right now. Exactly OMOS क्या करता क्या है? तो you are engineering student, that's you're getting this kind of answers. Now go ahead. What is OMOS? Government securities direct market में sell कर रहा है. Till now what we were talking about, liquidity with the bank, और बैंक के पास liquidity नहीं है तो RBI से पैसे लेके जाएगा repo rate पे या MSF पे. अगर बैंक के पास excess liquidity है तो SDF से पैसा वापस रखेगा RBI के पास. All this we are tricky. Liquidity of किसका बात कर रहे हैं? Liquidity of banking system. ना ये बैंकिंग सिस्टम का हटाओ, मार्केट में आओ. हम पहले ड्रॉ किया था ना, मार्केट में इतना रुपये दिया, वो मार्केट में लिक्विडिटी नहीं है या लिक्विडिटी कम है, इंक्रीज करना है. उसमें आरबीआई को 100 रुपये इन्फ्यूज करना है. वो 100 रुपये कैसे इन्फ्यूज करता है? दैट इज वन ऑपरेशन इज ओपन मार्केट ऑपरेशंस. ये डायरेक्ट मार्केट का लिक्विडिटी का बात हो रहा है. इधर डायरेक्टली आके यू विल सेल द गवर्नमेंट सिक्योरिटीज एंड control the money supply within the economy. Go ahead. We'll see all this in much more detail. What is CRR and SLR? CRR का basic we already discussed, this Keynesian economics and all this. So CRR का basic objective क्या है? Yeah, objective क्या है? Money supply control के लिए एक tool होना चाहिए. Even though this is a very effective tool, हम ये tool use नहीं करता. Which is India's policy tool? That is money control करने के लिए. Repo rate is the policy tool. And repo rate का सभी related है. CRR ऑब्जेक्टिव क्या है? मनी सप्लाई कंट्रोल के लिए गवर्नमेंट के पास एक टूल होना चाहिए, दैट इज द मेन ऑब्जेक्टिव ऑफ सीआरआर. एंड व्हाट इज इट? इट मस्ट बी बैंक्स मस्ट कीप दिस विद आरबीआई. इसको इंटरेस्ट कितना मिलेगा? No interest will be given to them for keeping this amount with RBI. Under RBI Act, it is mandated there should be some CRR, and no profit is earned. It can go between 0 to 100%. 0% means infinite money supply will be there. 100% means there will not be any money supply. RBI कितना infuse कर रहे उतना money उधर रहेगा. Fortnight basis, fortnight means 14 days basis में calculate होगा. 4.5% is the current rate of CRR. COVID times it came down to कितना? 3.15% कुछ आया था, बहुत नीचे तक गया था, देन अभी फिर वापस आ रहा है. ओके. SDR SLR का क्या फंक्शन है? स्टैट्यूटरी लिक्विडिटी रेशियो. व्हाट इज फंक्शन ऑफ SLR? हियर हम बोला मनी सप्लाई कंट्रोल करना है. हियर इज द ऑब्जेक्टिव बैंक रन. इधर हम देख रहे बैंक का स्टेबिलिटी. SLR ज्यादा एवरी कंट्री में नहीं है. देयर आर कंट्रीज विदाउट SLR आल्सो, बट CRR is more like a universal. This is there in every country. SLR is not there with every country. And SLR का objective क्या है? You have to keep 18% है, अभी 18% है, means 18% of your deposits in liquid assets. Liquid asset means cash, gold, government securities, treasury bills, etc. This is mandated under Banking Regulation Act 1949. They will earn profit. If government securities में रख रहे हैं, profit तो मिलेगा. Cannot be more than 18%, not 18%. Cannot be more than 40%. Here CRR can go between 0 to 100%. There is no mandated limit on this. But SLR cannot go more than 40%. There is a limit for this. Is also conducted in fortnight basis. Current rate is 18%. Go ahead. Now we have this all policy tools that is being used right now. Repo rate basics तो हम बता दिया. RBI lend to banks. ये कब फॉर्म आएगा? When banks doesn't have that much of liquidity. Banks need money, they will come with the collateral. They give the collateral to RBI, take the money. That is repo. Short term it is higher than predetermined. Current rate is 6.5%. This is the major policy tool. बाकी सब rate इससे related है. Every other rate will be one way or the other linked to repo rate. Reverse repo में क्या आएगा? When there is excess liquidity with the banks. Excess liquidity है तो क्या करेगा? RBI को पैसा दे देगा, collateral वापस लेके वापस जाएगा. And repurchase agreement means एक डेट रखेगा, उस डेट में आके वापस ले लेगा ये. So this is like a secured loans. कोई भी इधर उधर लोन दे रहा है, ले secured loan, वापस आके ले लेगा ये इतना दिन बाद. बाकी all similar है. Only difference is this is when banks don't have liquidity, this is where bank have excess liquidity. Then usage at discretion of RBI अभी किया है, मैं अभी explain किया. Now it will be repo rate minus X% will be something less than repo rate. 3.35% is the current rate of reverse repo rate. Now come to third one, that is MSF. MSF कब काम आता है? SLR का गवर्नमेंट सिक्योरिटीज आप यूज करके आरबीआई से पैसा ले रहे हैं. सो एसएलआर प्लेस कर रहे मीन समथिंग मैंडेटेड बाय अनदर लॉ, यू आर यूजिंग इट फॉर अदर पर्पसेस. सो इसको आपको ज्यादा इंटरेस्ट देना पड़ेगा. सो 6.7 रिपो रेट का बहुत ज्यादा है इधर. अगर आप गवर्नमेंट सिक्योरिटीज है आप इतना रेट में कम हो जाएगा, बट इधर अगर एसएलआर का क्वाटा से आप गवर्नमेंट सिक्योरिटीज रख रहे हैं, यू हैव टू गिव लिटिल बिट मोर अमाउंट टू दिस. सो करंट रेट इज 6.75%. Now we have new facility, that is standing deposit facility. ये भी कब है? When banks has more liquidity. This is replacement of reverse repo rate. Bank has more liquidity, then what will they do? They give the money into this RBI, but ये collateral लेके नहीं जाएगा. That's the only difference it is having. It is now decided as the floor of new corridor, and 6.25 is the rate currently. So what is our LF corridor now? बताओ. LF कॉरिडोर क्या था? भूल गए इतना जल्दी? MSF माइनस SDF. तो कितना आएगा? MSF कितना है? 6.75% माइनस 6.25% आएगा. 0.5% आएगा. वो तो होगा. कोलेटरल नहीं दे रहे तो पैसा देना पड़ेगा. इसमें डिबेट मत करो. दिस इज समथिंग. कौन कौन? आरबीआई. बैंक हैज कोलेटरल देन.
So what can bank do with it? It can only issue it as a SLR. That is it. Or bank will get
No, I am not understanding your question.
using reverse repo rate of
एसडीएफ कब यूज करेगा? Banks has excess liquidity. Pandemic situation सोचो. Bank has so much money, there is nobody to take this money. So if you keep that money, what will happen? They will not gain no interest rate. Then keep this as SDF, no collateral, no कुछ भी दो, SDF पे रखो. Then they will get this interest rate at least. तो बैंक को ज़्यादा lose नहीं होगा. Got the basic idea? Liquidity का perspective से सोचो, ज़्यादा confusion नहीं होगा. SDF and reverse repo comes when banks have a higher liquidity. SDF pandemic में भी importance आया था, तो it's bad. That is a time when bank has higher liquidity. And this reverse repo rate and MSF will come when normal times या banks have lower liquidity. Banks को liquidity absorb करना है RBI से, then ये use करेगा. And MSF is like a penalties thing. Like आपके पास government security नहीं है, फिर भी पैसा चाहिए. So आप इधर से लेके जाओ. There is a limit also, 2% of your net deposit, something like that. That much only you cannot quote this. SLR quota से सब लेके आप MSF नहीं ले सकता. 2% limit भी है इसमें. Okay. Now this is what we discussed already. Now what is the trend that we are seeing in this repo rate? During pandemic, what happened? To increase the money supply, repo rate just fall down like anything. After that, you can see this is zone. After that, it has been remaining at a low rate for a long time. Then now it started jumping and now it reaches 6.5% rate. All other trend, everything will be having the following the same trend only. Now we have so much relation with this, with US Fed, what is US doing. All this we are not discussing here. All this international development we will discuss in the external sector. Okay. So what else? Open market operations. इसमें हम just ये क्या है बोला. All this repo, reverse repo, MSF, SDF, all this किधर function आ रहा है? Bank liquidity का बात कर रहे हैं. Now we are speaking about liquidity in the open market or liquidity in the economy. Now economy में आपको changes करना है directly. Then they use this open market operations. और RBI directly government securities बेचता है. And इसका rate क्या होगा? Repo rate क्या rate होगा इसमें? This is through auctioning e-Kuber. So depending on auction क्या rate आ रहा है, that will be the rate decided for open market operations. बाकी concept पहले बताया वही है. Go ahead. Now what are government securities? Government securities, we are using it in a number of types. What exactly are they? These are securities issued by government to raise capital. They will give the papers that government will give on this day this much money. This paper is called government security. Government, why this is issuing? For capital, raising the capital from the market. Now government securities mainly three types है: treasury bills, dated securities and bonds. क्या difference है इसमें? Treasury bills means it is issued for less than 1 year. Maturity period is less than 1 year. And this may be three types. It can be of 91 days, 182 days and 364 days. To manage short-term liquidity, obviously, issued at a discounted rate and redeemed at face value. What does that mean? 100 rupees का है तो आज 90 rupees में आप लेके जाओ. After 1 year, you come with the paper, you will get 100 rupees. 100 rupees is called the face value. This is called discounted rate. ये 10 rupees है, that is the discounted price or discount that is provided on this. What else? Who issues this treasury bills? Which government? State government या central government? पहले ये both कर रहा था. After that, state government has been discouraged or banned from using this. Now only central government will issue these treasury bills. But other two, dated securities and bonds can be issued by both of these. States also as well as center. Now what is cash management bills? These are also one kind of treasury bills, but only difference is ये मेच्योरिटी डेट विल बी लेस देन 91 days. वेरी शॉर्ट पीरियड मेच्योरिटी आपको पैसा राइज करना है. Less than 91 days maturity period will be there. Baki all same, it will be issued by that government, central government only. Very small period liquidity adjustment के लिए you will CMBs, cash management bills. Yes. Dated government securities. Dated government securities means you have a maturity period between 1 year to 10 years. मोस्टली ये पीरियड का अंतर होता है. ये इसको कूपन रेट होता है. That means you will take bond for 100 rupees. After that, after maturity you come, you will get 110 rupees. This 10 is called coupon rate. So every year you maybe get 10 rupees. It may be like this also, like every 6 months you will get 5 rupees. That different term it can have. And fixed and floating means it may be fixed rate or it may be floating. After 2 years it may change, after 1 year it may change depending on market condition. It is issued by both government of India as well as state governments also. No, 10 is the coupon rate. Coupon is that interest you are getting. That is called the coupon rate. That invariable it may change with time. In fixed remains it will remains fixed for all. State development bonds means only difference is it is issued by state governments mostly. Now bonds may be treasury inflation protected securities. Tips. What is the difference? हम coupon का बात किया ना. This coupon will be equal to CPI. Then that is called this tips. आपको इन्फ्लेशन प्रोटेक्शन दे रहे हैं, दैट्स ओनली 100 रुपीज दे रहे हैं. इन्फ्लेशन ज्यादा हो रहा है तो आपको ज्यादा पैसा देगा. इन्फ्लेशन नहीं हो रहा है आपको उतना कम देगा. दैट इज द कूपन रेट इज पेग टू सीपीआई. दैट इज कॉल्ड टिप्स. व्हाट एल्स? कैपिटल इंडेक्स बॉन्ड्स. इसमें क्या है? इंटरेस्ट रेट विल बी पेग टू डब्ल्यूपीआई प्लस सम हायर परसेंट. दैट बॉन्ड्स इज कॉल्ड कैपिटल इंडेक्स्ड बॉन्ड्स. मूव हेड. I'm spending too much time. रिटेल डायरेक्ट स्कीम क्या है बताओ? अभी सब हम गवर्नमेंट सिक्योरिटीज ओपन में आरबीआई के भेजेगा, ई-क्यूबर में खरीदेगा, ऑक्शन करेगा, ये सब बोला. ये सब कौन खरीदेगा? पहले ऐसे था ओनली दिस डीलर्स कैन इंटरमीडियरीज लाइक बैंक्स या अदर फाइनेंशियल इंटरमीडियरीज कैन ओनली बाय दिस. अभी क्या हो गया? Now it's shifted to even retailers can also buy this. So retailers can go there and make a gilt account. What is gilt account? GSEC, government securities keep करने के लिए electronic account, that is called gilt account. Example means? Gilt account means? हाँ. नहीं ऐसे कुछ नहीं है. This account like demat account. What is demat account? You here you can do this for government securities. RBI directly with the RBI we have this kind of accounts you make. Then you can also retailers can also do this in real time. They can also participate in auction. Minimum price is only 10,000. If you want to try this, you can also try this. This is also within limits. So this is all the process. You can go through this if you want. Okay. Go ahead. What is bond yield?
I bought a bond of 100 rupees. Now after 2 days, the bond price is 120. Then 20 rupees will be my bond yield that I have earned.
बेसिकली ये बॉन्ड से कितना पैसा आपको ज्यादा मिल रहा है वो ये बॉन्ड यील्ड. बॉन्ड से कितना प्रॉफिट मिल रहा है दैट इज बॉन्ड यील्ड. कुछ भी बॉन्ड है, कुछ भी ट्रेजरी बिल है, व्हाटएवर डेज मैच्योरिटी होने की जरूरत नहीं है. कभी भी आपको बेचने में कितना आपको प्रॉफिट मिलेगा, दैट प्रॉफिट वैल्यू इज कॉल्ड एज बॉन्ड यील्ड. एनुअल रेट ऑफ रिटर्न ऑन बॉन्ड एक्सप्रेस्ड इन परसेंटेज ऑफ बॉन्ड होल्डर्स इन्वेस्टेड कैपिटल, दैट इज कॉल्ड. हम 90 रुपीज में डिस्काउंटेड बॉन्ड लिया, एक साल बाद 100 रुपीज आ गया, देन इसका बॉन्ड यील्ड है 10 rupees. Now bond yield and bond price का क्या relation है? This we will need to discuss little bit in detail. What is the relation between bond yield and bond price? 90 rupees में discounted में आप bond लिया. After 1 year you come with me, you will get 100 rupees. So इधर yield is 10 rupees. All clear इधर तक? Now 19 rupees में मैं bond लिया, then मुझे 3 महीना बाद याद आया, I don't want to hold this bond or I need some requirement of money. So I want to sell this bond. So मैं क्या करेगा? I'll go to secondary market. I'll try to sell this bond to someone else. Now if someone else to buy this bond, ये 90 rupees में नहीं लेगा. कितना में लेगा? 89 में 85 में लेगा. So suppose ये 85 में लिया. So he also after 9 months he will get also 100 rupees by submitting this bond. So his profit is 15 rupees. So bond price को क्या हुआ इधर? इधर bond price 90 था, इधर bond price 85 हो गया. Bond price कम हो गया means bond yield ज़्यादा हो गया. So these two are inversely related to each other. Bond price कितना कम होके जा रहा है उतना bond yield आपको ज़्यादा होके जाएगा. Clear? Absolutely clear? Go ahead. ये सब next पूरा ये इसका related है. इधर कुछ भी doubt confusion है then सब फंस जाएगा. Then what is yield curve? Time नहीं, maturity है ये. Time बोल सकता है, but ideally it is maturity of the bond maturities. Now if short term I am keeping the bond, I will get lower interest. If you are taking my money for 1 week, I will ask for less number of interest. But if you are taking my 1 lakh for 25 years, then also I need higher rate of return. Then only I will invest for 25 years. Then नहीं तो क्यों करना? So normally yield curve यही होता है. With increasing maturity, you have to give more interest rate or more bond yield देना चाहिए. This is normal yield curve. By increasing maturity, you have to increase the bond yield. Then only people will invest in long-term bonds. Clear? Now, due to some XYZ reasons, we'll discuss this after later operation twist. Now, what we have learned is bond yield है, maturity है. This is the usual structure. Now, what happened during pandemic? There is so much excess of liquidity with the banks. Nobody is taking the loans. In GDP fall हो रहा है, क्यों fall हो रहा है? There is no consumption happening. There is no investment happening. So all these functions are being mutilated. So इसलिए GDP fall हो रहा है. So government को क्या करना है? इसका पहले आप एक और चीज समझना है. What is the relation between bond yield and market interest rate? Suppose एक इन्वेस्टर है, मैं पैसे लेके आ रहा है, मुझे FD डाला तो मार्केट रेट में X% मिलेगा, सपोज 6% FD में मिलेगा. Then bond yield कितना होना चाहिए to attract some investment into it? If it is 6.2%, I will invest more here. Reverse also, if this is 6.2%, this is 6%, I will have more interest to invest in the banking system. Yeah, take money from the banking system. I'm more ready to involve banking system instead of government securities. Now, during pandemic, what happened? Market interest rate to fall हो गया. And nobody is taking this long-term interest. Nobody is doing capital investment. Company start नहीं खोल रहा है, घर home loan नहीं ले रहा है. So government need to promote more people into this. Now government need to promote more people into this means इसका interest कम करो. Investor इधर बैठ रहा है, इधर डालो सोच के. So you make this 4% and make this higher 5%. So इधर का वैल्यू बॉन्ड यील्ड का लॉन्ग टर्म बॉन्ड यील्ड का वैल्यू कम करो, then you will have more investors in the going into investing in the bank sector or long-term project sector, then you can kickstart the economy. So with this objective to have a long-term, reduce the value of the long-term yield, which started Operation Twist started. Now हमको इसको reduce करना है bond yield को. Bond yield को reduce करना है, bond price को क्या करना है? बढ़ाना है. Bond price को हम कैसे बढ़ाएगा? उसका डिमांड कम करेगा, डिमांड इंक्रीज करेगा या सप्लाई कम करेगा. सो आरबीआई क्या करेगा? आरबीआई विल सिट हियर, आरबीआई विल बाय ऑल दिस लॉन्ग टर्म बॉन्ड्स. लॉन्ग टर्म बॉन्ड्स पूरा खरीदेगा. तो मार्केट में लॉन्ग टर्म बॉन्ड का सप्लाई कम हो गया. सप्लाई कम हो गया मीन्स बॉन्ड का प्राइस इंक्रीज हो गया. बॉन्ड का प्राइस इंक्रीज हो गया मीन्स यील्ड नीचे आ गया. नहीं, इधर से कितना बॉन्ड खरीद रहा है वो शॉर्ट टर्म में भेजेगा आरबीआई. सो शॉर्ट टर्म में भेज रहा मीन्स इधर सप्लाई, बॉन्ड सप्लाई इंक्रीज हो गया. बॉन्ड सप्लाई इंक्रीज हो गया मीन्स बॉन्ड प्राइस विल फॉल. बॉन्ड प्राइस विल फॉल मीन्स बॉन्ड यील्ड, इधर का प्राइस इंक्रीज होने लग गया. So one way what the objective of Operation Twist is trying to flatten this normal yield curve. Even it is ideally up speak किया तो it is trying to achieve a inverted yield curve. That is why twist बोल रहा है. Normal up क्या है, yield curve को twist करने के लिए कोशिश कर रहा है. This XYZ operation is called Operation Twist. You got the overall picture? We have interest rate and bond yield. We are pushing down this long-term bond yield in order to promote more interest in the, take people to invest in long-term projects. Now that we are doing by कितना इधर से ले रहे हैं, then what is the impact of कितना इधर से ले रहे हैं उतना इधर भेजेगा, short term securities भेजेगा, buying long-term bonds and selling the short-term bonds. That is Operation Twist. Now tell me what is the impact of Operation Twist on net liquidity. नेट लिक्विडिटी में क्या इंपैक्ट है ऑफ ऑपरेशन ट्विस्ट? नेट लिक्विडिटी में कोई इंपैक्ट नहीं है. क्यों? इधर से कितना खरीद रहे हैं वो सेम अमाउंट 10,000 करोड़ लॉन्ग टर्म खरीदा, ओनली आप मैच्योरिटी पीरियड चेंज कर रहा है. 10,000 करोड़ लॉन्ग टर्म बॉन्ड खरीदा, 10,000 करोड़ शॉर्ट टर्म का टर्म XYZ बेच दिया. समझ रहा है? नेट इट इज लिक्विडिटी, net liquidity neutral, its impact is Operation Twist ka. Now this is all we are talking when RBI is interfering with the system. RBI interfering with the bond price or bond yield, then RBI is trying to create something to kickstart the market. समझ रहा है? Sometime RBI scene में नहीं है. RBI is not even in the scene and still bond yield become like this. Bond yield curve become like this, inverted bond yield curve आएगा. When what does this indicate? अगर long term health of economy is very bad, this indicates a very good recession is coming or a very bad recession is coming. If it is happening naturally, if it is, we are doing all this with RBI intervention, that means we are doing it to kickstart the economy during bad times, recession or pandemic. Otherwise, if it is happening naturally, then whole idea is it's indication of a very bad recession. Clear? That's all for today. Good morning, everyone. So last class we discussed so much about money supply. So CRR, SLR, SDF, MSF, all these are interplaying. So in this class we are going to discuss next aspect, that is banking sector. Majorly we are focusing on the recent ongoing issues in the banking sector. Go ahead. Before starting this banking sector, we are going to have a just recap of whatever some important concepts we have discussed in the last class, and we will also solve few questions that is asked in the recent past, like in last 2 years from these topics, so that you can get a fair idea how much depth you should learn, how much overthinking you should do, because these concepts, if you really overthink, everything get related to everything. So but there should be a limit in attempting the paper. You should only take the direct consequences. Don't overcomplicate things. Basics, how x is related to y, that you should take. If x is related to y, y to something, something to something, then it will be impacted. That kind of thinking you should not apply in the exam. To learn all this, we will solve some questions also. Now give me this. Suppose inflation is happening in the economy. What is inflation? General rise in prices. Suppose 10% inflation हो रहा है, बहुत ज़्यादा inflation हो रहा है, 10%. Now what is its impact on CRR SLR? RBI like what supposed to do? Everything here, what you're thinking, what should be your point of thought? Everything is related to money supply. इन्फ्लेशन हो रहा है, हमको क्या करना है? मनी सप्लाई को कम करना है. मनी सप्लाई को कम करना है तो ज्यादा पर प्राइस इधर आरबीआई में इन्वेस्ट करके रखो या ज्यादा पैसा बैंक के पास लिक्विडाइज करके रखो, इन वो लोन मत दो, तो दिस विल बोथ विल इंक्रीज. बट ये हम इन्फ्लेशन कंट्रोल के लिए ज्यादा यूज नहीं करता. सीआरआर की मेजर फंक्शन ऑफ सीआरआर इज मनी मल्टीप्लायर. SLR is like bank runs like situation के लिए एक buffer. Okay. CRR is under which act? RBI Act it is. It is under RBI Act. This is under Banking Regulations Act 1949. And CRR is like a universal concept. Every country has CRR. SLR is not like that. SLR is Indian invention to give some stability to the banking system. We have introduced this SLR. Now what will happen? Repo, what is repo and MSF? Short term lending, RBI does the lending by taking collateral from the banks. That is repo. MSF means? MSF means here क्या है? RBI lends by taking collateral from the bank. If this collateral is taken from SLR quota, then it is MSF. MSF will be higher than repo rate. Now, if inflation is happening, repo rate is our major policy rate. Everything else is related to this. Now, if inflation is happening, what happened to repo rate? Repo rate, MSF, both will increase. What is reverse repo rate? Excess liquidity है, बैंक पे रखेगा, then बैंक से RBI से collateral ले लेगा. Who the banks? So what will have to happen to reverse repo rate? What will happen if it increase? More interest on the liquidity, surplus liquidity. So banks will be more interested to keep that money, excess money with the RBI rather than lending. So SDF, what is SDF? That is the new tool that is introduced in recent past. What is SDF? Without collateral, bank is keeping money with the central bank, that is called SDF. Both will increase during an inflation. What is open market operations? Directly selling the government security. What will happen to that in case of inflation? Open market operation means it's a broad term. It has two components. Either RBI will sell the GSEC, government securities, or RBI will buy the government securities. What will they do if there is higher inflation? Sell the securities and take the money from the market. RBI will sell the government securities during high inflation period. All we are discussing, this is vice versa related to in deflation time or lower inflation time also. What happened to bond yield? This is confusing part. We'll discuss once again. Last class also I think we have covered it up. What happened to what is bond yield? Bond yield you understand simply as a return you get on the bond. That is bond yield. It is inversely related to bond price. Bond price increases, bond yield decreases. That concept is all clear. How it is? How it is inversely related? Bonds usually are sold at discounted rate. So 100 is the face value. Now bond will be sold at 90 rupees with a 1 year maturity. Now after 1 year you come, you will get the 100 rupees. So 10 is the bond yield. Now if you want, after 2 months you want to sell this bond. Now you are going to secondary market to sell this bond. Now if you are getting 9, you will not be able to sell it for 90 rupees. You will be able to sell it for 92 rupees. Then bond price increased and the secondary bond yield is just 8 rupees. पहले 10 था 8 हो गया. Bond yield decrease हो गया, bond price increase हो गया. If it is 94, bond yield will be 6%. Like that. So bond yield and bond price is clear. Now what happened when inflation happened? What happened to bond yield? There is inflation, say 10%. Then say bond yield is 8%. Now who in this scenario, if there is an investor sitting here, why should investor even invest in this bond yield? It is not even covering the inflation cost of this investment. So whoever who invests in this kind of market scenario, whoever invests in bond yield is at loss. So all this investment will go to some other assets, either FD assets or some other assets like real estate or gold or something other assets. Investor will be more interested in doing some other businesses. Now if nobody is interested, then what happened? This is demand will fall. Demand fall, what happened? Bond price will decrease and there will be a corresponding increase in bond yield due to this. Okay. Second perspective is, if inflation is happening, what central bank will do? Central bank will increase the interest rate. Interest rate is increased, FD option will be there for investor. FD will be more attractive than bond yield. So maybe he will invest all his money here. Again the same cycle happen. Then bond yield will adjust. So major takeaway from all the discussion is interest rate prevailing in the market and bond yield will follow like proportional path. One is increasing, other is also increasing. These are all we are discussing in an ideal situation. In real time, there are a number of other factors that is going to affect bond yield and interest rate. But ideally, they all follow the same path. One is increasing, other one is also increasing. Now, in this context, give a brief idea on this. Which one? Operation twist. What was operation twist? We have a bond yield curve like this. This is bond yield and this is maturity. At lower, if you are parking your money for shorter maturity period, you will get lower interest rate. If you are parking for longer, you will get longer interest period. Now, something like pandemic happened. Operation twist was used in India during the pandemic times. Now, if some pandemic occurs or big recession happens, then what happens? Nobody will be, consumption will fall, investment in the economy will fall. Due to all this, GDP will be a very bad state of affairs. Now government want to kickstart GDP growth. Now what government can do? What government does, the interest rate will be already low in the market. Like we have seen during the pandemic, all this repo rate was extremely reduced. Just give me a second. Repo rate and all will be at 3% ranges. Still, investment is not picking up. Even though the loans are very cheap, still people are not taking the loan. So the objective of Operation Twist is to make long-term loans more cheaper, so that at least people can do some long-term investment and economy picks up. Now, how these long-term loans can be made more cheaper? By manipulating the bond yield. How they are manipulating the bond yield? We already told bond yield is directly proportional to market interest rate. Now bond yield, if long-term bond yield is made to fall, market interest rate will also fall. But lower price you are getting in long maturity loans, people may take the loan. Okay. Now if you want to make this bond yield fall, what will they do? Bond price should go up. So demand should, bond should increase. So what RBI do? RBI will sit here. RBI will buy long-term bonds. And whichever bond RBI is buying, the same bond RBI will sell at short-term maturity. So if you look at the net liquidity, it is liquidity neutral. No new money is injected into the system. You are buying X number of long-term maturity bonds and selling it in the short-term market. Clear? Question mostly if Operation Twist exactly is not asked, because it's being 1 year. Last year it was best to ask, but they didn't ask. But something like this, bond yield curve can come in the paper, or bond and inflation relation can come in the paper. Something, these all money supply, how these all are related. You should have absolute clarity on these aspects. Go ahead. Now fastly, what is this? Explain me these concepts. What is quantitative easing? We take it as same thing. Conceptually it is same. Like in US it is called debenture. In UK it is called bond. And there is some technical difference, but from exam perspective all are same. No, conceptually no difference. All these are debt instruments. Debt instruments. Otherwise equity should be there now. Share is the equity instrument. Say, you're asking or saying? Okay. ठीक है. Okay. But for exam perspective, don't do PhD in this. If you have interest, you can go and learn more about it. For exam and conceptually questions are coming, you take both as fairly same things. Now tell me, quantitative easing क्या है? Why you are saying USA? Quantitative easing is a general term. It can be anywhere. Central bank purchases securities on open market to achieve desired outcome. We told that open market operations. Open market operations, central bank is purchasing the securities and supplying more money, injecting more money into the economy. When quantitative easing will be done? When inflation is lower. Inflation is lower. To kick up the growth, increase the money supply, we do quantitative easing. What is the opposite of this? Quantitative tightening. Now US Fed is doing quantitative tightening and its impacts are felt throughout the world. That we will discuss in the external sector class. All those dynamics. Now what is helicopter money? Suppose you do the quantitative easing. What is your objective of doing quantitative easing? Increase the money supply. You do it, reduce the rate till where? Still nothing is happening. Still you are not able to pick up the consumption. Still there is no investment happening in the economy. Then what you can do? The extreme option is helicopter money. Helicopter money means what? Come in a helicopter and throw away the money. Exactly, this is like synonym, but what they will do is central bank will print more money and distribute it to people. Then what will happen? At least more money should be following X number of goods. At least there should be some progress in inflation. And inflation and growth are somewhere synonymous. If inflation is there, there is a chance growth can happen. So this is an extreme step. But printing money has a very severe side effect also. What is that? Sometimes this inflation can go totally out of control. In India, printing money is allowed? Not 2003. Earlier, India printing money was being done. 1997, we completely banned this printing money system. Now, government cannot print money for this. If government is not meeting expenditure, government cannot print more money. Then what is the new mechanism called? Ways and means advances. Ways and means advances, what is the difference? What is this actually? Ways and means advances? Yes, idea is if government is not having money or facing liquidity crunch, government don't do the printing money. Ask RBI, RBI will give the government money. Now where RBI is getting the money? RBI get these government securities, they sell in the market, take the money and give to the government. But these ways and means advances, government securities will not be sold in the market. So this XYZ kitna bhi money le lo idhar se, by this means it will not create excess liquidity in the market, or liquidity and this money supply will not be too much impacted. And this is short term also, 90 days and all. So by that time government has to repay this. Okay, ways and means advances. Go ahead. Answer this question, few questions we have here. Answer this first. This is last year question, right? Most of you might have written in exam. What is answer? मिल गया? क्या आंसर है? How can you say C? C बोल रहा है, B बोल रहा है, और कुछ बोल रहा है? Two more options. Wait. Everything our thought process is money supply. Money supply is everything that is controlling inflation, that is controlling everything. If inflation is too high, what is our objective? Reduce the money supply. Reserve Bank of India likely to buy government security. Buy government securities means क्या होगा? Buying government securities from the market and giving money to the market, injecting more money to the market, money supply will increase. This statement is wrong. This is like, then you got the answer. There is only one option left without one. So this is very fair statement. You cannot answer C in this. कितना भी confuse हो जाओ, point is money supply. How it impacts money supply, that is your way of thinking. If rupee is rapidly depreciating, RBI is likely to sell dollars, then rupee कब depreciate होगा? बताओ. Rupee depreciating means what? पहले 75, $1 का प्राइस था 75, अभी $1 का प्राइस हो गया 85, देन रुपी क्या हो गया? रुपी डिप्रिशिएट हो गया. डिमांड ऑफ डॉलर इज वेरी हाई. तो आरबीआई क्या करेगा? मार्केट में ज्यादा डॉलर डालना. व्हाट दिस प्रोसेस? सेल डॉलर्स इन द मार्केट मींस more dollar is coming into the market. So this statement is absolutely correct. If interest rate in USA or European Union were to fall, that is likely to induce RBI to buy dollars. What will happen if interest rate in USA or European Union were to fall?
or RBI will find $5 as very appreciate.
Yes. Like think like this. There is USA. This is what exactly happening due to now this federal tapering and all. This is India. Now this is investor. Now if interest rate here is falling or increasing, falling. Interest rate here fall means Indian investment become more attractive. So more investors will come here. And what these investors bring? They bring dollars. Then there will be huge number of dollar in the market. So this 75 can go to 70. So what RBI should do? Take away the excess liquidity of dollar in the market. So RBI buying the dollar means it's absolutely right step to do. These are like opposite. Answer is B, 2 and 3. Go ahead. Make sure after class, do whatever you want to do, but you cannot make mistakes in these questions. These are conceptual questions. These are flat questions. This should come into your hand, whatever you ask. When you're sleeping, you ask, you still be able to get these rights. Fact you forget, that's obviously fine. No issues. Now answer this question first. पढ़ो आराम से पढ़ो. This is also a 2022 question, right? बताओ आंसर बताओ. ओके सभी का नहीं हुआ. बताओ क्या है आंसर बताओ. कंफ्यूज है. बताओ क्या क्या कंफ्यूज है क्या क्या ऑप्शंस में. ये हम डिस्कस किया था ना कल. इन्फ्लेशन इंडेक्स बॉन्ड्स, इसमें क्या डिफरेंस है? ओनली ये है कूपन विल बी, हाँ, coupon will be adjusted to CPI or WPI. It will be synonymous to this. Inflation index bonds, same bonds, no, technically no change. Only thing is the coupon rate that is offered, that will be integrated to CPI or WPI. CPI बढ़ रहा है, ये कूपन रेट बढ़ेगा, ज्यादा इंटरेस्ट दे देगा. कूपन कम हो रहा है, कम दे देगा. ये फेस वैल्यू पे नहीं दे रहा है, ये डिस्काउंटेड रेट पे नहीं बेच रहा है. हम ट्रेजरी बिल्स का बात कर रहा था, डिस्काउंटेड में बेच रहा है. ये क्या है? फेस वैल्यू पे बेचेगा. देन आफ्टर मैच्योरिटी you will get face value plus coupon. This coupon is CPI or WPI that is adjusted to inflation. Conceptually इतना ही है, और बाकी सब बॉन्ड क्या सोचेगा वो ये भी करेगा. Government can reduce the coupon rate on its borrowing by way of IABs. Wrong नहीं हो सकता, because government securities बेच रहा है, आपको पहले फिक्स्ड कूपन देना पड़ता है. नाउ यू आर सेइंग इन्फ्लेशन दे देगा, देन गवर्नमेंट इज हैप्पी अबाउट इट. अगर इन्फ्लेशन मैनेजेबल है, देन ये कूपन रेट भी बहुत मैनेजेबल हो जाएगा. एब्सोल्युटली करेक्ट. IABs provide protection to investors from uncertainty regarding inflation. That is the whole point of these bonds. Inflation protection मिलेगा आपको. Inflation से आपका पैसे रोट नहीं होगा. In last case you were discussing, that is the problem. If both high inflation आ गया, then if 10% is the coupon rate, fixed coupon rate है, 12% inflation आ गया, then you are at the loss. Government is at the profit. This is, otherwise this is provides protection against inflation. Absolutely correct statement. interest received as well as capital gains are non-taxable. Very extreme statements. Government won't let these are non-taxable. Government need every word tax. It is very extreme statement, and even if you eliminate this, you got the answer also. All these cannot be true. There is only one option that is left, A. It's quite very easy question. Go ahead. Only don't get over confused with this inflation index terms and all. It simply bonds with coupon rate that is same as inflation. Answer this question. This is last year question, right? क्या आंसर किया इसमें? सी आंसर किया. There is some confusion regarding the question. We don't have key right now. So what is it saying? A share of the household financial saving goes towards government borrowings. जाएगा क्या? क्यों? और जगह भी जा सकता है ना? That A share लिखा है. Entire नहीं लिखा है. A share लिखा है तो probably it should go. Because savings, then bank can do this, buy government securities, and it should go. If why we are taking this right is because A share. या कोई extreme words नहीं है इसमें. अगर all this household in savings will go to government borrowings means we cannot take it right. Second, dated securities at market-related rates in options form large component of internal debt. तो सही होना चाहिए. Dated securities means क्या है?
Security means special security, gold bond, inflation index bond.
Maturity will be something like 1 year to 10 year. These are like in bond market. These are the most demanded bonds. So this should form a major component of XYZ internal debt of the bank. So answer will be most probably C. Okay. Go ahead, answer this first. This is I think 2021 question. This question is because of some current affairs happening that time. Okay. बोलो क्या आंसर है? See, okay. Governor of Reserve Bank of India is appointed by central bank. Very correct. Certain provisions in Constitution of India give central bank the right to issue directions to RBI in public interest. इसमें बहुत सारी स्टेटमेंट है, but only issue is Constitution. Constitution नहीं है, RBI Act है. And Constitution में RBI इतना ज़्यादा आता भी नहीं. Constitution is even though detailed, RBI provisions नहीं लिखा है उसमें at least. ये wrong हो गया. Governor of already got the answer. So बोल रहा था trick use नहीं कर रहा है 2022 में. These are questions you should not miss. Governor of RBI draws purpose from very straightforward question, nothing to discuss. Answer is C. Now tell me what is this provision. For this I put this question. Section 7 of the RBI Act. What does it say? Section 7.1 is there. Section 7.2 is there. What does it say? Not Section 7.1 says that government can consult RBI governor for some matters regarding public interest. Some XYZ matter is there. Central government or finance minister XYZ can consult RBI governor and discuss whatever it is in due to public interest. That is consult and discussion. That is section 7.1. 7.2 क्या है? Suppose RBI governor सुन नहीं रहा है, then government can even give binding orders. Binding orders means if RBI discussion is happening or RBI decision is taking, who will take the decision? RBI board will take. So if a binding order is propounded, then whatever the order is, it can circumvent the decision of RBI board. So central government has this power to do this. All these are under RBI Act. Now has this been ever invoked in India? This was invoked during the Surjit Patel time. then it becomes big controversy. Government didn't went for this. What was the matter? He put almost 14 banks under PCA framework and all. All public banks went into PCA framework. Not that much important, this PCA framework. We'll discuss it in the later section of this class. Now answer this first. Can answer है? D. United States we already discussed in some other questions. It will be impacted. Action of Reserve Bank of India that have all the powers to do whatever it wants. Inflation exactly defines the bond yield and all this. Go ahead. All these are very direct questions if you know the basic concepts. Now we start with today's major topic, that is banking sector. Now banking means there are two types of banks, scheduled bank and non-scheduled bank. What is the difference? Section 2 of RBI Act, if it is put inside that, then we call it as scheduled banks. Paid capital, all these criteria, 5 lakh, paid up capital, then XYZ, RBI will be directly influencing all this. Now what is differentiated banks? Either for its different purpose it is established. Either it is region of operation is limited. Some RRBs can work mostly in rural areas. Like local area banks can work mostly in 3 neighboring districts. So either their area of operation is limited or their what function it does is limited. How it is limited? Either to whom it may serve. Like some SFBs. SFBs, what is the point? It was unbanked and underbanked sections को serve करने के लिए SFBs लेके आया था. Service offered will be limited. Best example, payment banks. They cannot take deposits. They couldn't take this term deposits. They can only take the other deposit. So this either the service offered is limited, either to whom the service offered is limited, or their region of operation is limited. This kind of, if some limitation is there, so we are making special services for serving XYZ category, then we call it as differentiated banks. Now this is the whole comparison of 4 differentiated banks you should basically understand. Take a peek. LABs means local area banks. These are started from 1996. These are not under any special act is there. Private owners are the owners of this bank, mainly to serve agriculture and rural customers. Branches maximum in 3 districts, only 1 urban center per district. SLR, CRR, all these terms apply, but different slab may be given by this RBI. Don't go and learn that slab and all. That will be, at least know that CRR, SLR applies to LABs also. RBI is the regulator, example is this. Okay, LABs are like getting slowly outdated. Now come to RRBs, regional rural banks. What they do? They are like statutory banks under RRB Act. What is their ownership? How is their shareholding? Oh no. Where you are getting all this? पहले से था, union government was having 51%. Sorry. Union government was having 50%. State government is having 15% and sponsored bank was having 35%. This was earlier set up. It was under this agreement, this RRBs was formed. But recently some reform happened and said that these 3 can combine, their earlier this was 100%. This 100% could be reduced to 51%. And the other 41% ownership could be offered to private banks or private entities. So now RRBs में private को भी role बहुत बढ़ गया. नहीं तो only one sponsor bank was responsible for XYZ. So this might improve their performance, competitiveness, services offered, all these things. Otherwise, what is their basic purpose? rural areas with basic banking services and financial services provide karna. PSL, what is PSL? Priority sector lending. Some part of your loan should be go to agriculture, education, housing, all these categories. Now what is a normal banks के लिए कितना है PSL? Scheduled banks के लिए 40% is the PSL. For RRBs it is 75%. CRR SLR applies, but different slabs will be there. RB is the ultimate regulator, NABARD is the immediate regulator. Some examples. Now RRB's interest rate में कुछ condition है? RRBs cannot give, RRB's interest rate should be less than what is other banks are offering in that area. Now come to new kind of banks, that is small finance banks and payment bank. What is small finance bank? इसको भी कोई act नहीं है. These are owned by private entities only. Banking services to unbanked and underbanked regions. That is the primary objective of small finance banks. Where banking penetration is poor, the major objective is to give banking to areas where banking penetration is much poor. 25% of the bank branches should be in these XYZ areas. Same as private bank, this CRR, SLR, all these applies to small finance bank also. Example, regulatory is RBI. All regulators are RBI. There is no. Okay. Yes. Even NBFCs, all these are cooperative banks, RBI is coming into this. Yes. The RBI is trying to enter that sector also. Ultimately, banking sector will come under centralization will happen. Okay, this can offer all the services. There is no limit in whatever services SFBs can offer. Only limit is it should be more, this much of branches should be in unbanked areas. Now come to payment banks. No act, it is owned by private sector. Payment bank में क्या control है? Low business, low income households, migrant laborers. For these people, you give some services, banking services specially designed for these people. Now they have no such limitation, unbanked and regional. But 25% of access point should be in rural areas. Access point means these POS machines, these ATMs where they are setting, all this should be in rural areas. That is only much lighter limitation on them. But the point is they cannot take NRI deposit, they cannot take fixed deposit. They can have, and the account can only have a maximum balance of 2 lakh. They also cannot give loan also. Then how they get money? All money they should invest in government securities or treasury bills. Example is India Post, Airtel, Paytm, Bank, etc. Are you factual slide? Go ahead. Now what is digital banking units?
There is only 75 district banking units.
75-year celebration, 75 DBUs were launched. Now DBUs are specialized branches delivering digital banking products. All digital products which you can get from a bank, that will be available in DBUs. DBUs are totally paperless, will also act as a digital financial literacy centers. Hassle-free eKYC, all this can happen. 24/7 cash withdrawal, all services will be there. Now what is some important points you should know? Who made these DBUs? They are made by scheduled commercial banks. And even though it is said digital banking units, they are physical units. Statement is there, they are only digital systems of banks. They are not only digital, they are physical units of banks. Like a special room will be there or special machine will be kept that provide all these services. But it is physically present there. It is not like services provided through online only. Don't confuse with this name. And it is provided by scheduled commercial banks. See here it is ICICI Bank. Very old concept. Yes. Go ahead. Not a revolutionary concept. It is only for those people who doesn't have awareness to use these digital services. They will have people assistance and they can get better ease of access to this. Go ahead. What is neobanks? These are more interesting. These are those banks which absolutely have no physical presence, only online. Yeah, Jupiter is best. Now, yeah, this is example. Like earlier banking was brick and mortar model. Now these online banking came. Now we are going to 100% digital only type of banks. Now it has so many advantages. It can integrate various services. It can give specialized services to specialized people. Cost of operation is less. So many advantages here. Risk, what is risk? अभी तक only a narrow amount of people it can serve, narrow products it can launch. Then there is this online threat is there, and if you have faced some issues, there is nowhere you can go. Otherwise, here you can go to physical branches and complain, and they will process you. Here there will be nothing like that, so it will be inconvenient to many sections of the people. Now, this all theory you can learn, read from these PPTs and all. Now, what is most important thing to know? How banks operate. Bank get licensed as a bank from RBI. Now, where is Jupiter getting its license? Or is Neo banks licensed in India? Neo banks are operating in India. Jupiter is operating in India. Other banks are operating in India. But are they getting banking license or not? If a statement is there, they are licensed under RBI Act. Is it true or false? Why?
Because they are like financial intermediary.
Then how they are functioning in India as banks? Jupiter functioning as a bank, right? They're providing all services, savings, everything, mutual fund, everything you will get under one banking, one digital account. Actually, neobanks are so far not recognized by RBI. You will not, any neobank will get license under the Banking Act. Now, how they are functioning is they are using license of other banks. Jupiter is using license of Axis Bank and Federal Bank. During using that license, they are offering services. So far, no banking license is offered to neobanks in India. It's legal. Legal में कोई issue नहीं है. No, it's not like that. Where the banking services will come, Axis Bank will be providing it actually. Some savings account is there, ultimately it is with Axis Bank. Jupiter will function as intermediary role in it. Credit card, debit card issue करना है, then it will come with card of the original bank. Maybe Jupiter may be also advertised, but card original will be legally coming from the partner bank, whichever it is tie up with. Go ahead. Currently, RBI doesn't issue banking licenses for neobanks. They are operating with the license of other banks, partnered banks. Jupiter will partner with Axis Bank and this Federal Bank, I guess. So their banking services, Jupiter will twist and use and give better products and use like this. It is legal, but right now no direct license is provided to them. Maybe in future RBI may take it up. Now, what is development financial institutions? Development finance institutions, DFIs. They are NBFCs, non-banking financial institution. ठीक है. Long-term infrastructure projects. Why long-term infrastructure projects is an issue in India? Like why investing in long-term or debt market of long-term projects is major issue in India?
Whatever the money which is coming back is at very low pace.
Major issue is asset liability mismatch. Indian banks, most of their money deposits where they are getting from households, from small banks, all these are short term. Now, if you take the short term money, and you lend it for 25 years, 20 years, 30 years, 40 years, then where you will get this money return? If you look at the bank's cash flow diagram, there will be huge mismatch. Money will be coming here, then return will be coming after 20 years. So this is creating issues. So banks are technically incapable or finding issues to match the asset liability in investing in long-term debt financing markets. Now, what is solution to this? Bring in long-term. Who will invest for long-term? Pension fund, long-term mutual funds, yeah, insurance funds. If you take life insurance fund is, you may pay throughout the life till 80 years. Pension fund maybe you have to give after 30 years. So all these funds are long-term operators who can do this investment, long-term debt financing. Now bringing these players into long-term debt financing, that is the objective of the new organization that is formed. NABFID or NABFID, National Bank for Financing Infrastructure and Development. Now this is a statutory body that you should know. Our government has passed a parliament bill to form this body. Here all this bill will be written because this is taken from PRS websites, all this. So screenshot, that's why it's a bill, it's written. It was passed then and it is all, for exam purpose, you take it as act only. Now what is the objective? Long-term infrastructure financing. DFS do not accept from people. Any statement is there, you should be very clear. All this institute does not accept fund from people. They source their fund from market, government as well as multilateral institutions. All these institutions, pension funds, all this which we are talking, from these institutions they get their fund. Authorized share capital of 1 lakh crore rupees. Shares of this BFID is divided among central government institutions, sovereign wealth funds, pension funds, insurers, all these. Okay. This is all our factual information. You can even pause the video and go through it. Functions of NABFID, financial as well as developmental functions is there. Financial functions क्या होगा? Create more interest in the long-term debt market or mobilize more money into the long-term debt financing market. Developmental function, to make these projects work, long-term projects work. Capital investment increase करना country का. Source of funds, we already discussed all this. Go ahead. Support from the government will provide this much of crore to all these are very factual information. Just go through it and just make sure that if some statement is there, you should know. Basic concept is what I already told. If a statement is having wrong in this basic concept, then you should be able to identify this. Okay. Now NBFCs, what is specialty of NBFCs? They are registered under Companies Act. They provide financial services, something similar to bank. And NBFCs are also divided into NBFC D and NBFC not D. That means deposit taking and not deposit taking. Most of the NBFCs are in not deposit taking category. Now the deposits are not insured under DIGC Act. DIGC Act. What is this act? Recently a reforms was done in this act also. What is this act about? Yes, your at least 1 lakh rupees was? That was earlier. Now recently it was reformed to 5 lakh is you are insured. RBI will give XYZ money. So this RBI insurer, whichever it is, this organization. But your deposit, if it is in NBFC, there is no such insurance guarantee to it. No issue, they cannot, NBFCs cannot issue checkbook, they cannot issue debit or credit card. You have this Bajaj, Finserv, they are an NBFC, Muthoot Finance, they, if you go for their loan, they will issue you debit card, credit card, debit card at least. How they are issuing that? Similar to we discussed with Jupiter, they are partnered with another bank. Using that bank's license, using that bank's credit card or debit card they are issuing. Not credit card, debit card. No CRR is applicable for any NBFC. Even for deposit taking, there is no CRR, but SLR is applicable for deposit taking NBFCs. They can invest in everywhere they want, share market, mutual fund, insurance, government securities, everything, everywhere they have freedom to invest wherever. It's NBFC. It's giving you a loan and all this. All this company doing financial services that is not having this banking license. NBFC can provide loan. Yes. There is only one concept in this gold loan you need to know. One is this LTV. What is this? Loan to value ratio. What is LTV? Suppose there is gold worth market price is 10,000 rupees. How much you will get loan for this? Maximum कितना loan दे सकता है? Suppose 8,500 loan दे सकता है. This maximum limit is decided by regulator. NBFC को कौन रेगुलेट करता है? RBI डायरेक्टली इनडायरेक्टली या NABARD रेगुलेट कर रहा है. तो this maximum ratio is number is decided by regulator, and this is called this LTV, loan to value ratio. Now this also will adjust depending on times. When COVID happened, what happened? बहुत हाई लोन दे रहा था. प्रीवियसली 8,500 है, कोविड आ गया तो 9,500 कर दिया. दैट मीन्स एलटीवी रेशियो इंक्रीज किया. इसके अलावा मुथूट फाइनेंस के पीछे मत जाओ. ओनली दिस कंसेप्ट वाज देयर. देन गो इफ कोविड इस टाइम मनी लिक्विडिटी इतना कम करना है, देन इसको कम करेगा. अभी ये नीचे आ रहा है. ये गो अहेड. व्हाट इज अकाउंट एग्रीगेटर? Yes, we have financial data. 10 बैंक में अकाउंट है, म्यूचुअल फंड किसी और के साथ है, या कुछ म्यूचुअल फंड में भी 3-4 लोगों के साथ अकाउंट है, एंड कुछ और सर्विसेज लेना. क्रेडिट कार्ड में भी ऑफ सम अदर बैंक वेयर यू डोंट हैव द अकाउंट. So much financial data is scattered for most of the people. So handling this will be so tough. Where it is, where the money is going, where all this. So as a solution to it, we have this account aggregators. Account aggregators, what they will do? They cannot sell your consumer data. They cannot even read your consumer data. They will just keep all your financial data at one place. Consumer to selectively share and इसको data किधर से मिलेगा? ये अपने आप जाके data नहीं लेगा आपको, आप इसको data देना पड़ेगा. You give your XYZ data to that data, they keep it at one place. If you don't give, then they don't keep also. It's up to you to whether use it. These are also RBI regulated entities. Okay. This can be both, maybe, probably. These all data, mutual fund, insurance provider, tax invoices, cash flow, lending, wealth management, all these data can be kept under these XYZ aggregators, account aggregators. Go ahead. Simple concept, nothing. Now come to NPA. What is NPA? Non-performing assets. Like, it's being a big talk for a long time. If interest or principal is not being serviced for 90 days or more than, we call it as, categorize it as NPA. Now tell me what is brief on this NPA problem India is facing. We'll discuss, I think we have further slides for that. So we'll discuss that. Just understand these key terms at least for time being. What is standard assets? Standard asset means you are paying interest and principal, everything that is on time you are paying, then we call it as standard assets. Special mention account, that is SMA 0. SMA 0 कब बोलेगा? You defaulted the payment for 1 to 30 days. Now if you defaulted the payment to 31 to 60 days, your account will be transferred to SMA 1. Now 61 to 90 days, it will be transferred to SMA 2. More than 90 days you defaulted, then it is called non-performing assets or NPA. After that, if it remains as NPA for more than 12 months, it is called substandard asset. Now, if you remain as substandard asset for again more than 12 months, it is called doubtful asset. Now, what is loss asset? डाउटफुल असेट को कोई रेगुलेटर आके या बैंक ही बोल दिया, there is very less low salvage value you can get from this. If a regulator or bank said this, then that kind of asset is called loss asset. Now two term is the loan write-off and loan waiver. It was below, it was not coming here. What is difference between loan write-off and loan waiver?
Loan waiver is done by government of India. And loan write-off is done by
क्यों बैंक को वेवर नहीं कर सकता?
but write-off is removing from the books. It is removed.
Write-off is simply you are removing from the bank's book. That means recovery of the bank loan will still continue. Bank will still continue to recover that loan. And what is advantage of removing from the bank's book? NPA percentage decreases. Then NPA decreases. What is bank's advantage? Provisioning नहीं करना होगा. What is provisioning? Yeah, if a loan is there, you have to keep some money as security for this. And if it is turning NPA means you have to keep huge amount of money. Almost all that loan, how much pending hai, all that money should be kept as provisioning. So till it remain as NPA, all this extra money should be kept provisioned by the bank. Now if you are releasing NPS means provision money also releases. This will improve the profitability, everything, return ratio of the bank. Loan waiver means bank will stop chasing that money, then bank will not chase that money. That is loan waiver, farm loan waiver. You don't have to repay it again. Now general trend is it was too high in 2018 time. Now we are comfortably going down. Then there is COVID, then some hype is there, but overall NPAs are coming down only. Cannot say that. System overall improvement is there. We have IBC, we have so many other new schemes has been introduced. All this. No, don't take this graph. This is only till March 2022. Like there may be like here also you can see some up and downs also in this graph also. Now tell me this. What is provisioning? We already told. What is provisioning? Amount of money that is kept aside. If NPA becomes, then provisioning increases. Now what is difference between gross and net NPA? Suppose there is a 100 rupee that is not being repaid. Now this 100 rupee is called gross NPA. Now once it turned NPA, you have kept aside 70 rupees as provisioning. Bank has kept 70 rupees as provisioning. Now even if this 100 rupee didn't came, bank still has this 70 rupees in its hand. So net loss bank will have to suffer from this is gross NPA minus provisioning. This is called net NPA. So if provisioning increases, net NPA decreases. Bank keep 100% provisioning. That means net NPA will be 0. Okay.
By selling the collateral.
Anything can be profits of the bank. Which case you are speaking about? This one. This is net NPA will reduce, but we are more focused on gross NPA. This is like technical difference only. If we are drawing a graph, we will draw the graph for gross NPA only. Gross NPA खोलना है, कम होना है, then you have to make bigger changes. Write off करना पड़ेगा, नहीं तो total system में improvement करना पड़ेगा. Something more have to be done. Reduced. Gross minus provisioning is net NPA. high provisioning is there, net NPA will go down like this. Go ahead. Now speak something about this NPA problem. What is this twin balance sheet problem?
During post global financial crisis, loan was given at very low cost, and lot of capacity build-up was happened. But
There is, okay, during this economic boom period, that is just before this crisis happened, global financial crisis. Economic boom period, what happened? Expectations in the economy is too high. That is, economy is supposed to grow like this. Economic growth is supposed to be very high like this. Now what happened in this? Then banks kya? Banks become highly over leveraged by giving loan to companies. Extreme high rate पे सबको loan दे रहा था in 2000 during the boom period, and companies was taking as much loans as they can because they were expecting there will be steady huge economic growth. Over leveraged companies, like kitna they can repay, they were taking more loans than that. Companies, how much they can repay, the interest rate beyond that companies were taking the loans. Now this, they were expecting this growth will be something like this. Now after then came the global financial meltdown 2008, 7, 8, 9 period. Now the whole world was impacted and the growth then happened like this. Of growth level you are expecting like this, and this is happening. Then what happened? Consumption falls. Consumption falls, the ability of companies to sell products. They cannot sell products as much as they were anticipating. Now all this lead to NPA problem in 2010s. Throughout 2010s, India was suffering this NPA problem. Root cause of these were lying in the over leveraged companies and extra no control loan being given to these companies during the boom period. Now what is one way to counter this? This whole question will not come, just have a fair idea, that much only. What is one way to counter this? One idea that is circulating is, what we are doing is, this is suppose market. Yes, market will go up and it will come down. There will be a bad period and good period. Now if you are over leveraging or giving so much loan here, that is what we are doing now. You are giving so much loan during the boom period, then during the deflation or recession period, you are not able to give any loans. Now instead of doing this, you follow counter-cyclical policy. What is the advantage of counter-cyclical fiscal policy? This is more related to fiscal aspects, but you can connect some aspect of this with twin balance sheet problem. What is the advantage of this? Yeah, here you are not spending too much, but economy is growing. That means government has huge buffer. When things go wrong, government can come up and spend this XYZ amount. That buffer is there. Then fiscal deficit, even a pandemic came or a very big thing happened, fiscal deficit, government has so much of buffer so they can keep it in limits. Now what is twin balance sheet problem? One, corporates balances is bad. Second, due to this they are not paying the banks and balance sheet of the banks are also equally affected. There is twin balance sheet problem. Now what is twin deficit problem? That is India currently facing. India is facing twin deficit problem. That is current account deficit. At the same time, we have huge fiscal account deficit. What is current account deficit? Export minus import. What is fiscal deficit? Government ka expenditure minus revenue. Expenditure, it will be technically expenditure minus loan. This loan is, we call it a borrowing, is what we call it as fiscal deficit. So these issues are India is facing. This is twin deficit problem. On the other hand, twin balance sheet problem is more or less related with NPA issues. Go ahead. What is? We'll take a break here. After 5 minutes, we will continue NIRCL and IRDCL in the probably in the next class. Okay, that's all for now. Thank you. Good morning, everyone. Welcome back. So, last class we were continuing our discussion on banking sector issues. We were just started the topic of NPA. So, let's continue the talk. First topic for the day is NIRCL and IDRCL model. What is this? What is a bad bank? Understood, you know. What is a bad bank?
The government owned entity which purchases NPA from bad banks.
What is asset reconstruction companies? He is saying bad banks are government owned entities that purchases NPS. Now, what is asset reconstruction companies?
Now these are the companies which will recover
These bad loans are also a part of asset reconstruction companies. Who regulates ARCs? RBI regulates ARCs, and ARCs is a very broad category. It is not just government owned entities, it has private ARCs also. There is Reliance ARCs, like not Mukesh Ambani, Anil Ambani's ARCs is there. So, ARCs are not just public, it is private entities are also very much part of it. ARCs is a very broad market, it was existing for a long time. Now, bad bank is specialized banks which will take over the NPA from the commercial banks or scheduled commercial banks. Clear? Now, what is NARCL and IDRCL model? Now, what is issue with bad banks? NPA is there. Now, if a bad bank go to take the NPA, what is the issue they are facing? Haircut. One is major issue is 90% haircut में ले रहे 90% haircut means what is the point of 1000 crore लोन को 100 crore देके लेना है bad bank को नहीं तो bad bank को profitability नहीं है बोल रहे so this was like stuck for even though idea is wonderful because NPA from the bank's balance sheet it will be cleared. Now a specialized entity you can make the expertise for recovery of the loans for these specialized entities. So everything idea was very great but due to some major issues पिकअप नहीं हो रहा था. Now इसका solution था पारा. What is पारा? Para is simply a bad bank, but it will be public sector. When government is involved, what is the advantage? There is sovereign guarantee. There is huge amount of how much private sector can mobilize. Huge amount of fund government can mobilize much more. So due to these reasons, if bad bank has to succeed, there should be a role for government. Para was proposed by Economic Survey before. Previous chief economic advisor also was advocate of having some para. Now government then came up with NARCL and IDRCL mechanism. What is specialty of this mechanism? Is government giving all the fund? Two companies are there. NARCL means what is their function? It purchases bad loans. Now what IDRCL will do? It try to recover value from this bad loan. So first part is done by NARCL. Okay? Now what NARCL does, let's understand from this example. Suppose, no need of example also. Suppose a bank is there and it becomes a NPA. 10 crore loan become NPA. Now this bank has to remove this 10 crore from its balance sheet. So the bank will sell this to NARCL. Will they sell this for 10 crore? There will be some haircut. Haircut means NPA कितना का है, the asset reconstruction company कितना में ले रहे हैं, इसका difference है haircut. Now here the NARCL is taking it for 6 crore. That is 40% or 4 crore क्या है, haircut है. ठीक है, suppose bank accepted this haircut, then they will transfer the NPA to NARCL. Now what bank will get is not this pending 6 crore. बैंक को ये 6 crore भी नहीं मिलेगा. बैंक को क्या मिलेगा? 15% upfront funding मिलेगा. 15% of this 6 crore they will get the funding as soon as they sign the deal. Now बाकी 85% what bank will get? Security receipts. What is security receipts? Before coming into guarantee, under what is security receipts? Now bank has given, see, 15% is 0.9 crore. Now 0.9 crore bank got the money. Now bank has to get 5.1 crore more. ये कब देगा? This is कब देगा means security receipts. Security receipts has a period of 5 years. In 5 years, you can redeem the security receipts and get your 5.1 crore. By this time, IRDCL will come and may recover this 5.1 crore and get the XYZ amount to the bank. Now, what is the underlying assets of the security receipts? NPA. Why you are coming to guarantee? We will come to guarantee. Don't too much confused. We are not touching government right till now. Now, security NARCL came, they took over the loan for a haircut, 15% fund दिया, 85% के लिए security receipts दे दिया. This security receipt can be redeemed within 5 years. And within the 5 years, IRDCL will come and try to recover this amount. And if they recover, they will give this money to the bank. All happy? Now, if they cannot recover, what will happen? Suppose they can only recover 4.1 crore. So there is a gap of 1 crore rupees. This 1 crore rupee, government told that government will give. Whatever and these guys can recover, how much is told, that is guaranteed return. If that guaranteed recovery cannot happen, then government will fill the gap. This is called government is giving sovereign guarantee to XYZ security receipts that is being offered. इसका advantage क्या है? Banks will have confidence. At least they will get their money. Okay. So this mechanism has technically very wonderful mechanism. Why? One problem was bank was reluctant to sell. That issue is addressed because bank has some assurance that this much security receipt कितना मिल रहा है उतना पैसा मिल जाएगा. Second issue was less haircut तो है, और if a bad bank is created by fully government owned entership, then what is the problem? Government has to give all this money, 100% money government has to give. So that kind of a bad bank has to work, government has to put so much of investment up front. Here government doesn't have to give too much investment का कोई काम नहीं है, only this gap when it comes, then only government has to interfere. Government has to focus more on making the expertise, making this organizational structure effective for NARCL and IRDCL. These kind of thing government can focus instead of putting too much money on the upfront, getting the work done. Kind of a very wonderful solution for addressing so many issues that was happening within this period. NARCL is a public ownership company with 51% of ownership will be with public sector company, public sector banks. It has this RBI ARC license. ARC already told they are regulated by RBI, incorporated under Companies Act. This is also incorporated under Companies Act. This is a non-governmental company. That means 51% of the share is with private. Why it is kept like that?
Because they have more expertise, they are more enterprises.
Here we need more expertise. What is more beautiful with this scheme? Ownership is given to public sector banks. They are problem creators, they are made responsible to solve the problem also. It is not like government is sitting over it. Huge amount of responsibility is given to public sector banks also. So everything is good. What is issues with this? What is issue NRCL or IDRCL is facing? Even this organization all to work, these are new organization. There is no institutional memory, institutional history. It will take some time to pick up, to get this trust going, to get this expertise growing. So this time lag is there. It is only phase 1 of this NARCL takeover is only going on. Go ahead. Clear about security receipts, what is exactly government guarantee? Somebody has made a wrong statement, you can at least able to identify this is wrong. Conceptually it is 100% clear. Okay, go ahead. Now these are some facts about this NARCL and IDRC. It is mainly for stressed NARCL we are speaking about, for loan assets above 500 crore. Minimum amount is this much, and 2 lakh crore government is trying to acquire through this organization. There is phase 1 and phase 2. Phase 1 is 90,000 crore, that is being processed right now. Now what will be capital structure? It will be like bank equity will be given to banks as well as non-banking financial companies. NBFCs are also a part of it. Debt required government guarantee will reduce upfront capitalization. That is what we were discussing so far. What else? These all are very facts. You can even pause the video, just read this and you can get the information. Then how this resolution is working on? And there is a limit to how much government guarantee is giving. There is a limit, that is 30,600 crore will be the limit of government guarantee to the security receipts. Now if this limit is also being crossed, then that means your institution is wrong. Then government has to think of reworking the institution. Institutional issues is there. So this is like a broader limit. Most probably this much of security receipts guarantee will not be required. I think that is for total of NARCL. Go ahead. This is all what we have discussed. The same thing is written here. What is prepacked insolvency resolution process? This is little old. I don't think technical question can come from this. Only those questions can come. What is the basic objective there, like that? What is the point of this? We have IBC, Insolvency and Bankruptcy Code. So under this resolution is happening, then why we need something like this, prepacked? What was the objective of shifting into prepacked?
Because of this COVID crisis, a lot of MSMEs, they were badly impacted.
Exactly. We have this IBC working, it has been working for 4 years, very good. Then came the pandemic. Then pandemic happened, there has been massive impact on, especially on MSMEs. Now if IBC route is used, then what will happen? No, IBC can be used for MSMEs also. Now if IBC route is used for resolution, then what exactly will happen? This very strict method. The control will come to creditors. This group of creditors is exactly controlling the XYZ. समझ में आ रहा है? Group of creditors is company will come into this. They will then finalize the XYZ plan. That means who have taken the loan, who is the original management of the company, they will lose the control of the company very easily. Now if you in a pandemic time, who have taken the loan need some support, need some extra time, need some flexibility in whatever XYZ process we have. To incorporate that, we have this prepacked scheme. Here the who have taken the loan management of the company can keep the ownership of the company. They can make a resolution plan themselves. and they can work it out and make the processes instead of company taking over by management taking over by group of creditors. So they are giving a flexibility to run the company even by relaxing some provisions of the IBC. Okay, too much technical I don't think is required. If you want, you can note it down from here and you can read this. Go ahead. क्या हो गया? All good? Now we have prompt corrective action framework. What is this? Why, where it will be used? When there is a stress in banks, RBI has responsibility to protect the bank, to not create a situation like bank run. So to ensure that, what will happen? Before that situation comes, there should be some standards kept. If this is happening, then banks will be kept under stress is there. Stress is being identified, then banks will be kept under PCA framework. Now this identification has threshold 1, threshold 2, threshold 3. This means there is less number of stress is there. Highest different grades are there. If this is there, the action will be different. If this is there, action will be more stringent, and this is there, action will be extreme will be taken out. And what is these extreme actions? Even all the crediting system of the bank will also be controlled. New branch नहीं खोल सकता, कुछ नहीं खोल सकता, इतना within the limits bank को रखेगा if it is having extreme risk threshold. Now what we have to learn is the basics you understood. It is scheme by RBI. Purpose is to understand the stress level in the banks and keep some precautionary measures. They will exactly threshold levels are there and what action should be taken is the defined. Now what you have to learn from the theoretical or conceptual perspective is what are these different terms. Out of this, first one is CRIR. What is it? No, what exactly the technical term is? Capital risk adjusted ratio. Capital risk adequacy ratio, that is CRIR. Then CET1 is tier 1 bond, tier 1 capital XYZ. That is. Net NPA we already discussed. It is net NPA here it is used, not gross NPA. Wherever you newspaper NPA is falling, all you are seeing is gross NPA. Net NPA is only used in case of we are analyzing the health of the bank. In that case we use this net NPA. Then what is ROA? Rate of return. How much one capital is making, profitability of the bank, that is basically objective of this. So what you have to know is there are 4 different variables that is being analyzed and these are the 4 different variables. If number is changed or any other variable is infused, all this you should have to identify this is wrong. Only these 4 variables are used and these numbers you can forget, don't need to learn too much of this. Go ahead. Now this we will see in detail all of this. Now capital to risk weighted assets ratio. It is also called capital adequacy ratio. What is it exactly? A measure of banks available capital expressed as percentage of banks risk weighted credit exposure. And what is this capital talking about? They are talking about basic equation is this: CAR or CRIR is equal to tier 1 capital of the bank plus tier 2 capital by risk weighted assets. We will see this in detail. Tier 1, at least for now, understand that CRIR we are talking about is tier 1 capital plus tier 2 capital by risk weighted assets. Now what is tier 1 capital? What is tier 1 capital?
These are issued by banks, and it is not the liability of the bank to pay the principal.
You are speaking about additional tier 1 bond, additional tier 1. Tier 1 capital is not directly or not fully related, same. We have different capitals of the bank. Suppose if a bank run like situation happened and bank has this tier 1 capital 100 rupees as tier 1 capital. Now bank can take all this 100 rupees and give it to the bank run situation and address that situation, that risk situation. That means kitna paisa idhar hai, that fully can be used for, if any risky situation come, that can be fully used into addressing the whatever risk bank is facing. In case of tier 2 capital, what it will be? It will be some form of maybe government security, some other investment it will be. Even though it is liquid investment, it may not be not fully available for the bank for addressing whatever the risk if a situation comes the bank is facing. Conceptually clear? If whole of the money can be diverted into addressing the risk, that capital we put it as tier 1, otherwise it is tier 2. Now which all capital come under tier 1? That is core capital, it is also called core capital of the bank. Equity capital, ordinary share capital, intangible assets, audited revenue reserves, all this come under tier 1 capital. Now in tier 2 capital, it will be retained earnings, unaudited reserves, general loss reserves. These are coming under tier 2 capital. Don't overdo over research. This much is fairly enough. These are very technical terms. There is no way UPSC will ask difference between tier 1 and tier 2. But for understanding the overall picture, just understand this. Now the risk weight, the lower part of the equation, that is risk weighted assets. That is, what is assets of the bank? Basic assets of the loan is what? Loans. Now if a loan is given to me and loan is given to some other person, depending on whatever is my credit score or credit worthiness, that risk weight will be assigned to it. Suppose if I am a person who is paying high loan, my weighted weight will be 0.9. That means most of the loan might come back. So this 0.9 of the person can be taken as asset of the bank. If a person is not that much paying the XYZ loan, not having that much of his, there is more risk associated with this. So 0.3 will be taken, 0.3 will be taken out, 0.7 will be his weight. So like that, if you divide all the bank's asset based on however risk they is facing, then you calculate the risk weighted assets, then you divide both these, that is how you are finding CRAR. Now what are the risk bank is facing? Only conceptual knowledge is required here also. What are the risk bank is facing? Bank is basically facing 3 risks. One is operational risk, credit risk and market risk. Credit risk is somebody take the loan from the bank and bhag gaya, वापस नहीं दे दिया. That risk is called credit risk. वापस loan दिया, वापस loan नहीं आ रहा. That is credit risk. Market risk means some market situation happen, forex reserve change हो गया, inflation बढ़ गया, या government ने fiscal deficit कर दिया, ऐसे कुछ करके that is impacting profitability of the bank, that is impacting risk bank का sustainability. That risk is called market risk. Now the third one is operational risk. Operational risk means human error किया, fraud किया, कोई fraud किया, या process risk था. Process risk का example बोलो, नीरव मोदी केस, इसमें वो स्विफ्ट कोई फॉलो नहीं कर रहा था, इसमें वो ब्रांच वाज नॉट रजिस्टर्ड इन दिस स्विफ्ट, बैंक का अकाउंटिंग सिस्टम में रिपोर्टिंग नहीं चल रहा था. So this kind of process risk, fraud, IT risk, human risk, all this will come under operational risk of the banks. Basic conceptual clarity is required, beyond that not too much. Go ahead. Now what is there PCA for NBFC applicable for NBFCs also? It is. There is PCA. This is not same PCA. There will be some technical differences. Numbers will be different. Variables will be different. But PCA is there for NBFCs also. Now what is NBFC PCS? Variables are same. CRAR, Tier 1 ratio and net NPA. Who is not there? ROA is not there. What is ROA? Rate of return or rate of return on assets. That is indicating profitability of the XYZ bank. This is not a part of NBFC PCA framework for NBFCs. Then Baki all same, and we have 3 different thresholds. we have different numbers depending on threshold, you will categorize it. Go ahead. Is there PCA framework for cooperative banks? There is a very similar system for cooperative banks. It is not called PCA, it is called supervisory action framework. That is, supervisory action framework is for urban cooperative banks basically. Same 3 threshold is there, same as NBFCs. There is net NPA, profitability is there. That means rate of return will be there, CRAR is there. Okay. This is maximum number of data you should at least remember. Baki percentages is not required for exam point of view. Go ahead. What is Daksh web portal or web system? बताओ. Daksh सुना नहीं है कभी? ठीक है. NBFCs has to report their compliance report to RBI. Now for reporting this, they made a specialized web system, that is Daksh web system. Very factual information. Go ahead. Basel III norms. What is Basel III norms? Who releases this? BIS. We are not discussing too much into this. You can read, these are very factual information. Similarly, we discussed there is PCA framework, there is different categories. This much amount should be kept as Tier 1 capital. This much same level, specialized standards will be given to it. Okay. What is additional Tier 1 capital? When this was in news? Yes Bank issue was going on, or Yes Bank crisis was going on. It is during that time we had seen this additional Tier 1 capital. What is this exactly? These are perpetual bonds. What does that mean? Exactly, no maturity period is there. These are infinite maturity period loans. Now, what is the issue with infinite? Like this is now we are talking about something economic concept. We cannot keep something as infinite. Some kind of take and this some kind of check and balances should be there. Now, what is check and balances for additional Tier 1? Let's see. They have no maturity. Thus, they are called perpetual bonds. They are riskier than various debt instruments. These can be written off. In case of bank faces financial troubles. Remember Yes Bank fiasco where such bonds has to be written off completely. If it has caused losses to funds holding. Okay. So what is the characteristics of this fund? Even iska interest can be written off. Coupon which we speak about. Bank can decide that coupon nahi de dega. Or bank can even say that principal bhi nahi dega. Into principal cut karega half. Bank has absolute flexibility to play with this bank. Then why should people invest in this? High return it will give. And India mein bank run is a very rare incident. The Yes Bank mein ho gaya, but that is not something which we hear in everyday. So that's why interest is still there. Now what is this infinity? How it is? These bonds have a call option date. Typically once every 5 years. So even though it is an infinite bond, bank can call back this bond after every 5 years. Bank has the flexibility to take that decision. But if an option came like this, its maturity is infinite, then the option is correct. Okay, even though maturity is infinite, there is an option to call back the XYZ bank every 5 years. This gives insurer an option to redeem these bonds. They pay back investors in 5-year framework. Go ahead. These are basic things of additional Tier 1 bond. They are perpetual bonds, but there is a callback period of 5 years. Now what is other thing? They are riskier bonds because bank, if face a risky situation, bank can do anything with this bond. They cannot pay the interest, they cannot pay the principal, they can cut off the principal, they can say ab jao aapko kuch nahi milega. Even that is legal. Still people invest because it is giving high rate of return, and bank run is not such a common phenomenon in India. Go ahead. What is domestically important, systematic important banks? DSIBs. If this collapse, if this institution collapse, its impact will be felt throughout the economy. So what we should do? We should give strict provisions for this bank. Stress assessment है या वो ratios है PCA का. There should be strict assessment. More auditing should be there to these banks. Okay, maybe higher level of credit ratios should be maintained by these banks. All these steps we need to take. So these steps, depending on intensity of these steps were to be taken, we categorize some banks as credit ratio, that CRAR tier 1 capital itna hona chahiye 6 because RBI can give higher percentages for this bank that is declared as domestically systematically important banks. So if an option come, if the statement is inclining that it is, idea of the statement is it improves the sustainability of the bank or improves the performance of the bank, then that bank we put it under that bank, that statement we take it as correct statement. If some statement is there which says that the ratio will be reduced for these banks or more flexibility will be given to this bank, so this flexibility is having some association with sustainability, then that statement will be wrong. That basic concept you should know. Now 3 banks, these banks are not there. Only 3 banks are categorized as a domestically DSIBs right now. That is SBI, ICICI and HDFC Bank. Now another factual information is this bank has a size of over 2% of GDP. Complexity, these are other factors which will be taken into consideration, that is interconnectedness, complexity, size, sustainability, all these factors will be taken into consideration. Now there is another category of domestically systematically important NBFCs. We are not discussing in this class, go ahead and just search about it, otherwise we will discuss it in the next class. There is similar category for NBFCs also. Everything we will do in next class, not now. What is BBB? Bank Board Bureau. Bank, not bank assets. Higher appointments to higher level like CEO or MD, that level of appointments to the higher level banks. That was it was envisaged with that function. It was formed in 2016. It is not, the appointments was not the only function. Selection of chief of the banks, capital raising plans, even operational plans they had, their recommended appointments, they have act as a guide in XYZ actions to be taken. Even in the operations and expansion planning in this aspect also, BBB can give some recommendations. So it was a much powerful body that was created. Now अभी recent development क्या है इसके बारे में? There has been a High Court case and Delhi High Court came with saying that position of general manager and directors or insurance company BBB cannot recommend. इसको invalidate किया because of some legal complications. Now government ने क्या किया? ठीक है, BBB is not doing. Now this organization is doing, FSIB. All same functions, new name, some legal clarification किया है, that is not much important. For our perspective, what BBB is doing, now it is being done by Financial Services Institution Bureau, FSIB. So if a statement come, FSIB is successor of BBB, you take it as absolutely a right statement. Okay, now the BBB is not there, FSIB is the new organization that is in use. Go ahead, functions everything same. Whatever you put right for BBB, put right for FSIB also. It is not statutory, it is executive body. It is come under Ministry of Finance. It come under. Go ahead. What is Swift platform? Will you can send money through Swift platform? Money you have to settle with interbank operation. Swift is only a global interbank messaging platform. Like this is a WhatsApp for banks. Bank has to give information that iska account ko isko de do. That message will be sent through the XYZ platform. Now, what was the recent development? Russia was banned from SWIFT. Now, what will be implication for this? Russian companies will find difficult to do international trading. Baki also same hai. So, rest about SWIFT, you can read the basic facts about it, when it was formed, which organization it is entertained. Is India part of this? India is very much part of this. This you can read from here. So that is end of our banking class. Any issues, any doubts, any confusions? Next class we go with the secondary market, SEBI, insurance, all these sectors. Okay. That's all for now. Thank you so much. Very good morning. So this is our fifth session on economy basically. First 10 sessions we done on science and tech. After that we started the economy. So far what all we covered? Money supply we did in very detail. This bond yield, all these concepts we multiplied times we discussed it. After that banking sector issues, what is going on in the recent past. That part we covered. Today we are going to do macroeconomic concepts. Basically GDP, GNP, NNP, all these factor income, all these concepts. Plus after that next class we will be focusing on fiscal and budgeting aspects of this. Go ahead. And this most of this class will be in a revision format. Like I expect that most of you have gone through this concept. This is like a refresher class, so you can just, if you have any doubts, you can clear it. Otherwise, it's just already what you know, we will be revising it, most of the things. And we'll, if there is any current affairs relevance, we are already adding into these slides. Okay. So first concept is, what is GDP? Give me answer. What is GDP first? Main point is it is a territorial concept. If we take India, whatever goods plus services within a time, that may be 1 year. Within 1 year, whatever is the total value of goods and services that is produced within this territory, then everything we add in GDP. Now what is GNP? If this is the country, this is its citizens. Sometimes it is used as citizens or sometimes it is used as resident. Both it depend on different sources. Both different sources में दोनों दिया है. Like NIOS books has given that citizen is GNP is the gross national product, like total goods and services, monetary value of total goods and services of citizens is holding. There must be difference, but depending on circumstances, both these are used. Resident means 6 months plus. If XYZ person is staying in the country, we are giving this resident status. Now, how is these two related? GDP is equal to GNP equal to GDP plus net factor income from abroad. And what is this component?
factors of production.
Conceptually, like if a foreign person is here, he is producing some goods and services, that will not be added into GNP of India. On the other hand, if any Indian citizen is sitting here, even if he is producing something and he sent the XYZ goods into the country, this will be added to India's GNP. That's the basic concept. We have given this IPL example. If somebody like AB de Villiers, he is coming here for 2 months, he is not a resident of India, he is not a citizen of India. And this guy is earning 18 crore means this 18 crore will be a part of India's GDP, but this 18 crore will not be a part of India's GNP. That we will minus here. On the other hand, yeah, that's all for timing. What is this potential GDP? We already have a mains question on potential GDP. So it's better you should have clarity on this. 20 years, yes. 20 August. 20 mains we had a question on potential GDP. What is it exactly? Yeah. GDP is like goods plus services produce हो रहा है. Goods services कैसे produce होगा? You need capital, you need labor, you need investment, you need every other factors of production should come into picture. If everything is the factors of production is utilized 100%, then that is the maximum potential maximum GDP that can be produced with those resources. That XYZ amount we call as potential GDP. One indicator is 0% unemployment and constant inflation will be a feature of potential GDP. This is a like exactly you will not find any potential GDP. This is a theoretical concept. Now what is GDP gap? That is the difference between potential GDP and what is the actual GDP that is XYZ happening. Okay, go ahead. Let's discuss how GDP calculation is done by different methods. We basically have 3 different methods of GDP calculation. First one is the expenditure method, then we have production method, and third one income method. Now which method is used in India? Batao, which method of GDP calculation is used in India? Actually, main organization doing this all GDP calculation is NSO. NSO is under Ministry of Statistics and Program Implementation. So NSO is engaged in finding or calculation of GDP. NSO calculate GDP on all 3 bases, on expenditure method, on production method, as well as income method. But NSO takes India's official GDP as GDP calculated through production method or gross value added method. At the same time, if you closely observe these Indian GDP figures in different data, different set of newspapers or different set of articles, context what is written, you will find slight variation. Some places it is saying India's official GDP is this. At the same time, the same relevant newspaper or having sources, credible data, at some point is saying India's GDP is having slightly different number. That difference comes because RBI uses RBI in RBI context wherever GDP is there. RBI mentions a GDP calculated by expenditure method. While for all Government of India official purposes, our GDP is production method. But when RBI is citing something, RBI article is publishing, what GDP you are reading is GDP calculated by expenditure method. Ideally, all these should be same, but practically there will be some sort of differences between all of these. Okay, now what is GDP calculated by expenditure method? It is basically having 4 components. What is C? Private consumption. GDP is equal to private consumption plus investment plus government spending plus net factoring or export minus imports. Why we are cancelling the imports? Not exactly. Why we are cancelling in this equation? What we really want? total goods and produces produced within India. Now, if you look at this consumption, consumption means private consumption. Even if a car is imported, it is brought by you, a new car. That amount is going into consumption. Now, now if you don't minus this, it will become double entry. So to avoid this, an import component is subtracted from this. While export component, it is produced in India but consumed in some other XYZ countries. Basic equation you should just remember. And what is any statement is formed, like which is the highest component in India? Not government expenditure. Private consumption is like ruling factor in India's GDP. How much it is? 140 lakh crore. This is 2011, 21, 22 figures. So it is around 140 lakh crores. That is the major component of India's. It fairly remains high and throughout here, but there are variations. There are like internal variations also. There was another mains question like tier 2 cities. Last year, if you have noticed, tier 2 cities ka ek question tha. Why that question is coming? Because there was so much editorials on what? Major of India's private consumption post-COVID is coming from tier 2 cities, because tier 1 cities are already saturated, and rural areas consumption, sometimes editorials comes on this. So you cannot totally neglect this. This has internal dynamics, this has certain XYZ dynamics related to it. So 236 lakh crore, this is roughly India's GDP. GDP by expenditure method will give you the consumer side picture. What does that mean? Everything this is like either you consume the product that is being ordered, or you made the investment into some XYZ product cycle that is being used. When this GDP will be market cost or factor cost? This GDP you are getting here will be at market price or factor cost? This will be at market price. How it is related? GDP at market price and factor cost? GDP at market price equal to GDP at factor cost plus net indirect plus, that is plus taxes minus subsidies. Now there is a component like 140 is the consumption, 66 is net investment in the economy, 26 is government expenditure or government spending, 5 is minus 5 is export minus imports. What is this 0.4? You can say statistical difference, or otherwise you can say like whatever the all consumption is happening in the economy may not be captured in this XYZ exercise. Some may be done using black money, some may be done using barter system like system. So that expenditures will not be captured into this. So accounting that, we had this discrepancy in calculation of GDP by expenditure method. All clear? Let's go ahead. Now next is GDP calculation by production method. What is the difference in it? Here gross value of the gross value added is the major dynamics. What is gross value added technically? Gross value added means if you buy 100 rupees ka ek product, then you processed it. You change the shape, you made a new product out of it and you sold it at 1000 rupees. Now gross value added in this process is 900 rupees. Now if you want to find the total GDP of the economy or total goods and services product produced, you will take all the companies in the country producing any XYZ goods, then how much gross value each company is adding, that you calculate, then its summation will give you gross GVA or GDP by production method. Clear? Then this is calculated by NSO. This is India's official GDP figures also. Now the income method. What is income method? Similarly, we have how these XYZ resources are getting distributed. which include wages plus interest plus profit plus rent. All this, if you calculate all this summation of all this in the economy, you will get the same GDP figures. This is like slightly lesser important compared to the expenditure method and production method. Go ahead. No, nothing is there. Wages, interest, only this factors needed for producing XYZ goods, that is only calculated.
GDP and market price.
GDP and market price it will be. Go ahead. Now you should be very clear with the relation between GDP, GNP, market price, factor cost and all this. What is relation between GDP, GNP, GDP? We already told what is the physical meaning of it. Now how you calculate it? GNP is equal to GDP plus net factor income from abroad. So G D to N, that is the relation, net factor income. Now if you want to take GNP, NNP out of this, that is net national product out of GNP. What is the relation? GNP minus depreciation. What is depreciation here? Any capital assets that is being used in the economy, over the time there will be depreciation losses. If you minus that usage losses out of this component, you will get GNP, you will get net national product. Now if you want to connect factor cost and market price, what is the relation of GDP, GVA, anything? Relation is market price equal to factor cost plus net indirect taxes or taxes minus subsidies. Now net national product at factor cost is the India's national income of India. If you want to find per capita income, net national product at factor cost by divided by population it will be. What else? What is national disposable income? Into this NNP at factor cost, that is India's national income. Into this, if you add the current transfers from rest of the world, that is like remittances, gifts, this will add into net disposable income. There is one more question, what is personal disposable income? There has been a question asked on this also, not in UPSC but in UPSC conducting other exams. What is this personal disposable income? If you subtract the taxes as well as non-tax payments, like some fines is there, you are paying XYZ to government due to any XYZ reason. If you subtract both of these, you will get net personal income. Clear? At least you should be very clear with how is GDP, GNP related, NNP, GNP, all these related, then factor cost and market price. MCQs can come on these equations, statement based on these.
Personal disposable income is calculated from person to person.
Yes. It can be for economy per person also. Go ahead. Now what is GDP deflator?
The inflation rate in the previous year.
It tells you it is an indicator of inflation. What are other indicators of inflation? That is WPI, CPI and all these indicators. And what is the major difference between this basket based indicators and GDP deflator? I think we have a slide here. Major difference is GDP deflator contains GDP, that means all goods and services produced in the economy is captured in GDP deflated value, whatever you are getting. At the same time, if you are looking at CPI, it will be having a selected basket. That basket will also be changing for rural, for urban, for overall India. All this it is changing. So for CPI, it is a small basket. For WPI, if you look, even it is a basket, but it is only for service goods. Such services are not even included in this. So GDP is much broader concept. What is the issue with GDP deflator? Quarterly it is available. Otherwise, all other indicators we are available monthly. And what is other issue? Why we are not focusing any policy focus on GDP deflator compared to CPI or WPI other indices? Delay is one aspect of it. What is the other reason? What can be the other reason why GDP deflator is nowhere getting that much of importance in policy decision making? Or everywhere you use CPI, and if there is a production perspective, we use WPI. For policy making, we need selected how it is impacting. Like if inflation is happening, we need to know how it is impacting households, how it is impacting different regions of the country, how it is impacting middle class or upper class or lower class, where this inflation is coming. All this internal dynamics you only get from CPI and other indices. GDP deflator can only give you a broad figure that is common for all economy. Now, what exactly is GDP deflator? Nominal GDP by real GDP, and that is GDP deflator. What is nominal GDP and what is real GDP? Nominal GDP is sum total of in a year valued at current prices. What is real GDP? Predetermined base market price. What is the difference between this? Here, if suppose X is the price in a 1 year. Now after 1 year, here we look, it will be X plus kitna price rise hua plus inflation. Nominal GDP will have this inflation component. If we can delete this inflation component, we will know real GDP growth or real value. That is the XYZ price rise due to inflation, we are deleting from this. So if economy, suppose 100 is the value of economy right now, after 1 year it become 120. Now this 120 means 20% your economy grew. Now where this 20% came from? If at the same time there is 20% inflation, means your real growth is 0. You have exactly not achieved any growth in increase in goods and services. All your growth is coming from simply price rise. So this is what nominal GDP and real GDP will capture. Nominal GDP will have the inflation component, real GDP will not have this inflation component. Now you convert with a base year into, put in the formula, you will get the XYZ. What is base year for this GDP deflator? IIP, that what is it? Industrial Production Index. For all this, base year is 2011. Whereas for CPI, the base year is 2012. That is very factual data. Yes, we will have a discussion. Nominal GDP doesn't take inflation into account. Like we told that 100 is there, 120 ho gaya. Nominal GDP growth is 20%. Doesn't care how much is the inflation. Now if you want to, from this 20%, you have to find real inflation or real GDP growth. What you will do? 20% minus inflation. Inflation को आपका काटेगा. Suppose inflation is 10%, then real GDP growth is 10% and nominal GDP growth is 20%. It doesn't change whatever is the inflation. Here अगर inflation 10 के ऊपर है, real GDP growth will decrease. Any other current market price, base year market price, it is much higher. It will be nominal, will be obviously higher because inflation component is there. It will be lower. It can be compared with other quarters. You can read from this and understand basic concepts only. Go ahead. Now what is pent up demand? What exactly is recession? Technical recession, when we call recession has happened? When there is negative GDP is shrinking. Not for 2 financial year, for 2 quarters. 2 continuous quarters, if GDP of a country or a state or anything is shrinking, then we call as technical recession has happened. Now, what is pent up demand? This we observed during this pandemic time. What exactly is pent up demand? Exactly. Economy was in motion, then recession happened. Then क्या हो गया? People consumption and investment component in the economy dried up. People were not consuming anything, either they don't have the money or they think it is not right time to make any investment. So due to this reason, consumption and savings investment dried up in the economy. Now after the pandemic and also after the pandemic, so people are not doing any consumption or any investment. So what they will do with XYZ money they are earning? They are saving it. Now after the recession ends, what they will do? They have this surplus money which they have not been saving. They were thinking they will need emergency requirements or job loss ho gaya to kam aayega. But when recession ends, their job is safe. People start spending this extra amount. Whatever they saved during the recession or bad time, people start spending extra. That will give a push to the private consumption component. This extra push we call it as pent up demand. This was one reason for this higher growth we will see in after this pandemic period. What was other reason why this pandemic period numbers were exaggerated? Post pandemic base year effect or base effect. What is base effect? I think we will see this slide in the later part of this. Go ahead. Now what is hysteresis? Hysteresis in economy. What is technical meaning of hysteresis? Not uncertainty. If some incident happened, now if it leaves, if after the factors that caused this incident were finished, even after factors caused this XYZ incident finished, there is some memory of this incident pending, or there is some characteristics that this incident has brought into the system that is not drying up. This kind of phenomenon we call it as hysteresis. In pandemic, what happened? In pandemic happened, people national output or people consumption has severely dropped. Now in this time, this drop you can see like pandemic period. Now by reaching here, the pandemic factors are over. Now there is no lockdown, there is no such XYZ related to pandemic. Still the growth is not reaching the previous levels. Growth is like people are not spending too much. People have acquired some characteristics. Maybe some people skill gap happened. People doesn't got into education during this time. People lost this school education during this time. Due to all these factors, the how much there was output in the economy, that output is not picking up even after the pandemic has vanished. So these kind of events or incidents we call it as hysteresis effect in the economy. Go ahead. These are all different factors that cause this economy. You can read these ones. Loss of skills, long-term unemployment, cutback in investment, outdated technology, potential falls, all this. Go ahead. What is green GDP? We solved a question also in last Saturday. What is green GDP? Green GDP is more important to know what is not green GDP. Green GDP is not your investment in green assets or renewable energy or any of these. Green GDP is GDP minus the value of environmental degradation you have cost for generating this GDP minus PP. What it is? Pollution effects. For pollution effects, however, whatever is the degradation or pollution monetary value that is issues that is created, if you subtract these two components from this your nominal GDP value, you will get the green GDP of the country. We are not considering value of environment, we are considering value of degradation that is caused. That is, if forest is cut down, then wo cut down part only you are considering, not the economic value of all the forest. Or if some CO2 is emitted, then what is the monetary cost of this CO2 it can disturb, kitna create kar sakta hai, only that part is subtracted from your GDP. Why we are discussing this? Because there has been a RBI report citing that over the decades, India's green GDP is growing faster than India's normal GDP. That is one reason. Second reason, Uttarakhand becomes country's first state to calculate gross environmental product. What is gross environmental product now? Suppose we take the example of forest itself. What all services forest provide? Minor, like wood will be there. Some people will be collecting wood and using it as fuel. Timber will be coming from this. Medicines may be coming from this. Honey will be coming from this. So many products we are getting from forest. If we combine all this monetary value of all the services provided by any environmental component, that summation is called gross environmental product. Here you have a broader figure, something related to GDP. But if a question came on green GDP, you should be very clear with what its conceptual definition is. Go ahead. What is Kuznets curve? Kuznets curve is the relation between level of environmental degradation and level of development or GDP per capita. What it says? At initial levels of development, you increase your per capita income or you increase your standard of living or living level of development. This increase in development will be associated with increase in environmental problems, increase in CO2 emissions, increase in all these pollution factors. Which phase India is in? India is still in this climbing phase. Now, after reaching a point, after reaching a turning point, you can say, after reaching that point only your graph starts changing. You reached a huge level of economic development. That is, your per capita GDP reached a certain level, then only you acquired different skill set in different technologies, then only this environmental impact XYZ will start falling. How do you categorize a country into developing, developed and underdeveloped? What are the basic elements of this categorization? One is GDP per capita. If it is around above $1,200, it will be considered as developing country. If it is less than this, it will be considered as least developed countries. Now around something 12,000 some mark is there. If it is above that, that is considered as developed or advanced countries. This is GDP per capita is one indicator, but not the whole indicator. What is the second part of it? Structure of GDP. Structure of GDP, what it includes? Structure of GDP means how much of your population is engaged in agriculture, how much of your population is engaged in manufacturing and services. You need, if you want to be an advanced country, you need your structure of GDP to be diversified. And how much of India's population is engaged in agriculture? Around 45%. And how much is the GDP it is generating? Around 16, 17, maximum 18%. So this amount of population is engaged in only producing 18% of the GDP. And what is the issue in this? See, 45% of the population is producing only 18% of the GDP means this population is productivity is very less. Now what is issue with when productivity is very less? Productivity is very less means your income will not grow. You are working 24 hours, still your if productivity is low, 45% of our population is working in agriculture, and agriculture is only 18% of your GDP. So there is productivity issues in Indian economy. One reason is because a considerable population is engaged in agriculture. Go ahead. What is gross fixed capital formation rate?
Net addition in the physical asset.
What is capital investments means? Or capital spending, capital expenditure, what does this whole concept is? Anything that is expenditure हो गया that result in formation of some asset. If asset generation is happened, we call it as capital investment or capital expenditure, and next class also we will discuss this in detail. So gross total economy में कितना capital investment हो रहा है divided by GDP, that is the gross fixed capital formation rate. And what is its status in right now in India? There has been a point of slump during this pandemic. After that, it is slightly picking up. Around 30% is the rough figure of capital formation in India. Now, why this is increasing? Savings are increased. Government is pushing too much of capital investment. Yes, yes. If you look at the budget, there is graph showing in 5 years, 2 times increase happened in India's government capital investments. Go ahead. What is incremental capital output ratio? It is a relationship between level of investment in consequence increase in GDP. What does that mean? If suppose 100 is the GDP figure, now if I need to make my GDP figure 101, now to make my GDP figure 101, how much investment I should add? How much more investment I should add into this economy? That is incremental capital output ratio. There has been a PYQ statement on this. What was the basic factor you need to understand in this? Higher the investment or higher this ICOR, that means you to increase one GDP you need to invest more money. That means efficiency in your economy is less. Okay. High IOCR means you need to give more investment to generate one more GDP. One more output if you need to generate, you need to invest more. Now, if you need to invest more means what? Your efficiency is less. If some other economy is by putting half of this amount, if it is generating one more output, then that economy is much more efficient than yours. These are inversely related, efficiency of the economy and ICOR or incremental capital output ratio. Go ahead. Investment versus saving, which one is more important for the economy? Don't read all this. Tell me which one is more important for the economy? Why saving?
Propagates into investment.
You're saying saving will lead to investment. What is your answer? You are saying investment. Why investment is more important? Investment will create more opportunity. How investment will create more opportunity for the economy? Yes, if you are investing some money in some capital goods or some you made factory, there will be job creation, there will be output generation out of this. Good. Economic survey 2019, I guess. These are detailedly done the analysis, which one is more important, investment or economic savings. And what was its conclusion? Investment is more important. If you want growth to boost up, give more investment in the economy. Why investment? Because if you look at the saving is a short-term activity. Like you save for some near term expenditure. To meeting after 1 year, you need to buy something, you save that. That is the attitude of saving. While investment means you are long term putting something. Even if you are putting it in, say, invest this infrastructure bonds, then that money is used for building some infrastructure. Some output is directly coming out of this. Then all this is a low risk, low return option. Here it is a high risk, high return option. So all this will lead to more generation of GDP growth. Ultimately, investment is much, if you want to boost the economic output, investment is the more important factor. Go ahead. Growth versus development. What is the difference? What is economic growth and what is economic development? Growth is a quantitative figure. How we measure this quantity? Through all this GDP, through all these methods. Income of the people or personal income we discussed, unemployment, inflation, growth, all these are different indicators of GDP growth or economic growth. Now, what is the difference between economic growth indicators and economic development indicators? Here the focus is not just on expansion. Here focus is only on expansion. Here focus is on expansion plus empowerment. Empowerment means you are making the stakeholders capable of doing more. You are producing 100, at the same time you are producing 100 and making the stakeholders capable of producing much more. And how do you do this? You give them better quality of life. You give them better human index, human development index. That means you give them better access to education, better healthcare facilities, better range of different variables. All these faculties you provide to the citizens and other stakeholders, so that their ability to produce XYZ will increase. Now, what is general indicator of economic development? That is UNDP's. UNDP is what? Human Development HDI. Go ahead. Human Development Index I am not covering here, we covered in many classes. You go through details of this, every 10 indicators, which are different indicators, what is the weightage of this, everything revise. Go ahead. Now, what is the relation between inflation, disinflation and deflation? Inflation, you know, consistent rise in general price level in the economy is inflation. You can see this in the positive side of this. Now, disinflation means, keyword is there is inflation in this term also. That means price is still increasing. Here maybe in 1 month 10 to 20 it increase. Here it may be not increasing 20 to 30, but here maybe it is increasing to 24. In inflation 10 to 20 increase hua in a specific period of time. If disinflation is happening, it is still increasing, but the rate of increase is decreased. That is 10, 20 to 30 nahi ho raha hai, 20 to 24 ho raha hai. Still the price is going up only. That is this yellow stage. Now, if price level is going down, then that we will call as deflation. Why deflation is so bad to the economy? We already learned that what is GDP? Consumption, private consumption plus investment plus government plus X minus M. Now, major component is private consumption. Now, suppose I can buy this pen for today at 10 rupees. I know that if I wait 1 more month, I will get this for 8 rupees. I wait for 2 months, I will get the same pen for 8 rupees, because there is deflation in the economy. Now, if I wait again, I will 2 months, may get this for 7 rupees, because economy is having deflation. Then what will be my tendency? Just don't buy now, just wait. We'll wait price to fall a little bit more, then we will buy. So this mentality will be throughout circulating in the economy. And what it collectively lead to? Complete disruption of consumption, private consumption. If private consumption is destroyed, you know, more than half of India's GDP is coming from there only. If it is that is disrupted, means whole GDP we will fall in the economy. That's why we say some inflation, like even RBI's monetary policy is saying 4% inflation should be there for economy to sustainably grow. Go ahead. What is neutral or natural rate of inflation? We already discussed, like lower level of inflation or going into a deflation zone is very detrimental for the sustainability of the economy. At the same time, very high inflation means what will happen? Very high inflation means purchasing power of your purchasing power of whatever currency is there, that will destroy. Purchasing power is lost means all your money in the savings, all your money in the other instruments will be affected. So higher inflation is so much again bad for the economy. At the same time, if you go to reflection, that is also bad for the economy. So there is a neutral figure somewhere in the between where there is a state of equilibrium, stable inflation and full employment can be achieved. That level of inflation we call it as, or interest we call it as, natural rate of interest. It is after finding or assuming a natural rate of interest, monetary policy will be decided. If there is higher inflation, then monetary policy will set interest above this natural interest rate, so that money supply will shrink and so inflation can be controlled. At the same time, if inflation is low in the economy, we need to increase the money supply. So we will put our bank rate or repo rate above this natural or neutral rate of interest. Go ahead. What are different types of inflation? Demand pull inflation. What does it mean? In a market economy, a price of every goods is decided by demand and supply. If demand is much more than the supply can provide, that leads to demand pull inflation. Give me an example. Pandemic, like even masks were being sold for 25 rupees unless government put it is under the Essential Commodities Act. So, and if you put in as Essential Commodities Act, even though there is demand shortage or whatever, you can only sell it for this much price. There is price regulation over it. So demand pull, if price rise is coming from the demand side, we call it as demand pull inflation. Cost push inflation, what it is? If any product, what are the factors of its production? That is, rent is there, profit is there, investment, interest is there, that is profit. Wages is there. If this is cost of production, if any of this component or all of this component are increasing, that is creating the inflation, that we call it as cost push inflation. What is profit push inflation? So this component only profit motive से price rise हो रहा है. Where this will happen? Best example is OPEC countries. What Saudi Arabia does? There has been a recent development on this. Remember, Saudi Arabian oil is one of the most expensive oil in the oil market, and India is not. Even though India is buying so much oil from this, India is not interested in buying too much of this expensive oil because India has other alternatives right now. Now what happened is, why Saudi Arabia oil is too much expensive? One reason is Saudi Arabia is controlling the supply. Saudi Arabia is producing less than its stated capacity. Now if it is producing less, then what is happening? They are controlling the supply so that they get the price what they wanted in the market. So this is the best example of profit push inflation. Where other sectors it can happen, where there is monopoly, where there is only one company. Suppose railways is only there. Tomorrow railway decided we need to make more profit, then they increase the cost by 20%. Nothing can be done. There is only railways that can provide these inter-country services. So people are too much dependent on this. So this kind of situation can also lead to profit push inflation. Monetary inflation, what it is? This also we discussed in detail. If printing of more money is leading to inflation, that we call it as monetary inflation. Built-in inflation, a wage price serve inflationary spiral. What does it mean? Suppose cost of products in the market is increasing, food items are becoming expensive, then these employees will not be able to get these goods and services. So what they will do, they will go to their employer and say we need higher prices. And if employer is giving them higher prices, that higher prices will be reflecting back in goods and services in the economy. If goods and services are getting expensive, that means wages has to be made adjusted according to it. So this inflationary spiral will go on. This type of inflation we call it as built-in inflation. What is stagflation now? Stagflation is high inflation plus high unemployment plus high growth. You get high growth, that high growth will be only nominal growth. Real growth will be extremely low or even zero also. This high growth you are speaking here will be only nominal growth. This high growth is coming from high inflation component only, most of the high growth. Such a situation we call it as stagflation. High employment, high unemployment, high inflation coupled with high growth rate. Skewflation. What is skewflation? If in we'll talk this later. What is skewflation? Yes, if one XYZ component or a small group of commodities is creating inflation in the economy, that kind of inflation we call it as skewflation. Where you will find this? Petrol prices rises, or wheat prices, wheat XYZ production crashes and wheat is becoming expensive, it gets reflected in other parts. Headline inflation. What is headline inflation? Whichever inflation figure is your major policy tool, that inflation is called headline inflation. In India it is CPI combined. Core inflation, what is it? From this headline inflation, you are cancelling out the vulnerable or highly fluctuating components. Which are these highly fluctuating components? Food items and fuel. If you are avoiding food and energy components out of your headline inflation, you will get core inflation. Now there is a new concept also of refined core inflation. What is it? Even after you avoid this food and energy, in transport sector is dependent on energy prices too much. So this transport sector component will still get reflected in the CPI or CPI core inflation. So you cancel out the transport impact of fuel or energy price rise in transport and communication sector also. That also if you cancel out, you will get the refined core inflation. Only basic questions can come. उस time confused नहीं होना है. This much is the maximum level of knowledge you need to know. High inflation है. We'll take up this later. Go ahead. Yes, right. You asked in the exam, right? Okay. Answer this question. (2021) prelims question. Very simple question. They're like, if you just know the basics, you should not miss out this. Tell me how to approach this. With reference to Indian economy, demand pull inflation can be caused or increased by which of the following? Demand pull inflation means demand is increasing, this higher demand is causing inflation. Now higher demand is there, tell me 100%, pick 100% right or wrong options. First one is expansionary policies. More money is there, it can lead to more demand possibly. Fiscal stimulus is there, same effect. Government is spending more, we know GDP figures can get exaggerated. Inflation indexing wages. And suppose I am confused, I am not aware of. Higher purchasing power. Higher purchasing power means what happened? Value of money become very high. Like 100 rupees, if you can buy 100 barrel of crude oil pehle, now with 100 rupees you can buy 110 barrel of crude oil. So you will consume more. Consume more means what? Demand will go up. So 4 is one option which I am 100% sure that it should be in my answer. Now let me eliminate some of. इसमें 4 नहीं है. I cut out the C. Now rising interest rates. Rising interest rates कब होगा? Inflation नीचे करने के लिए होता है. This cannot cause inflation. Demand pull छोड़ दो. Rising interest rate mean it is a policy to shrink the money supply and control the inflation. Whatever in situation, it cannot lead to inflation. So this should not be there in my answer. Cancel out this, cancel out this. I got 1, 2 and 4. At least इतना clarity आपको सभी में होना चाहिए. Very simple basic question. Go ahead. You have to search it out. Base effect. What is base effect?
Base effect is the impact of price level, the previous year price level on the coming.
In pandemic time, what happened? 2020, suppose India's GDP is 100. Now, sorry, 2019, suppose India's GDP is 100. Now in 20, pandemic happened. Suppose India's GDP fall into 80. Now in 21, suppose pandemic ended. Now our GDP just grow into 88. Even though like compared to previous levels, we nowhere near the previous levels. We are like 12% less than the previous level. But if you look at the GDP growth, that is compared between adjacent times. So 80 from 88 means you have 10% growth. This 10% why it is coming? Because GDP growth का नीचे figure होता है पहले 2020 GDP. So 20 GDP is considerably lower means your GDP growth will be like in numbers it will be exaggerated. This it can be vice versa also. This change in GDP numbers due to this changes in the substantial changes in the previous year, that effect we call it as base effect. Rest you can read from here. This is the formula for finding base effect or inflation rate. Now what is one more thing we need to clarify? What is the effects of inflation on different stakeholders? What is effect of inflation on borrowers?
They are dropping.
Suppose I need to pay you 100 rupees. Now the value of after 1 year I am paying you 10% inflation was there. Now after 1 year this 100 rupees having 10, I can only buy 10% less goods with this. So technically I am paying you only 90 rupees at the base price if I am giving you 100 rupees. So borrowers are at profit. Now what about lenders? Lenders is having vice versa situation. They are at loss. Fixed income group, they are the worst affected group, we will say. Why worst affected? Because their salary will only increase after 5 years or 10 years margin. Now within this margin all this inflation will reduce their purchasing power or reduce their personal income. disposable income will be shrinking throughout this time. Now, what is the effect of inflation on exchange rate? Think karo, what is effect of inflation on exchange rate?
To buy same amount of petrol, you need to give more amount of money. So the dollar demand will increase and the demand will decrease. Yes, dollar demand will increase. Depreciation हो जाएगा.
Depreciation ही होएगा. What is happening? Inflation हो रहा means purchasing power decreases. Purchasing power decreases means to get the same amount of dollars, you need to spend so much of rupees. Overall, you are pushing up the demand of the dollar. Demand of the dollar is pushing means dollar will go high. That means eventually rupee will fall down. Now let's look at some of the batao. हो गया? Now we'll look at a fair look on different major inflation indices. What are the major inflation indices? CPI we have rural, urban and all India level. After that there is CPI industrial workers also. Now who is publishing this CPI rural, urban and industrial level? NSO, which is under Ministry of Statistics and Program Implementation. Base year is 2022. Which component has the highest weightage? Food and beverages. This is a consumer perspective. Now goods and services both are included in this. Indirect taxes are also part of this. That means goods plus taxes in the economy, this combined rate kitna upar ja raha hai, that figure you will get from CPI values. Now consumer food price index, CFPI. This is also an index released by NSO. Base year is 2012. It will capture only food prices. What next? CPI industrial workers released by Labor Bureau. Base year is 2016. CPI rural laborers, agri laborers released by Labor Bureau. Base year is 1986. This is not, government is planning to change this to 2019. Now wage rate index, that is also another report by indexed by Labor Bureau. Base year is 2016. It monitors wage across different industries like IT sector में क्या range चल रहा है, क्या wage चल रहा है, manufacturing construction industry sector में क्या wage चल रहा है. Different sector wise wage it will be captured. WPI, who is publishing WPI? Office of Economic Advisor under Ministry of Commerce and Industry. Base year is 2011. Highest weightage is for manufacturing sector. Most important point, services are not included and indirect taxes are not part of it. So I am asking you, if only government increases the taxes, indirect taxes or GST by 10%, which inflation component it will be most affected? CPI or WPI? CPI it will be more impacted because there is direct influence of taxes within CPI. While WPI also impact will be there, but the direct consequence will not be there. Go ahead. What is IIP and index of 8 core industries? IIP is a survey again published by NSO. Base year is 2011. Most highest weightage is for primary goods. At the same time, 8 major industries means it is published by Office of Economic Advisor, Ministry of Commerce and Industry, and this is the weightage level of this. Highest weightage is for refinery products, lowest is for fertilizers. What is doom loop? One part of the economy, some XYZ thing happened. One part of the economy, some crash happened. It will have multiplied impact on other part of these economies. These kind of impacts we generally call it as doom loop, like bank failure in USA. It is having some kind of impacts in throughout the world. Or pandemic related Chinese. What happened in recent phase of pandemic? China was facing the heat of pandemic and Chinese production has fallen. And this has loosened the cushion for so many other countries. Even during the peak of pandemic time, China was growing. So that cushion was taken out from the world during this later phase of it. So that's the end of today's class. What we basically covered is macroeconomic variables, GDP's different dynamics, then inflation, how XYZ it is impacting, then some of the recent developments, recent key terms that is in news. These elements we have covered in this class. Next class we are going to do fiscal policy and budgeting aspects. Not exactly budget, this year's budget, but basic concepts related to budgeting aspects and recent developments associated with it. That's all for now. Thank you so much. Very good morning. Welcome back again to the 16th session of current affairs sessions we are conducting. So in the last class we have discussed on macroeconomic aspects, GDP, GNP, inflation, and some of the new concept that is in news. This class we are going to focus on fiscal policy and budgeting. Don't waste too much time. Let's get started. So what is a major budget related funds in India? Very factual information. We have Consolidated Fund of India, Public Account of India, and Contingency Fund of India. What is the characteristics of this? All these are constitutionally mentioned funds. Consolidated Fund of India means that is the operating account of India. All taxes that Indian government is collecting, all money Indian government is borrowing will go into Consolidated Fund of India. Then for whatever expenses government has, from there it will be redistributed. And for this redistribution, approval of the parliament is required. That is Consolidated Fund of India, Article 266 it is. Now the second one is Public Account of India. Same article, this inside article number will vary. This is for all the accounts, all the funds where government act as a banker. Like government is collecting fund for provident fund, small saving fund, postal deposits, all this will come under Public Account of India. Parliament permission is not necessary for expenditure on this. Executive can do the expenditure from this. Third fund is the Contingency Fund of India, Article 267. This is held by Finance Secretary on behalf of President. This is for unforeseen any expenses came, the fund will be utilized for this. Parliament approval is required, but not for expenditure. Executive can spend this money. After that, approval may be taken from the Parliament. Go ahead. Let's discuss some of the stages, different stages in passing the budget. We have 6 different stages. Presentation of budget, that will be done by Finance Minister. On which date? 1st of February. Earlier it was done in last week of February. Why it was shifted here? If it is coming in the last week of February, for all the process to happen, then this next financial will be already starting. So to avoid this mismatch, we have shifted it to 1st of February from now on. Now there will be general discussion in the Parliament on the budget. There will be scrutiny by different departmental committees, voting on demands for grants, cut motions, and guillotine. What is guillotine? Like 20% of the budget will be by different sections. It will be taken for voting, and different cut motions will be passed. Now rest of the budget it will be put all under one section, and one single voting will be done. Such process we call it as guillotine. Now passing of appropriation bill will be there, and last stage is passing of finance bill. Finance bill is what the Finance Act give executive the power to take money from Consolidated Fund of India. Go ahead. What is budget receipts? Budget receipts generally we can classify into two sections, revenue receipts and capital receipts. Same concept, capital receipt means there will be creation of some assets. That is recovery of loans. If a loan is there, if some changes is happening in the principal, that will come under capital receipts. If the interest component will come under revenue receipts. Now disinvestment, borrowings, provident fund, all this will go under capital receipts of the budget. In revenue receipts, we have again two components, that is tax receipt and non-tax receipt. In tax also there is two components, direct taxes and indirect taxes. Indirect taxes best example is GST. Direct tax best example is income tax. So all other taxes also come into this direct tax category, like income tax, corporate tax, wealth tax, gift tax, all this. Now sales tax, custom duty, excise duty, service duty, all these are part of indirect taxes. All these are part of tax revenue of the under revenue receipts. Now non-tax revenue means it is interest receipts. If a loan is given by the bank that is getting receipts, it goes into it. Profit and dividends coming out of these PSUs and other government companies, fees and fines, external grants, special assessment tax or something like that, all this will come under non-tax revenue. Go ahead. Next we have direct versus indirect taxes. What is the major difference? Yes, incidence of tax means where it is collected. Impact of tax means who is ultimately paying this tax. Now for a direct tax you think in terms of income tax. Where it is collected? It is collected from the salary of XYZ person. So income tax assessee is the point of incidence. Now from whom this tax is collected? The same person. My salary is collected. My salary is the point of incidence, and from the money is also given by me. So both these are on same person. Incidence and impact will be on same person on direct tax. Indirect tax means if you are selling GST, who will give, in most cases, who will be filing the GST? The shopkeeper. So the incidence is shopkeeper or the seller, but the amount will be collected from the buyer, consumer. So the consumer will be impact of whatever the taxes. So this will not be, the incidence and impact will not be on same person in the indirect taxes. Now what is proportional tax? Proportional taxation means if your income is low, you pay low tax. As your income rises, your rate of tax you have to pay increases. Best example is income tax. For within 5 lakh you have a branch of 5%. Okay, we are discussing of progressive taxation. We are discussing all this on progressive taxation. Income tax is the best example. Like salary increases from 0% to 30%, the tax rate increases with increase in salary. If you are salaried about 12 lakh means you are having 30% income tax bracket you will come, otherwise you will be in 5%, 0%. No proportional taxation means
Whatever the income tax rate is same.
tax rate remains like 10% of whatever it is, irrespective of income and other factors. Regressive means increasing income, tax rate will be somewhere decreasing. This kind of taxation we call it as regressive taxation. Go ahead. Cess and surcharge, what is the difference? Both of these are tax on tax. The major difference is, yes, surcharge will not have any defined objective. Cess will have defined objective. Like health cess means that amount will be spent exactly for this. GST compensation cess means GST compensation cess will be spent exactly for this purpose. So exact clear objective will be there for cess. There will be, it is a tax on tax, compensation tax. This fund will go to CFI, Consolidated Fund of India. From there it will go to public account. From there it will be used for XYZ defined purposes. Here the fund will go to consolidated from Fund of India, not shared, may not be shared with states. But how it is used, that objective is the prerogative of the government. It may not be clearly defined as case of the cess. Cess may be shared, may not be shared, like depending on purpose of XYZ it is. Now what is equalization levy or Google tax? पहले this Google में AdSense, what AdSense does? If you are using Google services like YouTube, they will show the ads. Now you see in the ad, you may be seeing the ad of XYZ company that is based in India. Suppose you see ad of Flipkart. Suppose this company is an Indian company, you see this ad on YouTube services. Now YouTube is पहले YouTube, what YouTube was saying? We don't have any physical presence in India, so we are not supposed to pay any taxes in India. And YouTube will not pay any taxes in India. YouTube will be paying taxes in its parent country or any other country. Now what is problem with this? The base business is generated from India. Whatever the business that happened in this is generated from India. If any economy or business is being generated from India, then XYZ is supposed to pay taxes in India. So with this principle, India came up with equalization levy. How much was it? 6% it was. It is not a part of income tax and corporation tax. This was also a PYQs, 2018 I guess. It was a part of corporation income tax, it was given. DTA, what is DTA? Double taxation avoidance agreement. It is not applicable in this case. Budget 2016 it was released or came into being. 6% equalization levy and foreign advertisement companies like Google, AdSense, Facebook, digital ads, etc. Now in 2020 budget, we expanded this equalization levy concept into e-commerce industry also. 2% equalization levy on foreign companies engaged in equalization e-commerce industry. Now India is not the only country doing this taxation. Other countries are also a part of it. Like France came up with a GAFA tax. GAFA is basically like Google, Apple, Facebook, Amazon. For this MNCs, bigger MNCs, digital MNCs, they have put this GAFA tax by France. Go ahead. What is the result development? After India and other countries started putting digital taxes, mostly the advanced countries, that is the G7 countries, they came together and they came up with a proposal like there should be a sovereign ban. Sovereign ban means countries should not club and put the digital services tax. So if India cooperate with this, India will have to take out this India's equalization levy and all. And what was India's stance? India is clubbed with a similar arranged countries, similar thinking countries like Group of 24. Group of 24 actively promoting that equalization levy should be a part of the XYZ regime. Now, Group of 24, it was established in 1971. It is a part of subgroup within Group of 77. No, it is established by Group of 77, not a subgroup. The rest of India is a member. Secretariat, it is based in Washington, DC. Go ahead. Why this organization is in use? Because of this equalization levy concept. Digital taxation. What is presumptive taxation? Like taxation itself is a complex process. You have to file it. You have sometimes TDS will be cut out of your XYZ revenues. Then you have to file it. Then you will get the rebate and all this. This is a very complex process. So people may not have this awareness or time or resources to do all this. So for those kind of people, we have presumptive taxation. Like for businesses having less than 2 crore turnover, they can go with a 8% of gross turnover receipts, 6% of digital receipts. So that here they don't need to do any other calculation. They don't need to get the calculation of income credit, wo credit, ye credit, ye nahi karna. Similarly, it is applicable for professionals have services having salary of less than 50 lakh, or for transporters who own less than 10 vehicles. Depending on number of vehicles and all, the taxes will be fixed. Go ahead. What is Tobin tax or Robin Hood tax? It was proposed in 1978 by James Tobin. What is specialty of this tax? He was a Keynesian economist. What is Keynesian economist? Keynesian economist general idea is he has ideas, his ideas are against the free market principles. So his ideas is regarding international currency. He told that like freely converting currency should not be allowed. Like you need to convert rupee into dollar. Free conversion today is there. There should be a small charge for this. If rupee to dollar you are converting, there should be a special charge for this. This tax will be called as Tobin tax. Why this is importance of this? It will check flow of hot money, like vulnerability due to flow of hot money can be regulated or controlled due to this. Go ahead. What is Pigouvian tax? Like cigarettes tax is very high. In alcohol tax is very high. Why? Because it results in negative externalities in the society. So these products we keep the taxation so high to reduce their consumption or reduce their demand in the economy. This tax is called Pigouvian tax. But how much you can put Pigouvian tax? Control things by putting Pigouvian tax. Is it a sustainable solution? Now what is windfall tax? We done in the test, right? What exactly it is? If any XYZ industry or company is making a catastrophic profit, due to some XYZ incident, it is making very huge profit, government will put a one-time tax on this. One-time tax rate on this XYZ profit, that XYZ profit is called windfall tax. Now it can be due to variety of factors like individual winning lottery, supply demand problem, change in prices, decision by management, all this can be lead to windfall tax. Now why this windfall tax is now in our context? Yeah, like pehle this Russia-Ukraine crisis happened. What happened with Russia-Ukraine crisis? Whole this gas and crude oil market was disrupted because Russia is one of the greatest supplier of crude oil as well as natural gas. So all this industry supply chain was disrupted. Now what was the implication of this? Crude prices shot up. It was extremely high. Now even crude prices shot up. During this phase, if you look in India, there is no much increase in the fuel prices. We are still in that पहले कैसे था किधर था वही range पे है क्यों? Because even when crude price shot up, India is getting discounted crude. India is getting discounted crude from Russia mostly. Now when India is getting discounted crude, now crude prices are very high in the international market. What private companies are doing? What they are doing is they are like refining this crude in India and they are exporting it. Now it is on these exports government put this windfall tax. Go ahead. What is GST Council? Why is it in news? What is GST Council? It decides the matters related to GST, which XYZ to put in GST, which bracket it should be put. All these decisions will be taken by GST Council. It is a constitutional body or statutory body? It is a constitutional body. 279. Okay. Now, what is the voting strength? 1/3 of the vote is with the center, 2/3 is distributed among all the state. If any decision has to be made, 75% of the vote should be needed. And Union Finance Minister is the chairman of this. One other minister will be from center. State Finance Minister will be other members of the council. Now, why this is in news now? Because there has been a very disruptive Supreme Court judgment. What it says, GST Council recommendations are not binding. Not binding means what? GST Council will fix a rate. State government can go there and fix another rate. In how is taxation divided in India? Depending on the 7th schedule. Roughly based on 7th schedule. That means union has XYZ powers, state has XYZ powers. Still this is applicable. Now how GST decisions are being implemented? GST decides something and union will go and implement it, state will go and implement it independently. This is how GST was functioning. Now if Supreme Court came up with a judgment that GST Council recommendations are not binding, that means it's a very serious problem. Like if states start not implementing the XYZ decisions, then the whole council, whole mechanism can fall down. Now how center is like confronting this, or center is giving explanation for this? Center said that except one decision, every decision in GST Council so far has been based on consensus. This is a federal body that mostly work based on consensus. Now if XYZ body is working on consensus, means everyone will go and implement the XYZ decisions. Go ahead. What is inverted duty structure? Problem on textile industry. Exactly. In GST, how it works? There is input tax credit. What does that mean? If you buy 100 rupees, you added value and sell it for 200 rupees. Now you have to pay tax for only this 100 rupee value addition. आपका टैक्स कितना होना है? वो 100 रुपये में होना चाहिए. And this 100 rupee will be some other people's product. This some other people will also have paid some taxes on this. So that tax is included in this. This tax you are paying here. So this tax will be rebated to you. Now this is input tax mechanism. This will work fluently if here tax is low and here is high. Now what will happen? Here tax rate is low and then here tax rate is high and the end product tax rate is low. What will happen? Suppose inputs are taxed at 18% and the final product is taxed at 12%. So you don't have something to take from here and give it to the other people. So if you this smooth mechanism of input tax credit has to work, then government has to infuse the 6%. Now from where government infuse, they will give GST credit. And GST credit means something you can use this for any other GST payments, IGST payments. Some conditions will be there. For those payments, you can use it. This GST credit will be given to the XYZ party. So basically, when input side taxation is much higher than the final product, that case we call it as inverted duty structure problem in whichever industry it is. Go ahead. That is, what is difference between zero rated and exempted GST products? We told about this in tech in okay? Yes.
They are non-packed products like fresh milk. These are zero rated.
We have talked about input tax credit. What it is? Whichever products में previously कुछ tax दिया है वो आपको वापस मिलेगा. Now input tax credit, if it is an exempted products, you will not get it. If it is a zero rated product, tax will be zero itself, but you can apply for this input tax credit and you will get this GST credits. This you can use it XYZ. Exempted means there is no GST coming into picture, you will not get any of these facilities. Zero rated exports, it is mainly if supplies are made in SEZ or There we will call it as zero rated exports. Nil rated means suppliers that have 0%. Take pick. Exempted are not coming under the framework of GST. Go ahead. Zero rated exports means exactly what it is. There is no further tax applicable on it. There is no further GST or sales tax applicable on it. It will be basically produce export products, or it will be SEZ produced products. किसका है? पिक करो. बाहर से. ओके ओके. ठीक है रहना. What is a reverse charge mechanism? Usually we have told that who pays the GST? The seller. But there are some industry where the consumer itself is paying the GST, not the seller. That kind of XYZ, that kind of mechanism, we call it as reverse charge mechanism. Finance Commission, what are major things to know? It's a constitutional body. Article 280, what is the functions of the body? Devolution of taxes. And horizontal or vertical? Both is done by the Finance Commission. And how much is the vertical devolution now? 41% as per 15th Finance Commission. Before it was 42%. Then this Jammu and Kashmir reorganization happened. So some union territories are increased. So devolution has been correspondingly reduced. 41% of the devolution fund will be given to XYZ stage, all the states. Now horizontal devolution means each state, how much should each state get? Now what are the different criteria used? The highest weightage is for income distance. It's having 45%. Population 15%, area 15%, demographic change is there. Forest cover 10% and tax effort 2.5%. Different states को कितना मिलना चाहिए? Like Kerala how should get, UP how should get. That will be decided based on formula of all of this. Out of this 42%, each state how much should we get? That is depending on these factors. No. 100 rupees devolve करना है. 58 rupees center will keep. 42 rupees you have to distribute with all states. Now all states में each state कितना मिलेगा out of this 42? That will be based on these factors. Demographic change, forest cover and tax effort. Go ahead. Now we are 16th Finance Commission. मेंस में आया था ना ये. हाँ. अदर वाज quite tough question. पुराना पूछा था बहुत. अभी recently 16 हो रहे. बहुत controversies है इसमें, but question was not regarding those controversies. Controversies क्या है? Because कुछ भी finance commission है, terms of reference are all set by center only. State has no role in this. What is other controversy? Which data should use? So far we have been using 1971 census data. It has been frozen till 2026. Now if you use the recent data, then those states which have done this population control measures stringently, they will get lesser devolution of taxes. So these were all pending issues going on. This is same with the constitution division also. Like constitutional assemblies, how much seats should be there in parliament? This same issue is pending there also. Yes. Go ahead. Global minimum tax. What is global minimum tax? Why this is in news? What is BEPS? Profit shifting, both base erosion and profit shifting. What does that mean? Suppose a company has this is working in India, and the same company has offices in some other country, C. This is subsidiary of the same country. Now, there is transaction happening, some goods are here coming, paisa idhar ja raha hai, 10 rupees ka goods hai. Now, if the company can show these goods is 100 rupees, so this whatever profit 90 it was technically earning, it becomes an expenditure. So this 90 will go to here. Suppose here is a 0% taxation country like Mauritius or some tax haven country. So the 90 was actually a profit generated in India, but the company do some jugaad and showed it as expenditure. And this expenditure kidhar ja raha hai? Subsidiary of the company. And here they showed it as whatever it is, profit, but the profit taxation is very low in the country, 0% or very low taxation. So technically the company has to produce no tax. They are shifting their profit from India to some other low tax countries. To stop this, we have came up with the idea of global minimum taxation. Global minimum taxation means every country should at least keep a 15% minimum tax. The 0% taxation should not be part of it. At least a 15% minimum tax should be there. Which countries are promoting this? G7 country, mainly advanced countries want to go ahead with this. It has two pillars. Second pillar is regarding the 15%. First pillar is regarding the fair distribution of profits and all. What is Laffer curve? Tax revenue and tax rate. If you increase the tax rate, revenue will increase till a point. Higher tax means higher revenue for the government. But after a point, you increase the tax rate. Yes, people will either don't give the taxation or people even don't work. So GDP is not happening, growing, then taxation will eventually fall. What is tax buoyancy? Not GDP. Change in GDP. If a GDP increases by 1%, how much will the tax collection increases? If buoyancy is 1, that means tax collection will also increases by 1%. Then we call it as buoyancy, tax buoyancy is 1. If 1% increase in GDP lead to 1.2% in tax collection, then tax buoyancy is greater than 1 and vice versa. Understood? Difference is what we are focusing on here in tax buoyancy. What is tax elasticity? If income slab is increased from 5 to raised, how much tax will increase or net tax revenues will increase? Tax rate or tax slab increase kiya, what will be the corresponding increase in the net tax revenue? That is tax elasticity. Why tax elasticity is important? ठीक है, we'll discuss later. Types of deficits. Let's learn types of deficits. Revenue deficit. What is revenue deficit? We have seen that picture, like capital receipts is the revenue receipts is revenue expenditure minus revenue receipts. What all comes in this revenue expenditure? Salaries, pensions, all that expenses of government that is not leading to any capital asset formation, all will go into revenue expenditure. Revenue receipts will be taxes, indirect taxes, direct taxes, non-tax fines, all this will come here. Difference between revenue expenditure, revenue receipts is revenue deficit. Effective revenue deficit means even in this revenue expenditure, there will be some component where center pass the money to states. Now center give XYZ money to the state. State will spend it some in revenue, some in capital. Getting? So some amount of even center's revenue expenditure will be used by state for capital expenditure. So if you subtract the grants to various bodies which are spent for creation of capital assets, you subtract this, you will get effective revenue deficit. Got the point? Third is budget deficit. Budget deficit is say like planned deficit. When budget is published or put in the parliament, how much is the deficit at there? That is budget expenditure minus budget receipts. Now what is fiscal deficit? But total expenditure minus total revenue minus borrowings. That is fiscal deficit. Budget deficit minus borrowing will be the XYZ formula for fiscal deficit. Now what is primary deficit? Interest paid on previous loans. Like how much is the current year government taking as borrowing? That exact figure you get it from primary deficit. That is fiscal deficit minus all the interest rate that is paid on previous loans. Clear?
Current year government is borrowing from the market.
That indicator you get from primary deficit. Fiscal deficit means suppose 100 is your revenue. Your government is spending 110. Fiscal deficit is 10 rupee. You have to borrow it. Now out of the 10 rupee you are borrowed, 6 rupee you are giving to loans you take few years back. That is only 4 rupee you took as new loan. New component. Rest component you are taking just to service the previous loan. So if you subtract that, you will get primary deficit. Fiscal deficit? क्या करना है? Fiscal deficit. It's simply like expenditure minus revenue. And here revenue में ये add नहीं करना borrowings. Suppose government is there. Consider government as a person. Government is earning 100 rupees from all the revenues, tax revenue, capital revenue, sab mila ke 100 rupees government is earning. Now government is planned an expenditure of making an expenditure of 110 rupees. This difference is fiscal deficit. Now ये कैसे meet करेगा? Either government can borrow from the market or government can print the money also. Print the money we are not doing it right now, ways and means, all this we discussed before. So this difference is called expenditure minus revenue. Simple difference is borrowing minus कर देना means इधर क्या है? Revenues of the government. Revenues means whatever money government is getting. Borrowing is also a component of revenue. If you put that also means then revenue will be equal to expenditure. So revenues minus borrowing, expenditure minus revenue minus borrowing component will be fiscal deficit. Go ahead. What is the recent trends in deficit? You can see here. Currently we are at the range of 5.9% for this year. That is the fiscal deficit. Revenue deficit is in 2.9%. Primary fiscal deficit is 2.3% and effective revenue deficit is 1.7%. Mostly numbers are not too much important, but at least a trend, a question can be framed on this, and basic concepts which we discussed in the last class, that should be, you must be very clear with that. All are following similar pattern. This is like due to pandemic, this is in these ranges. Otherwise, we'll see what is the FRBM targets in the next slide. Go ahead. What is extra budgetary borrowing means?
Those that comes from the budget, but they are not reflected in the fiscal deficit.
Financial liabilities that are raised by public sector undertakings. Government is not raising the money, but some other organization is raising the money. But repayment of the entire principal and interest is done by the government through budgetary expenditures. This budgetary expenditure will be after some years. That time government will give money to the organization. So when the exact point where this borrowing is done by the organization, that XYZ will not be reflected in the borrowings of the government. So fiscal deficit, revenue deficit, इधर ये reflect नहीं होगा. But total debt of the government में ये add होगा ही होगा. If you compile the total debt of the government, the extra budget of borrowings or off budget borrowings all will be a part of it. Only difference is that year fiscal deficit या revenue deficit में ये add नहीं होगा. It will not be part of official budget calculations for that XYZ year. But its का interest as well as principal will be paid from government budget expenditures itself. What is Ricardian equivalence? When people see lower tax today, people think that आज both कम tax है. People think that a higher tax in the future will come, so that they will have to pay more to the government in the future. So if they will foresee a future expenditure and do not spend today's money. That kind of mental state is Ricardian equivalence. And what will happen is, suppose government, some XYZ happened, like pandemic happened, government will cut taxes. Why government cut taxes? So that people have more disposable income. If people have more disposable income, they may spend more. But if people get into this Ricardian equivalence mindset, what will happen? Even though government cut taxes, people will think that it's just temporary solution. Government will increase the taxes in the next moment. So people will anyway have to incur expenditure in the later stage. ये बोल के ये disposable income होगा वो save करके रखेगा, expenditure नहीं करेगा, spend नहीं करेगा, spend नहीं किया तो consumption will not pick up. So the whole objective of the government will become ineffective. That is Ricardian equivalence. Crowding out of private investment. What does that mean? In an economy, government as well as private, both these are raising money from same market. If government raise too much money, then there will not be any money left for the private, and this will impact which component? This will impact private investment component of the GDP, and it will can result in lower GDP numbers. This is called crowding out effect. There is relation you can see here. If public sector is taking all the money, the loans in the market will become costlier. If costlier loan is there, then private sector will be reluctant to take too much loan. Clear? Go ahead. What is counter-cyclical policy?
Government expenditure to revive the economy.
Most of the economy phases are expected to go through period of boom and period of recession. Now, what government usually do is, when economy is going through a period of boom, government can collect more money, get more taxes. The government will spend more because they are getting more money. They will expect this will continue. But then happen when recession phase come, government really need to spend here, but government is not getting, tax revenues will dry out. So here government will go to a very bad situation where they cannot spend any money. So to address this situation, we create a counter-cyclical policy. That means when government is going through boom phase, you don't spend all the money, keep some buffer. This buffer you spend in the next recession cycle, so that the net impact of whatever the recession that is happening in the economy will not be that severe. Yes. Don't do this extra spending and keep some buffer, so that when the next recession phase comes, spend that so that the economy can be supported. Like if extra spending is done by the government, then there can be like fall in the GDP will not be that much. Like again, we are using the CIG x minus n. You manipulate x so that your GDP, whatever impact it is having, will not be that much too much. At pro phase, you spend little, and at recession phase, government spend increase karo to pick up the GDP numbers. Go ahead. What is FRBM Act? Fiscal Responsibility Management Act, basically. What is the purpose of this? Fiscal discipline in spending of governments. Which government it is applicable? Center as well as state. What is the different targets as of now? This was like before pandemic. By 2023, fiscal deficit is to be attained at 2.5%. Revenue deficit at 0. What rate we are going right now? 5.9. 5.9%. That was pandemic created all the disruption. And what was the major recommendations by this NK Singh committee?
Target, we should go for debt to GDP ratio.
We should focus more on debt to GDP ratio. There should be a 60% general government debt to GDP ratio. Out of this, 40% is for the center and 20% is for states. Now there is an exception clause. When this XYZ situation happens, like there is a national security issues, war is there, calamity, anything of this sort happen, government can breach the XYZ target set by 0.5%. This is called escape clause. Now FRBM says that government along with the budget should place all these documents also, 4 basic documents. There has been a PYQ on this also in engineering service also. So at least have a familiarity that you will identify which document is not in the list. Macroeconomic framework statement, medium term fiscal policy statement, fiscal policy strategy statement, medium term expenditure framework. Go ahead. What are different types of budgeting? Traditional line budgeting means what? I will allocate for a scheme, say 1000 crore, then I completely close it. I will not track what happened to this 1000 crore, whether it created any improvement in the system or whether it created any result. That is not part of my bothering. I will only allot the XYZ money to XYZ scheme depending on demand of different ministries or depending on other factors. That is traditional line item budgeting. Performance budgeting means I will allot 1000 crore to buy computers, but I should get 30% clearance, faster clearances in whatever the government processes are happening. So you are spending the money and you are keeping a demand of there should be an outcome for the whatever the spending is given for the scheme. That is performance based budgeting. Zero based budgeting means like usually क्या होता है, every year suppose 100 crore is allotted for a project for 1 year, next year maybe 110 crore will be allotted to it. Gradual improvement will be done. In zero based budgeting means 1 year 100 crore allot kiya, deal close. Next year if you want to again 100 crore, you have to put another request. You have to go through the whole processes again. Every spending is for just 1 year. That kind of budgeting is zero based budgeting. Now sunset budgeting means certain schemes launch with a cut-off date. Cut-off date means 4 years. 4 years cut-off date is for 4 years the spending will be done. After that only the zero based restart will happen. At least till the cut-off years, there will be continuous spending for the XYZ scheme. That's all from fiscal policy and budgeting. Thank you so much. Very good morning, everyone. Welcome to the 17th session we are conducting on current affairs. First 10 sessions almost we were doing on science and tech. After that we started doing economy. This may be one of the most important session from exam perspective. Why? So consistently there has been question being asked from external sector. What all topics we are going to discuss today? Basically the exchange rate, near rear concept, then convertibility, then all those currently relevant where XYZ terms that is in use, like nostro account, vostro account, all of these things. Let's get started. So before, this is not exactly a part of external sector, this is a part of monetary policy, but we missed out this, so that's why we are doing it right here. What is this long-term repo operations? LTRO. RBI has recently started doing this long-term repo operations. Tell me, what is repo operations? RBI lends money to bank and take back government securities. This is repo operation. It's not, may not be overnight basis, like short term it is. There are till 1 to 28 days, different options are there. MSF will come for 28 variant also. So within this much range, RBI do the short term variation, bank to have to manage the short term liquidity. That is why we do repo rate. And this is our benchmark policy rate. It is calibrated to all other XYZ rates. Now, what is long term repo rate? There is only one change. What is it? This 28 days changes to 1 to 3 years. That is, the term of this repo operation change made long term. Rest all other whatever is happening, that is kept constant. E-Cuber and all these, some limits are there. You don't need to go too much into it. The normal repo operation is 3 to 28 days. If the maturity of this XYZ repo operations increase to 1 to 3 years, that we call it as long-term repo operations. Why RBI is doing this?
Same operation for long-term lending to reduce the interest rate for long-term.
Yes, same purpose. RBI has to promote long-term lending. We have discussed this in Operation Twist. Operation Twist, how was it operating? It was trying to calibrate the interest rate in the market by changing the bond yield. It was trying to pull down the bond yield of long-term bonds, and so that there will be corresponding change in the interest rate in the market. Here what they are doing is, they are selling the, if long-term repo is available for banks at repo rate, 1 to 3 year, whatever it is, whatever the 1 to 3 year lending rates will fall. If 1 to 3 year lending rates will fall means bond yields is correspondingly related to it, it would also fall. This is an example of expansionary monetary policy. What does it mean? Objective is to fall the interest rate in the market. RBI is keeping this interest rate in the market, like when inflation or when pandemic came. RBI's objective was making the interest rate in the market fall. And what RBI done? Repo rate kitna niche ja sakte hai utna niche gaya. But banks were not transmitting this, transmissibility was less, so issues were in this. Then this operation twist came. Now this is also another operation with same objective. Here directly the fund is made available to banks at repo rate. That means banks are getting low interest rate funds for long term operations, so that the long term interest will again fall down. Long term 1 to 3 year bond yield will again fall down. So this will pick up the investment rate. The objective are all same, and conceptually if any question comes, you only have to keep one thing in mind. Its maturity is 1 to 3 year. Rest everything is what repo does. What is MSF? What is the difference between MSF and repo rate? Here you can take the collateral from SDR. SLR, statutory liquidity ratio. Government has to maintain this much of 18%. Around 18% has to be maintained in liquid assets. Liquid asset can be in cash, gold, and these government securities and all. These government securities are deposited with CBI, RBI, and banks are taking the loan. That loan is called MSF. What is SDF?
SDF is at the discretion of bank.
SDF is not discretion of. What is reverse repo? If there is excess liquidity in the market, banks are keeping this money with the RBI and taking back the government securities. Now banks are keeping the excess money with the market and not taking the government security. That is SDF. This is also a new policy tool. What is policy corridor? Difference between MSF and SDF. Pehle it was difference between MSF and reverse repo rate. Now the policy corridor is MSF and SDF. Here long-term repo means only the maturity changes. Go ahead. Now we start our discussion on external sector. What is balance of payment? Not two countries. If a country is there, how much is going out? How much is going in of all XYZ transactions? This combined record of all this we call it as, in one XYZ time we call it as balance of payment. All transaction means क्या क्या हो सकता है? What can be the components of BOP? It can be trade, current related account and capital related. How you differentiate whether a one fund is current fund and other capital fund? How you differentiate this? BOP components are, next slide we will go. BOP components are current account and capital account. How you differentiate whether one transaction is, you will classify it as capital or current account. The idea is if anything that is going into current account, there is no liability created on XYZ government or any other entity. No liability means this one need not be returned back. If you look at this, here it is FDI. FDIs may come future and take back this loan. FPIs, whenever there is a slight interest rate change, they take out their money. FIIs, FPIs and all. External commercial borrowings, it's like a loan, you have to repay it. Everything like a government borrowings, bilateral loans, everything after maybe 10 year, 20 year or after long term, you have to repay this money. There is a concept of repaying. Concept of repaying is there, then that all transaction go into capital account. If no repay has to be done, then all those transactions come in current account. Example, the trade transactions, like if a commodity is gold is given and money is taken, then that transaction is finished. You don't need to return this money in future or no such concept. That's why remittances are like people, non-resident Indians, they are sending money to their home and all. So this money is sending to their home means they are sending this money for the expenditure at the home or something like that. This money need not be returned back to the NRIs or people staying outside India. So these remittances, gifts, grants, all these go under current account itself. Clear? Now if a UPSC question come, which of these come under current account, capital account, way of thinking should be whether there is a need for repay. Only this you need to think, rest you will make out in the examination. Now you can see some FDIs India is having. Why India is consistently having a current account deficit? 1.2% of GDP is the latest current account deficit in 2022. In this year it is again getting increased. And why, even after having a consistent current account deficit, India is not facing any BOP crisis? I am not asking why CAD. Despite India having this CAD consistently for years, why India is not facing any balance of payment crisis? What is BOP crisis? The XYZ country doesn't have enough money to carry out the basic transaction to get the essentials, like to buy crude oil, to get energy inputs. All these basic transaction, it doesn't have the money or doesn't have the enough dollars, then country go into BOP crisis. India go into the situation in 1991. India had loans, India doesn't have money to repay these loans. Sri Lanka gone into this situation in the recent past. Pakistan is somewhere around this crisis. Now, why India is, despite having a high current account deficit, India is not having any BOP crisis? If you look at India's forex reserves, recently it is falling, but if you look at last 10 years, it is highly increasing. Why this is happening? Because here, even though there is negative, India is gaining huge in FDI and FPI. This year, FPI, there is negative connotation, like this much to 1.2 lakh crore money gone out of India. But if you again look at a long-term value, FPIs are highly investing in India. Same goes with FDI. This year we got much higher, 84.8 billion FDI investments we are getting into India. So that's why dollar is, even though India having current account deficit, huge amount of dollar is coming through other aspects into the economy. That's why despite current account deficit, India can have huge forex reserves, and India is never facing any situation nearby of this balance of payment crisis. Remittances is also a component, having 89 billion per year. This year it is, you are saying, again increasing to 100 billion. Go ahead. Clear? Now this is the basic current account deficit data. Currently it is somewhere near these figures, 36.3 billion US dollars. Now for a short period of time we entertained the positive CAD. $1 billion, right? For a short period of time we had this positive current account surplus. Where it was? During the pandemic time, the imports were highly shrinked and export were also shrink, but the level of import shrink was much higher. Even the crude oil demand was low and crude oil prices was also extremely low. So all these factors resulted in a short period of current account surplus. If a question comes like in last 10 years, India never had any phase of current account surplus, that is a absolutely wrong statement. India does had a small period. Even before also in 2000s, before this subprime crisis of 2008, India had certain periods of this positive current account surplus period. Go ahead. What are major items of India import and export? Questions have been framed from these also. That's why even though this is a hardcore factual stuff, still you have to have a fair idea of this. What is India's most imported item? Obviously it is crude oil. Around 85% of India's crude oil demand is met by imports from other countries. So crude oil is the most, gold is the petroleum products. You don't need to remember everything, but you should have a fair idea. Vegetable oil is an agricultural product, also one of the most important item. Computer peripheral, plastic, raw materials, organic chemicals, coal, all this. India is still importing coal. There has been question framed on this also. There was statement like recently India stopped importing coal. India has become self-sufficient in coal. But that statement is absolutely wrong. Why India is still importing coal despite having huge reserves? Two reasons are there. One is India doesn't have enough coking coal. Coking coal means that is high quality coal, have more than 90% of the carbon. This much of coal India is not having enough to meet the demands of India's iron and steel industry. Yeah, this coking coal India does need to import because of lack of supply. Second, there is, if you look at the coal mining industry, all these are controlled by CIL. CIL is having absolute majority or absolute near monopoly over this coal supply. Now, if one organization is controlling the supply, there can be XYZ situations where this organization cannot meet the demand. So India reaches many situations where CIL failed to meet the supply, and this has to be supplemented by imports. Go ahead. Now, what are export item? Very interestingly, the highest export item also petroleum products. What is the petroleum products? That means refined. Indian companies refine this and sell it to other countries. And here we talked in last class also. Windfall tax has been imposed on these companies. What is windfall tax? If any XYZ sector or any XYZ company is making catastrophic profit due to some XYZ reason, then government will impose a one-time tax on those. Such a tax was imposed on companies who are exporting the petroleum products. Why? Because due to this Russia-Ukraine crisis, crude prices throughout the world have been high. But what is happening in India? India is getting discounted crude oil from Russia. So what the private companies are doing, they are refining it because India has huge refining capacity. They are refining it and selling it abroad. So they are making huge profit. To have a check on this or to have a share of it, government impose windfall tax on this. Then drugs and biologicals, this was highly increased after the pandemic time. Generic drugs, vaccines from India, all are great in demand. Pearl and precious stones, there is always demand from India. Diamond processing, around huge percent, like more than 70% of diamond processing, diamond cutting, all this happen in India only. Iron and steel, metal, electric machinery, chemicals, gold, silver, all these are. One agri products is that is marine products. Agri, or you can say primary product, only one primary product is there, that is a marine product. Here we have vegetable oils as in imports. Go ahead. Which are destination? Top destinations is USA, UAE, China, and all these countries are there. Top import destinations is China, UAE, USA, Saudi Arabia, all these countries are there. Russia will also come into this sooner or later. This is FY22 data. Okay, go ahead. Now, what is causing India's trade deficit with the countries? In China, we are importing so much of electronics, so much of toys, so much of plastic components we are importing from China. From Middle East, we are obviously importing natural gas, crude oil, all these products. Switzerland is a major import source for India's gold and luxury items. Similarly, South Korea, we are importing mobile, TV, electronics, and all these products. Taiwan also will come here. Taiwan also is importing most of its electronic components. Similarly, Indian import is US, Indian, this is like not import, export. Not sources, India's export countries or India's export products. What India is exporting? To USA, India is exporting basically chemicals, textile, services. Textile is a very major source of export still from India. Many of the countries you will see that. In Britain, Netherlands, like basically European countries, India is exporting tea, spices, and textiles. Bangladesh, Nepal, these countries, India is exporting food, medicine, vehicles. Go ahead. Not required to by heart all these. Just you should have an awareness, so that a extreme statement you see, you should be striking that this statement can be wrong. That much awareness you should get from this class or reading this material. Now, what is net terms of trade? Wherever you see terms of trade, you only have to think one thing: export by import into 100. Okay, value of export by value of import into 100. What will be net terms of trade for India? Is it more than 100 or less than 100?
Because for every 1 unit of import, we have to sell, we have to give more. We are doing less export.
We are doing less export and our imports are much higher. So entity like denominator is much higher and numerator is smaller. So our entity will be always less than 100 because we have country with huge CAD. Go ahead. Economy country means what is the difference? No, this is generally, if nothing is given, it is calculated with throughout all the countries. Specifically is given entity with respect to USA, then you can think on that terms. Otherwise, this is calculated based on whole exports from India and all imports from India. Go ahead. Answer this question first. This is a 2020 prelims question. Okay. What is our approach to solving any kind of statement question? Find those statements that are 100% correct or 100% wrong. Read the first statement, India's merchandise exports. That means goods exports. Goods exports are less than it imports. Is it right or wrong? Good exports, less the absolutely correct. We are already discussing this. One is 100% correct. So we cancel two options. Now, India's import of iron and steel, chemical, fertilizer, machinery have decreased in the recent years. If you read the newspaper, you might know. Otherwise, you have confusion over it. So put it on hold. India's exports of services are more than its imports of services. India is the export hub of services. So export of services should be more. This should be correct statement. So 3 should be part of our answer. So 3 is not here. So we already got the answer without reading the fourth statement. Fourth statement is India suffers from overall trade or current account deficit. How easy statement is this? So we already got the answer. Even if you have confusion in this statement is like you should be knowing about it. Even this is asked in 2020. So this small bulge during that pandemic time, you can still overlook it. Go ahead. Very easy statement. What mistake you can make here? Don't get confused with less, more and all this. Stick with whatever basics you know. Don't overthink and complicate the statement. Very easy, straightforward statements are being asked. Many of the economic question, conceptually very strong question, but statements are very easy. Or at least one statement will be given there. Like if you know that concept, most of the options can be eliminated. So even one very tough statement is there, don't lose your sleep over it. But the rest of the conceptually strong statement, you should be able to identify, eliminate and all this. Go ahead. What is the difference between FPI and FDI? What is full form? FPI is foreign portfolio investment and FDI is foreign direct investment. Yeah, basically the difference is 10% of share value. If a company is investing in less than 10% of share value of a XYZ company, then that is less है तो FPI. More है तो more than 10% investment is done by XYZ foreign company in an Indian company, then that we categorize as FDI. But what is the major functional difference? FPIs are only investing in the secondary market, mostly in the secondary market. Their only objective is when the share price rises, sell this and make money. Money is the only objective of this. If your company is getting FPI investment, its share price will increase. But none of these investors are going to interfere in the XYZ matters of the company. No interference will be there from these investors. They are only looking at the share price and investing in the company. They are not going to interfere in day-to-day affairs or making any XYZ board meeting changes or no such interference will be there for FPI investors. If FDI investor means more than 10% is there, more than 10% investment will be done. They will be bringing in their expertise into it. Maybe they will be bringing their tech into it. Maybe they will be bringing their management into it. They will interfere with the XYZ decisions of board of directors, decisions of the company. They will be sitting in the board of directors. So here the objective is take over the company, run the company. Here the objective is make the short term, make more money in the short term. So this is like a short term investment. This is like a more stable and long term investment. That's why any country will be more happy to get FDI than FPI. FPI money is also called hot money because it can flow in any direction. If something is happened, like US Fed is increasing the interest rate, all these FPIs are running from the India. That's why we seen in the last slide that FPI in India last year is negative 1.2 lakh crore because 1.2 lakh crore rupees has flown from Indian market to the other countries. Why? Because Fed has increased the rate. Still Fed, whatever Fed is happening, FDI in India is considerably stronger. That FDI comes into a country because fundamentals are very strong, companies are very strong, there is huge market. These all things India have, that's because FDIs are so much interested in India. FPI means it's vulnerable or volatile money. It's also called hot money. So it depends on the rates, market rates, all these small happenings that is happening in the XYZ part of the world. Go ahead. You can read this, all these details are given here. Yes, in government securities, you should need to care. FDIs can invest in FDIs or FPIs? F, FPIs can invest in government securities. FDIs cannot.
Short term, long term.
Everything, but there is limits like up to 5%, up to 10% in this. Only that much within that limits you can invest in the government securities.
But if they are investing in government securities, this means India is owing debt to them.
Yes, India is giving debt to them. Like there was a concept like India's external debt is considerably lower, less than 5%, that number of value. So to budget before government put up a proposal, we should invest more in this. We should buy more external borrowing. Government should take more external borrowing or external debt should increase. Now there was counter for that was what? Instead of if you are taking external borrowing means Indian government is going there and taking the money. So maybe India has to give more interest rate because of this credit rating, all these agencies creating issue. Credit rating, there is already criticism that they are against Indian system, they are Western biased. So due to these credit agencies, India might have to give more money. So better option is open up more government securities for FPIs. So more money they will come here to invest. So India doesn't have to bear that much of a cost for getting those money. So this was a counter objective to it. India is still not exaggerated India's external debt. It is still under 5% ranges only. Government debt we are talking about. Go ahead. This is FDI. It is technically called FPIs, but even if you look, objective is the criteria. 10% is like a, not exactly if you become 10.1 you became FPI. It's not seen in that aspect. 10 point is actually a rough figure. If you 9 company invest 9% means 90% of the company is owned by external FPIs, but still it will be called in, it will come in FPI investments only. But the objective is more important. This is like we make for making complex in the examination hall. Otherwise, the objective is important. The FPIs will be more interested in secondary market. They will be directly buying the company and doing the business. That kind of motive will be there in FDIs. So if you look at the FDIs, FPI outflows from India, recently India witnessed this. Numbers are a little different, 1.2 lakh crore. After the consistent 3 years of incoming FPIs, we witnessed 1.2 lakh crore of outflow from India. Why this happened? Because of this taper tantrum effect, similar to like because of Fed is increasing the rates. Why Fed is increasing? US Fed is increasing the rate?
So inflation is very high across the world.
One reason is like a pandemic happened. What throughout the government did? Throughout the government, they followed an expansionary monetary policy. Expansionary monetary policy means money supply has been pushed to the limits. Interest rate has been kept as low as possible. Now, due to all this, inflation came in. Even we can see in the economics every class also, like inflation in the advanced world is 8 to 10%. 8 to 10% inflation means usually they get an inflation of 1 to 2%. That is meant for 4 to 5 times more than usual inflation. India is only having 6.8% inflation. This is our normal inflation. 6%, 5% is our normal. 6.8 means slightly increases. But US and all is facing extreme levels of inflation. So there is inflation control needed. So and there should be an end to the expansionary policy that has been following after the pandemic. To both the reason, US Fed is increasing the rate. So what happens when US Fed increases the rate? What happens when US Fed increases the rate? US Fed increases the rate. Then what happens?
They find it more lucrative.
The investor will take the money from Indian emerging economy. Riskier investment, they take the money and they will put in the US bonds or US government securities because that is much safer investment. Earlier what they were doing, when this US Fed rate was too low, they were taking money out of the US Fed. And this money has been invested in emerging economies. Yes, yes. Yes, what is the, if so much of dollar is leaving India, so what happened? So much of dollar is leaving India means demand for dollar will increase. Demand for dollar is increasing, dollar rupee rate is decided by demand and supply. If demand of dollar is increasing in the Indian economy means Indian rupee will depreciate. Now Indian rupee will depreciate, what will happen? We are a country with huge amount of current account deficit. We are dependent on crude oil. So if you want to buy crude oil, you have to give more rupee. So the crude oil price, your imports become costlier. Import become costly means this get translated into all other sectors and India can face inflation. India can face Paka. You are saying this every time, अभी सही हो जाएगा and making गलत हिंदी से. ठीक है? Overall the concept you understand, then question can come from any of these. What will happen to bond yields? Tell me how you will think, if you want to think how US Fed increasing the rate, how will it will impact in bond yields in India?
Bond yield will increase, sir.
बताओ क्यों bond yields will increase?
पर ये क्या है कि यहाँ से डॉलर बाहर जाता है, तो RBI will try to in order to reduce the outflow, RBI banks will increase the interest rate.
This flow you understand? Now what exactly is happening? Dollar is taken from India and going outside. So money from even government securities or bonds are going outside. So demand for bonds, demand for government securities or bonds are decreasing. If demands are decreasing means bond price will fall. Bond price will fall means bond yield will increase. Or you can think that if you are very sure that inflation happens, what RBI can do, market interest, what happens? Market interest will increase. Market interest increasing, market interest and bond yield are always proportional. So if market interest is increasing, bond yield should increase. Question can come from any of these direction, statement can be framed over this. If you're conceptually clear, you should not get wrong whatever the statement comes. Go ahead. Anything else? Chale. Hot money we already discussed. Those money which have highly volatile and with slight disruption in the interest rate, it can flow to any of the economies. So that kind of money is hot money. Hard money, soft money, what is the difference?
Hard money which is easily convertible.
Hard money means it is on depending on credibility. Here it was volatility was the deciding factor. Here it is credibility. Credibility, how you a currency acquires credibility? There is some limits to XYZ transactions. It will have some political backing, sovereign backing of those countries which are politically and economically stable. This backing is there, we call it as hard money. Otherwise, we call it as soft money. Go ahead. FDIs, we are consistently getting an FDI increase of above more than 50 billion US dollars in last 3 years. Baki concepts all what we have discussed now, right now. Which countries are majorly contributing to FDIs in India? Singapore is the highest contributor. After that, we have USA, Mauritius, Netherlands, Switzerland are the top 5 contributors. Which sectors is attracting FDIs? That is computer, software and hardware, service sector, automobile sector, and which states, if you look at, Karnataka is the highest state with highest FDI inflows. After that, Maharashtra, Delhi, Tamil Nadu, Haryana, all these are those. Question can come at sometimes with sectors. Which sector? These are hardcore facts. At least one top this much you should know. It's almost contributing 25% of India's. All these are going to computer software and hardware sector. Go ahead. Yeah, copy down.
So this is the data from this year's economic survey.
This is data till FY22. This data you don't need to too much worry about. Maybe one country here and there change होगा, उसका ज़्यादा change नहीं होगा. Sector will always remain the same. All this data is FY22 data, not the FY23 data, because FY23 is not still over. Go ahead. Answer this question first. How you answer this question? What is the toughness of this question? What gives toughness of this question?
Not clear to people.
So many new concepts. Convertible bonds. What is convertible bonds? What is, this is still easy statement. What is global depositor receipts? So many interrelated concepts. If you know clearly, then only you can confidently answer this question. Otherwise, it's always going to be confusing. Which of these following are FDIs? That is the question. Foreign currency convertible bonds. Usually, for bonds are debt instruments. They are not a part of equity. They are not part of FDI. But convertible bond means this debt can be converted into equity. So if it is converted into equity, it can be categorized as FDIs. Only if it is part of equity, then the concept of FDI comes. Otherwise, it is a part of debt only. Now, foreign institutional investors with certain conditions. This will also, depending on certain conditions, this will also be considered as FDIs. Some XYZ percentage and other criteria are met, you can change your FPI into FDI also. 1, 2 is correct. Global depositor receipts. What is that? Without registering to all of this, they are depositing their money into it. This obviously can be a part of FDI.
So they are investing in an Indian company.
Foreign people are investing in Indian company. Non-resident external deposits. These are purely debt instrument. These has no XYZ with equity connection. ये purely debt instrument है. Both should not be part of your answer. Both these are gone. 1, 2, 3 is correct statement. Answer is A. It's quite tough question if you don't exactly know what all these components are.
NRI has kept money in India in rupee form.
We'll discuss this later. Go ahead. What is external debt overhanging problem? What is Laffer curve? If you increase the tax rate, there will be a corresponding increase in how much tax revenue is being collected. But after a point, it will fall down. This is tax rate. This is tax revenue. This is Laffer's curve. A similar curve happens in debt overhang problem, or debt and what is the development, XYZ development the country is happening, or repayment capacity of the country. If a country is taking too small debt, it can easily repay that. There is no debt overhang issue. But the country take debt beyond a limit, it becomes unsustainable. This becomes unsustainable, and beyond that, the country's ability to repay the XYZ debt falls. That is external debt overhang problem. India is not having any such problem because most of our debt are internal debt. Even our ECBs is external commercial borrowings are highly limited. Why limited? Why our ECBs are very limited? Now it is increased to 1.5 billion. So one company can only take 1 year ECB as external commercial borrowing as 1.5 billion. Why some limit is kept on this? There is no limit kept on how much you can convert the currency for doing the trade. That's why we call Indian currency as fully current account, current convertible. But on capital account, India is not fully convertible because there are certain limits if you are converting the currency for capital transactions. External commercial borrowing means it is a type of loan taken by the XYZ companies and all. So that is a capital account transaction, and there are limits, quantitative limits for this. Go ahead. What is sterilization? Not too much relevant in the current times, because what happens if there is excess money supply has been occurred when RBI brought the dollars. Excess money supply in the economy, what RBI does? Give the dollars and take back the money. That XYZ process is called sterilization. It's a part of open market operations, like government securities there, and they are taking out the money to control the money supply. What RBI is doing right now? Right now our problem is not excess dollar. Right now our problem is lack of dollar. Like we discussed before, dollar is leaving the country. Dollar is there, our problem is dollar leaving the country. So dollar is, there is lack of dollar, that's why this appreciating, all this is happening. So what RBI is doing to, like, if dollar is, this is completely left to the market, rupee will fall into 100 rupees or 90 rupees. That if rupee is falling beyond a limit, even though our exports become competitive, but it can, our imports become costlier. This can create so much of macroeconomic instability. To control that, RBI is controlling the fall of rupee. Now, how RBI is controlling fall of the rupee? RBI is supplying dollar into the market. If RBI is supplying dollar into the market, where RBI is putting this dollar from? From the forex reserves. That's why we see that our forex reserves was around $621 billion in September 2021. Now it is fallen to 500 something billion dollars. 500 plus something billion dollars it has fallen to. This fall happened because RBI is putting its dollars into the economy to support the fall of the rupee. Go ahead. What is this Muntel-Fleming trilemma? Simply it means one thing, because if you look at the how a country should manage its macroeconomy, three variables you cannot keep independent. Every country has to select two out of this and manage the other thing, like capital account mobility, exchange rate management, or monetary autonomy. Out of these three, only two of these variables you can keep it as open, otherwise the other one you have to manage it. This XYZ trilemma, which one you should manage, that depends on the XYZ nature of the country, and this trilemma is called Muntel-Fleming trilemma, or it is also called, there is another word for it, impossible trinity. Go ahead. इंडिया में क्या सीन है? Which variables we are controlling? Free capital mobility we are not giving, that is being controlled. Monetary policy autonomy we have provided. Exchange rate management to good extent we have provided. Only at extreme cases RBI come and manage it, otherwise our exchange rate is market determined. Go ahead. Forex reserves we already talked, and only thing of importance of this slide is forex reserve is falling right now. The reason we already talked, and you need to keep on, forex reserve can be kept on all this. Foreign currency assets like dollar, pound, sterling and all this. Gold can be as SDRs and reserve transfer position in IMF. That means how much percent India is having share and all this. So out of this, if you look at the US $1 million, $560 million is there, $494 million or $494 billion are kept in foreign currency assets. Most of our forex reserves are sitting in US dollars. Out of this, in US dollars is the most forex reserves we are kept in US dollars. Go ahead. Purchasing power parity. What is purchasing power parity? Yes. Like 1 rupee equal to $1 equal to suppose 80 rupees. What is this? Nominal exchange rate. What determines nominal exchange rate? Market factors. Market demand and supply. Demand and supply is determining what this rate is. Now this rate direct doesn't convey XYZ competitiveness of the economy or the production capacity or production level of the economy. If that has to be assessed, you need to see how much a certain good in one economy, how much its price is in first economy and how much its price is in second economy. If suppose here we are taking a burger. Suppose a burger cost in India 200 rupees. The same burger cost in USA $4. Same good. Then the purchasing power parity of India is $1 equal to how much rupees? 50 rupees. So this calculation is made based on taking a common good. And this calculation, this figure is called purchasing power parity. Now tell me what happens if inflation in India is much higher than US. What happened to purchasing power parity? Inflation in India higher means this dollar, this price पहले 200 रुपीस को एक बर्गर मिल रहा था, अभी 250 हो गया. 250 हो गया means what happened to 250 by 4? How much it comes? 62.5 will be price of purchasing power parity. If inflation is more inflation is having in India means the purchasing power parity of India or the conversion rate increases, or rupee, you can say rupee depreciates if there is higher inflation in India compared to the other country. Same concept you can see in nominal, and it's very important here to understand 4 variables. What are these 4 variables? One is nominal exchange rate. One is nominal exchange rate. Then there is real exchange rate. Then there are 2 other indices. Which are they? Nominal effective exchange rate and real effective exchange rate. What is nominal exchange rate? This is what we exactly told now, like $1 is equal to 80 rupees. This is nominal exchange rate. Now, if this XYZ figure there is adjusted to inflation, then we will get real exchange rate. No confusion? All good? It's very important to understand this, then only you can go into the concepts of near and read. And if whatever preconceived notions you have about your near and read, request to forget it. See that with a fresh mind, then only it's going to be helpful. Now what is nominal effective exchange rate? This is first thing you have to understand is it is an index. It is not exactly an exchange rate, it is an index. It is weighted value average of currencies to a pool of other currencies. Like we will discuss this in when the equation is being discussed. Weight is depending on, like different currencies is there, we are assigning weight to all of these currencies. Now the weights are determined by how much India is trading in that currency. If India is trading more in US dollars, India will assign more weight to US dollars. If India is trading more in pound, you will assign more value to the pound. So depending on the weightage or trade significance, we are assigning different weight to the different currencies and we are finding whatever the near is. Similarly, real exchange rate is same as near adjusted to inflation. Better measure of competitiveness, rear is considered to be a measure of competitiveness. If rear is higher, rear means lower competitiveness because same goods has to be produced at a higher cost. Concept of rear come here, like if rear is 90 in one country and rear is 100 in one country. Now for producing one same good, here it cost only 90 rupees and here it costs 100 rupees. So which economy is more competitive? Those countries which have lesser rear is considered to be more competitive. Now try to understand the formula equation, how rear is found. Here only thing you need to know is rear and near, all these data are released by, in India's case it is released by RBI. And this is a PDF from RBI methodology, how RBI is calculating near and rear. We start with near. What is the formula for near that is given here? That is geometric mean of E by EI all raised to WI. Now we are taking an ideal situation. Ideal situation means we are, suppose India is trading only in US dollars. So weight is assigned, we are supposing it as 1. If India is trading, like we put so much currencies and find the geometric mean. That is exactly near. Now we are assuming, for our ease of understanding, we are assuming that we are trading only in US dollars. So weight is 1. So our factors determines E and EA. What is E? E is with 1 rupee. How much, if you want to compare two currencies, there should be a common XYZ component. When we are discussing PPP, that common component was burger. Here with 1 rupee, how much SDRs you can buy? What is EI? With $1, if dollar is the currency, how much SDRs you can buy? Now let's take a number. If with 1 rupee you can buy 10 SDRs, and if $1 you can buy 100 SDR. What will be the value of near? Near will be how much SDR you can buy with 1 rupee, that is 10 divided by 100, that is 0.1. Now we are assuming a situation near is increasing. That is near becomes 0.2 for ease. 0.2 means which variable has to change here?
We can buy more SDR right now.
We can buy more SDRs with rupee. That means
the currency has become stronger.
Currency has become. Earlier this relation was 10. Now if you can buy 20 SDRs, or 20, if it become 0.2, we are assuming dollar is having same value, then number of SDRs you can buy with a rupee become 20. Now with dollar you can buy only 100 only, same. So the difference is 5. So what is happening to rupee? Rupee is appreciating if near is increasing. Understood? We can clear karo. Near equation is geometric mean of E by EI all raised to W. E is how many SDRs you can buy from 1 rupee. EI is how many SDRs you can buy with any other foreign currency. That may be if it is $1. If you can buy more SDRs with 1 rupee means rupee is appreciating, you are getting more XYZ goods with 1 rupee. It is when E is increasing, near increases, because it is in the numerator. So near increasing means you are able to buy more goods with the same XYZ rupee which you are having. More goods means rupee is appreciating. Clear? Now, what is rear? That is nothing much important. If you got the concept of rear, that is all that matters. Rear का equation है same geometric mean of E by EI into P by PI all raised to WI. Here P by PI is price level in one country, that is CPI in India. PI will be CPI USA if we are comparing with dollars or any other country that you are doing. So it's simply rear-adjusted to inflation, that is rear. So the main point you have to understand is, even though we are comparing two currencies, we are not comparing the direct exchange rate, nominal exchange rate of those currencies. We are connecting it with a common commodity, that is SDR, and then we are putting in the formula and finding the XYZ equations. Clear? Now answer the question first. Now it becomes, I was speaking this only for the same time, whole time. An increase in nominal effective exchange rate indicates appreciation of rupee. What is NER? E by EI. Increase means E is increasing. E is increasing means number of SDRs you are getting with 1 rupee is increasing. If you are with 1 rupee, you are getting more goods means rupee is appreciating. Connections you can make out, then this is a correct statement. An increase in real exchange effective rate indicates improvement in trade competitiveness. It is ulta. Real effective exchange rate is an indicator of how much you have to spend to produce XYZ goods. If you have to spend more to produce same amount of goods, that means your competitiveness is low. So this statement is incorrect. An increasing trend in domestic inflation relative to inflation in other countries likely to cause the increasing divergence between near and rear. Rear and near, nominal, real, wherever you see the difference is inflation. So if inflation difference is too high, means difference between nominal and real, whatever it is, GDP, whatever the variable it is going to increase. Third statement absolutely correct. So what is the answer? C is the correct option, 1 and 3 only. Go ahead. Currency convertibility we already discussed. What is the core idea? If a currency can be converted into all other different currencies like US dollar, yuan, pound, all this. If it can be converted into other currencies, we call it, this currency is convertible. Indian currencies, there are two types of current account convertibility and capital account convertibility. For current transaction purposes, if rupee without any limits can be changed into any of these currencies. For trade purposes, Indian rupee can be changed to any of the currencies without any limits. So that's why we call it Indian rupee as current account convertibility is there. But capital account convertibility is not there. For capital purposes, there are quantitative limits. Like for ECBs, we told that there is a limit of 1.5 billion. Only 1.5 billion you can take to India. For government securities investment, there is 5% limit. Only that much you can invest. So different limits are there. So that's why we call it as Indian rupee, not capital account convertibility. There is government committee called Tarapur committee. Why this purpose of the committee was checking whether India should go for complete capital account convertibility. Why India is not going for complete capital account convertibility? Security is not the issues. Like current economy will become more dependent on hot money. So many hot money will flow into this economy, and hot money's problem is whenever there is a slight increase or decrease in Fed rate, it will reverse. Now on reverse, it will create so much of macroeconomic instabilities. This happened with countries called as East Asian traders in late 1990s. They were enjoying they were opened like full current capital account convertibility. Due to this, huge amount of investment dollars were coming into this economy, and for a long time these countries were enjoying long phase of high growth and high incoming dollars. But once there was some risk elements, vulnerabilities, these countries can fail, that kind of news was in the air. Dollar left this country like anything, and this led to this East Asian tiger crisis in late 1990s. So this to avoid such kind of a situation, Indian is not fully capital account convertible. While there is, even here also there is for gold, if you are buying gold, there has been some RBI schemes introduced before, but now this is also removed. So now to a huge extent India has complete current account convertibility. Go ahead. What is currency war? Don't look here. What is currency war? Conceptually. It is between US and China. Accepted. Next. What China is doing? Actually, there is, if it is between US and China, and if there is no currency war or no currency manipulation, this exchange rate should be decided by demand and supply. And what China is doing? US is saying China, if demand and supply determines the rate, 7 point something should be the fair value of whatever the convertibility of US dollar and Chinese yuan. But China is keeping it in 6.7, 6.8 ranges. Why China is keeping it currency at lower range? Because when currency is having lower value, exports become competitive. Even though for imports you have to give more price. But China is a country with huge amount of exports. It is much more than it is importing, it is exporting. So there is more exports. For keeping a currency at lower levels, China has huge advantages. Due to this purpose, the whole XYZ, the currency war, currency manipulation, all these concepts. Now the global geopolitical situation is changing. Now there is talks of reverse currency war. Reverse currency war means what India is doing. Little bit of, not too much exactly. What RBI is doing, if demand and supply determines the conversion rate, $1 may be equal to maybe 90-95 rupees. But RBI is supporting rupee so that the fall becomes only to 80s. $1 is only 82 rupees right now. So RBI what is doing? RBI is doing something to appreciate the rupee. We are keeping rupee at a higher value. So why we are doing this? Because India is having different objectives. We are a country with huge amount of imports. We want cheaper imports. That's why we are more happy to keep our rupee appreciated, because our priority is imports. Doing all this, they are spilling dollars from forex reserves into the economy and all this. So imports, our priority is imports, not just India. So many emerging countries are undertaking the same operations. Their priority is imports, so they are keeping their current currency at a higher value, so that their import becomes not too much costlier. Export competitiveness, there is a cost they are paying for this. Go ahead. What is Nostro-Vostro account? This was in news in the context of India's trade with Russia. India's banks are allowed to open this Nostro and Vostro account for transaction with Russia. What exactly is this? Suppose a bank in India, suppose ICICI Bank, that bank has opened an account in any other bank in US. Now, if this account from Indian perspective, this is called Nostro account. From Indian perspective, this is an account opened in a foreign bank in foreign currency, in US currency. Now, if you look at the same account from US bank, this is an account opened by a foreign bank in our domestic currency. That account, the same account, if it is looking from here, we call it as Vostro account. If it is looking from India's perspective, we call it as Nostro account. Okay. At least remember the diagram, rest I think you will make it up. Clear? So Same account it is basically. It is depending on which bank perspective you are speaking, it can be called nostro and vostro accounts. Go ahead. So that's all from right now. So we broadly covered all the XYZ concepts in this external sector. Most areas where question come is either purchasing power parity or this exchange rate dynamics. These are the broad areas which you should focus on, and these forex reserves and all this, how it impacts. Even for this prelims, I will say this US Fed impacts on India. Prepare that also, because economic survey you will see throughout it is being mentioned. So these are 4 areas you should focus much on. This external sector, rest all this factual data you can revise and go through multiple times, so that at least if an extreme statement come, you should be able to identify it. That's all for now. Thank you so much. Very good morning. So today we are going to start our discussion on economic survey. In the first class we will be doing first 2 chapters of the economic survey. So far this is the 18th session. We have elaborately discussed all the major conceptual parts of economy. All conceptual part, all recent developments related to which that XYZ has been already discussed. Last class we have been doing external sector. Uska before we had done this fiscal policy budgeting. Uska before monetary policy, money supply, all these basic economic concepts we have already covered. Here we are even discussing the economic survey. Our focus will be completely prelims oriented. Baki all concept that is important for mains or data facts that is important for mains, you can read it after the prelims. Today if we are discussing, we try to connect as much to the basic concept as possible, and we will limit our discussion to too much of prelims focus only. Go ahead. So yeah, what is the first chapter of economic survey? State of economy 2020 recovery complete. So this is something like a very big statement. What economic survey is starting with? Pandemic, you read this everywhere. Economic survey is the impact of pandemic on Indian economy is over. Recovery of Indian economy from pandemic is complete. Why this is such a, you can say, bold statement, such a bold statement by economic survey or the government? Why? Like if you look at the factual level, the economy, where was the economy before pandemic? We have reached that level. So we are going, but pandemic has so much other impacts. Like if you look at this labor force participation rate, if you look at the capex investments in India, all these have been one way or the other impacted by pandemic of COVID-19. So the impact is like long term. Even we are continuing this taper tantrum which we are discussing, all these are coming from this pandemic only. So even when the world there is impacts are continuing, our government or economic surveys coming with a bold statement that the recovery is complete in Indian economy. Once recovery is complete, what is looking way ahead? If we say recovery is complete, your excuse is finished. Next, you have to give something to boost this economic growth. Now that is where this economic survey becomes important, or that is where the government comes with the concept of Amrit Kal. For next few decades, how should India go? Where should India be in the next few? All this concept becomes important. Go ahead. Let's start the discussion with a small talk on what is taper tantrum. Exactly what is taper tantrum? If there is a different interest rate differential between US Fed and emerging economies, due to this interest rate differential, capital will flow from emerging economies to US market. This XYZ phenomenon is called taper tantrum. When it happened first time in 2013. What happened exactly? We have this subprime crisis in 2008. After the subprime crisis, what the US has done, or advanced economies has done, they were extremely put their market rates at low level. Why? Because it was similar to a pandemic situation. Recession was happening. So recession is happening. What is the objective of the government? Increase the money supply. How to increase money supply? By following expansionary monetary policy. So they were following an expansionary monetary policy from 2008 to 2013. Now by 2013, the recovery has become done. So they are reversing the trend. In 2018, in a very short time, the trend has reversed. Due to this short-term reversal of trend, US investment become much more attractive than investments in India. So the FPIs which we were discussing in the last class, they took the money from Indian and emerging economies and invested in the US economy. And what will happen? All the consequences we were discussing, like rupee started depreciating, our imports become costlier. All these impacts India was facing due to this taper tantrum of 2013. Now, if we go ahead, we come to this 2020, pandemic happened. That's the same response you can see. Pandemic happened, then there is a sudden drop in for a US Fed rate because the expansionary policy is needed to support the economy by increasing the money supply. So there is a sudden fall in after the pandemic. Now the pandemic is going on. Now the government is thinking like pandemic effect is neutralized. Now we need to get back to our normal levels. So this rise is also creating a similar effect like that happened in 2013. But due to so many XYZ factors, the implication is not that much as that of 2013. India is in much better position to handle this reversal of trend during this time. We already seen that FPIs, we are getting a negative FPIs during this year after continuous positive even during the pandemic times. But this is not enough. We have so much FDIs, we have so much remittances. So this FPI is also a volatile component. So this is also manageable in the economy. Go ahead. This is all the data variables showing how much is US Fed increasing the rate and how much it is impacting different countries. Developing countries like South Korea, South Africa, India, all these countries are experiencing an outflow of FPIs. Go ahead. Now we have the second part, like recent challenges before global economy. Global economy faced continuous set of challenges in the recent past. First one, the pandemic. Pandemic happened. Then this was like in 100 years, we never seen a situation like this. After World War, this was a situation where every country was imposing lockdowns and all the economy was shrinking throughout the world. So this was such a big event. And just when we were recovering from the pandemic, we have this Russia-Ukraine crisis. Russia-Ukraine crisis, what exactly happened? Problem is not the geopolitical aspect. Problem is it disrupted the supply chain and commodity prices. Disruption in supply chain, like Russia was a major source of gas to Europe, crude oil to different part of the world. Crude oil exporter was Russia, and Ukraine was exporter of food items, wheat, and all these many items. So this disruption of commodity prices lead to increase in inflation in advanced world. Crude oil become costly, all other commodities become costly. So there has been inflation which already was existing in the world because of the US Fed rate reversal. Fed rate was reversing, and there was also always an expansionary monetary policy was going on for 1 to 2 years. Due to this, there was already inflationary pressure in the advanced economies, and above that we have this disruption of supply chain crisis. So both these combined to lead to a situation where US is experiencing 8 to 10% of inflation. From US perspective, this is too high inflation. From Indian perspective, we are comfortable with 4 to 5% inflation. We are today expecting an inflation of 6 to 7%. So from our perspective, this change is little bit small, but from US perspective, from a 1 to 2% inflation level to 8 to 10% means that level of change is extremely high, and US and other advanced economy today are going through this phase. This is one of the biggest challenge world is facing. Now, tightening of monetary policy, this we have discussed so many times, I'm not going to repeat it. The same effect of taper tantrum, how it impacts a different part of the economy, we in detail discussed in last class. How it is an impact on rupee, and how if rupee is impacting like this, what RBI is doing. If RBI is doing this, how is it is impacting this crude oil imports into India, and how it is impacting Indian exports. All these aspects you have to be very clear about. Go ahead. Figures you can have a look from here. What is this slide is saying? So if rupee is depreciating means what? Dollar means if you want to get $1, you have to now give 80 rupees. Well, it was 70 rupees, suppose 72, something like that. So you have to give more money to get same amount of goods which you get from $1. So technically you have to get 1 kg or 1 barrel of crude oil. You have to now spend more rupees. More rupees means crude oil has become costly. So that get translated into all other sectors. So our current account deficit is increasing. Higher commodity prices and depreciation of rupees are the major reasons for this. Go ahead. This is all the data you can see, read out from here. Now this is the data on India's foreign exchange reserves. As I already told, into September around this time, we had the highest forex reserves around $621 billion. From after that, we are continuously falling this. Our forex reserves are continuously falling. Why it is falling? Because of all this, rupee is depreciating too much, and to support rupee, RBI is selling dollars in the market, and RBI from where it is selling from its forex reserves, and due to this, there is a fall in these forex reserves. Go ahead. What else? This economic survey saying India is expected to grow at 6.5 to 7%. It is saying that despite the world is going through a very tough times, despite there is a risk of monetary policy reversal in the advanced world, despite there is a risk of high inflation in the Western world, despite there is a risk of recession existing throughout the world, despite all these negative conditions, Indian economy is going to register very high growth of 6.5 to 7%. Now, what are the growth drivers in India? Surge in exports in FY22. In pandemic times, we have observed that India's export crossed the 400 billion export target set for 2022 year. If before pandemic you are thinking, you may think that this can never be achieved. From that position, even despite a total disruption or shrinkage of GDP during a pandemic, we have achieved this target somehow. So there has been a sudden surge in India's exports in financial year 2022. And what is the implications of this? This surge was very for a small period, like vaccines, all these Indian products were in demand in the market. So this was agriculture, wheat exports, all this. So this was only there for a small period of time. So, and in FY23, you can see that this surge is normalizing. But due to this surge, there has been improvement in India's manufacturing and in investment into India's manufacturing sector, and other variables in the manufacturing sector has improved. One variable you can find here is, I don't think we have graph for that. So manufacturing is like capacity utilization ratio. What is capacity utilization ratio? If you made a company where 100 goods can be produced, but actually you are producing 80 goods, then your capacity utilization is 80%. Similarly, so due to this surge, our capacity utilization has increased, and there has been more investment into the manufacturing sector. So this is a growth driver for the future, we are seeing it as. Secondly, domestic consumption. There, like I told in the GDP class also, domestic consumption is something which is controlling Indian economic growth. Around 58% of Indian GDP is contributed by domestic consumption, C component, like GDP is equal to C plus I plus G plus X minus M. C is the private consumption, investment, government spending, export minus import. Here C is only contributing to 58% of the GDP of Indian economy. Release of pent-up demand. What is pent-up demand? When something very bad happens, what people will think? Maybe things will go further bad, so they don't spend, they keep that money aside. Maybe if more pandemic come, next wave of lockdown came, where will you get the money? So people don't spend and keep accumulating the money. Now once this pandemic period is over, people are confident that now we have took 2-3 vaccines, now pandemic is not going to come back. So due to this, people start spending whatever they have accumulated during the bad times. So this will increase the C component in the, that is private consumption in the economy. This is one of the big factor while India was experiencing higher growth phase just after the pandemic phase. Release of pent-up demand. Concept clear? Only question can come is what is pent-up demand, and there will be 4 confusing options. Out of this, you have to correct pick the right one. Now one other factor in data factor, that is base effect. What is base effect? If there is a sudden disruption in 1 year, like if 100 is the value, you fall it to 80 rupees. Now next year you are just reaching 88 rupees, still you will register 80 to 88 means a 100% growth. So the change in the higher growth you experience in data due to the catastrophic fall in a before year, that XYZ phenomenon is called base. This also we discussed in last class, I guess. Go ahead. What are other India's growth drivers? That is capex thrust over the years. What is capex thrust? Capital investments. Capital investments, India has increased considerably over the years. If you look at this graph, like in financial year 2018, our capex investment was only 1.8 lakh crore. From there we reached 4.5 lakh crore. That means huge progress we have achieved in capital investment that is done in the economy. How this will return? How this will serve as a growth driver? Because these are creating assets. If assets are creating, this asset will be creating job, this asset will be creating product, this asset will be creating exports. So this asset, one way or other, contributing too many ways into the economy for a long period of time. So due to all this, capex reserves, India's increased thrust in capex reserves in last 4-5 years is one of the major factor for India expecting huge growth in the upcoming future. Private investments remains upbeat. You can see this graph here. Private investment, even though during pandemic it has registered a fall, now it is 3.3, much above the pre-pandemic levels. So private investment, like the I component in the GDP, this is also we are increasing. Declining scheduled commercial banks, gross NPA. So gross NPA also we are seeing that public sector banks, every banks it is decreasing. Scheduled commercial banks it is falling, public sector banks it is falling. Most of the banks you can see that the NPAs are falling. Now what is gross NPA? Gross NPA, net NPA and provisioning. Gross NPA is that if 100 rupees doesn't came back, that for 90 days there is no servicing of interest as well as principal, then we call it as NPA, and that NPA amount is called gross NPA. Now if 100 rupees become NPA, government has kept 80 rupees as provisioning. Now difference between gross NPA and provisioning, this difference is called net NPA. Gross NPA we will use for calculation of how much is the level of NPA in the economy. Net NPA we will use for calculating what is the banking health of the bank. If more provisioning bank has kept, then even though high gross NPA is there, bank can manage that risk. It is in Basel norms, that's why we are using Basel conditions, Basel norms 3 conditions and all, we will use net NPA. But all other aspects we will be using the term gross NPA only. Go ahead. Now the economic survey is saying that India is having inclusive growth. Inclusive growth means our urban unemployment is at a 4-year low, around 7.2%. Urban unemployment is reducing. Now we have this emergency credit linked guarantee scheme. This is giving loan to MSMEs. So our credit to MSMEs has increased. At the same time, these loans are very less NPAs, registering very low NPAs. So our MSME health system is improving. Now Manrega works, there is 60% of the Manrega works is work on individual land. That means not on public land, some other private person's land, people will be coming and working. This work is 60% of the share. And what it means is on his land there will be some asset created. So Manrega is also contributing to asset creation in the economy. After that we have PM Kisan, that means direct money transfer to farmer accounts. So this is also increasing, leading to rural households getting more money, more disposable income with rural households. That means more consumption, C component of the economy. Try to relate everything with this general GDP equation, C plus I plus G plus X minus M. Keep that equation open so that if any conceptually complicated statement comes, you should be able to pick whatever is the logic there. Then PM Garib Kalyan Yojana, Anna Yojana, that gives 5 kg rice and other pulses and other things during the pandemic time. So this has improved the impoverishment level of the economy. Now we will, for some of these schemes, we will look a little bit in detail. The first one is we have solved that the urban unemployment rate has reduced by 4-year low. That's around 7.2% right now. Now, where we are getting this data? We are getting from Periodic Labor Force Survey, PLFS. Who releases this? NSSO under the Ministry of Statistics and Program Implementation. Now, within the PLFS, you have 4 concepts. First one is labor force participation rate. What is labor force participation rate? Out of 100 people, if 60 people want to work in the economy, then 60 is the labor force participation rate. 60 people want to work, be very sure about it, they needed the work. It doesn't mean 60 people are doing the work. 60 people want to do the work, then 60 is the labor force participation rate. Now, worker population ratio, that is, out of the 60 there will be unemployment. Suppose there is unemployment, 10 people didn't got the job, only 50 people are actually doing the job. So worker population ratio is 50 or 50 by 100, you can say. This is labor force participation rate. 10 people will not get the job due to unemployment. That people are also included in the labor force participation rate. Now, what is unemployment rate? Then how much is percentage of people who are not unemployed, who wanted to work and not able to find work in the economy? Such kind of person are called unemployment. Activity status, usual status means? Usual status means it is for last 365 days you are considering, and how much, what is the status of his work. Depending on that, you consider stays activity usual status. Now, activity status, current weekly status, that is for 7 days. There is 2 status, that is, one is usual status, that is for 1 year 365 days, and other one is weekly, current weekly status, that is for 7 days. Go ahead. Then we talked about the emergency credit linked guarantee scheme, ECLGS. It is providing 100% guarantee for loans mobilized by MSMEs for identified lenders. Like if you're taking MSMEs taking loan from bank, you will get 100% credit guarantee. Loans taken from banks, MBFCs are also a part of it. 3 lakh crore fund is allocated for this, for giving this guarantee to this under the Atmanirbhar Bharat program. National Credit Guarantee Trustee Company, NCGTC, this will provide the XYZ guarantee offered by the government. Then MSMEs should not have any NPS if they have to avail the XYZ facilities. MBFC loans are also included part of it. Question, options can come from basic features of this XYZ. Which ministry is doing this? All these schemes are under Ministry of Finance only. I have no confusion over it. Go ahead. Now, if you look at the India's second chapter, we are coming into discussion on second chapter of economic survey. This chapter says India's medium-term growth outlook with optimism and hope. What this chapter is doing, it is giving a very comprehensive comparison of India's policies in last 8 years. So this will be like a very super document for mains. Because mains, you need to write government schemes, you need to write what is the purpose or thinking level of the government. So in that level, this chapter is most important chapter. For prelims, we are only focusing on the most recent schemes which may have a chance to come in the exam. Otherwise, if there is no chance to come in the exam, we are neglecting it. For information, government objective is reforms, bring in reforms so that there will be sabka saath, sabka vikas objective will be fulfilled. And government is ease of business plus ease of living. Ease of living means people have better access to electricity, better access to sanitation, better access to all these basic amenities of life. Ease of business means there should be free flow of capital into the economy, there should be transactions happening freely in the economy, digital transactions are coming, there should be compliances, high level of compliances, people should pay tax, all this will come under ease of business. So these are 4 dimensions to it to increase the agriculture productivity. To get this objective, you need to do 4 things. Increase the private sector participation in development, trust-based governance system should be implemented, and government should be focused on creating public goods. Go ahead. These are the 4 parts you can see here. Go ahead. need to note down, then note down first. Now, what's the next part? We are coming into details of all of this. Creating public goods means what? Government are implementing so much of schemes for last 8 years. These schemes are like mostly last 8 years scheme, but your focus should be on most later schemes which have higher chance of coming in the examination. Bharat Mala scheme, what it is? For road connectivity. It is under Ministry of Road, Transport and Highways. Now it is creating so much these corridors throughout the country, road corridors throughout highways throughout the country. Sagarmala, it is port infrastructure development, port-led development idea has been taken up by this. It is under Ministry of Ports. Udan scheme means for two aspects is there for creating new regional routes in the promotion of new regional routes in airports, and creation of new airports are also part of new scheme. It is under Ministry of Aviation. National infrastructure pipeline, we will see in detail this. After that, two most important things for this year exam is open network for digital commerce, ONDC, and account aggregator framework, AA framework it is also called. These two we will see detail in the coming slides. What else? Now the other creation of assets means it's not only physical asset, it is also digital assets. Digital asset, we have this eShram portal for registration of unorganized workers. These all are leading to more formalization in the economy. Swanidhi portal for street vendors, Udayam portal for MSMEs, GST and e-way bill system has been already been implemented. PM Gati Shakti, what it is? It is a governance reforms, like different ministries. Pehle clearance was coming from segregated. Now every ministries are registered under this PM Gati Shakti portal, so that the whole the clearance system, whole the interministerial coordination will be ensured through this, for especially for implementation of infrastructure projects. Go ahead. Bharat Mala, I already told it is under Ministry of Road Transport and Highways. Objective is these all creating economic corridors, inter-corridor feeder route, national corridors, creating roads, better roads. It is the objective of Bharat Mala initiative. 34,800 kilometers road has to be constructed in 5 years or so. That is the target given. Similarly, Sagarmala means port-led development is the objective, which is port modernization, connectivity, port-led industrialization, coastal community development. These are different subsections of Sagarmala scheme. Basic core idea is port-led development. This is under 150 projects are undertaken. This is under Ministry of Ports and Shipping and Waterways. This ministry is undertaking this XYZ initiative. Go ahead. Now we have National Infrastructure Pipeline. What is National Infrastructure Pipeline? Simply a new model to fund, to mobilize more fund to infrastructure, long-term infrastructure development. How government is doing this? Government has selected 102 lakh crore worth of project has been selected, and this project has to be propounded under this NIP pipeline. How funding is done? 39% of the funding should come from center, 39% from state, and 22% has to be mobilized from private sector. Most of the project, like 25 lakh crore of the 102 lakh crore, is going into energy sector. After that, roads, irrigation, mobility and networks are the other important sectors. So basic idea is mobilizing more fund to infrastructure development, and a federal system where central and state come together and invest more money into long-term infrastructure creation has been envisaged under National Infrastructure Pipeline. Go ahead. What is national asset monetization? Don't confuse asset monetization with any other of the infrastructure schemes. In all other infrastructure, government is either spending or mobilizing money from market or other governments and spending for creation of infrastructure. Now asset monetization come only for those projects, only for brownfield projects. What are brownfield projects? Already they have been created, not in greenfield project. There is no concept of asset monetization. Only already government has created a road. Already government has created a road. Now this maintenance and all other functioning of the road will be given in lease for private sector. Now when private sector take this asset for lease, they give a lump sum money to the government. Now government will invest this lump sum money and create more infrastructure. So after this lease period is over, this asset will be returned to the government. So there is no transfer of ownership. Only for a specific lease period, government is giving the XYZ asset, already created asset, to the private sector to run the asset and maintain the asset and take revenue from the asset. Now using this revenue, so by taking this revenue, they will give a lump sum to the government. This will be invested in the greenfield projects and new assets will be created throughout the economy. This is the core idea of asset monetization. Cycle you can see here, same idea which we have discussed right now. Now what else? Different projects, government has created a target of 6 lakh crore asset monetization in next 4 years from 2019. Now 20 to 25 period, 6 lakh crore target has been set. Now 15 railway stadiums, 25 airports, 160 coal mining projects all has been put up for asset monetization. All this you can read from basic facts, how much of this is XYZ here. Finish statement is there on basic concepts, like there is no permanent transfer of, there is no privatization of national asset is happening in asset monetization. Go ahead. Then this is more important concept because this is more recent one, National Land Monetization Corporation, NLMC. What is the objective of this organization? This is a new company set up by the government. Objective is, different government organization has so much surplus land, especially the railway sector. Railways, defense have so much surplus land. So this land has to be monetized. Either it has to be sold to the private sector or it has to be given for lease to the private sector. So taking up this initiative, government started this new organization. Monetizing unused and underused assets, especially land assets, are the objective of this XYZ company. It is created as a wholly government of India owned company. 5,000 crore is the initial share, authorized share capital. Paid up share capital is 150 rupee crore. No need to go deeper into it. Know the objective and know the basic functions, basic features of the XYZ scheme. No, don't go into it. Too much technical things. Now this is very, very important for this prelims. Everything about ONDC you should be very clear about. Even after the class, you go and search and study this, because huge chance for coming in the exam, ONDC as well as account aggregator. What is ONDC? Now we have, everything is getting digital. Digitalization of Indian economy is a reality. You accept it, now, even from digital transaction to buying products to going into XYZ, transportation to food delivery, everything is online. Now what is the challenge with this? There is monopoly in this sector. Amazon, Flipkart is delivering most of the products. And what is the problems with these websites? Whatever products you see are decided by the algorithm. Decided by the algorithm means the algorithm can force you to buy certain products. The algorithm can manipulate the customers to give preference to certain products or give not preference to other products. So who usually suffers in all this process? MSMEs, small industries which doesn't have so much of a brand or money power to compete with the bigger players. So to avoid this, and there is a other problem of interoperability. If you remember, when digitization of Indian transaction system has begun, there were a huge problem of interoperability. Like if you are using BHIM app, you cannot use another app. If you are using Paytm, you cannot use Bharat Pay. There cannot transfer in between. So interoperability that time was a very huge issue. Now how government tackled this? By creating a single framework called UPI. Now everything is transformed into UPI. That means the inter problem is completely avoided. So here also we have different services. Like I already told, product buy karna services, transportation services, food delivery services. So many services are there online. So government is trying to achieve this algorithmic bias, that is in favor of bigger players, not in favor of MSMEs. Government want to bust this. Secondly, government want to but this interoperability problem. What they achieved by creating UPI, government is trying to achieve in other sectors. So government with this objective has created this ONDC, Open Network for Digital Commerce. Here you can club all the services under one app, and this app will provide you mobility services, e-commerce services, delivery platforms, every services can be clubbed, and anyone can come and put up their products here, and every product will have equal preference. Even if you are MSME or even if you are Apple Mobile, everyone will have equal visibility under this platform. So the algorithmic bias component is completely avoided. This is the objective, this is the pathway, or this is the project that government has came up with. Open API means using this XYZ application interface, different variants of this application can be made up. It is not a closed system. Closed system means like Amazon. You cannot do only with Amazon. You can register your product with Amazon, then only you will put it in the site. Here you can use this database and evolve a variant of this for your own XYZ purposes and all. Similar to UPI, like UPI has different phases depending on different applications. Like you can sell money with phone number, you can send money with QR code. Like that, for different variants of applications, you can use this as a single point tool, single platform. So this is the objective, concept is clear. Rest, I strongly recommend you go and read more about this. Great initiative. That's why I'm so much stressing. You should read more about it. Even if a very factual question comes from this, you should be able to answer this, because this is such a big development. If this worked out, this can be next UPI, then that is disruptive development. UPI disrupted the payment system throughout India, and it is now getting global. Singapore has launched something very similar to UPI. Other countries are also getting motivation to adopt UPI. So if this is something that is next thing that is coming up, so you should, and UPSC usually go for questions from upcoming technologies, upcoming developments. Okay, that you have to check it out. Go ahead. Similar development is account aggregator framework. What does it mean? Basic idea is, today you have your bank account. You have bank account with ICICI Bank, you have bank account with HDFC, you have bank account with SBI Bank. So many your bank account you have with 10 different banks. Now if you want to do mutual fund investment, you will start account with some other mutual fund. Now if you want to invest in securities, you will start some other. If you want to do investment in share market, you will start something totally else. So for every economic motive, you have to start account with different people. You have to start demat account. Objective is all money transaction, all financial data is being there, but you have to depend on this data, like split across different platforms, different groupings. So it's become very difficult to track, and it become very difficult for people to manage. Yes, every time forgot password is our password. Yes. So to settle all this issue, government has come with concept called account aggregators. Now there will be account aggregator. It will say that I will manage all your data. You don't worry about it. You just tell me what data is with whom and give me the consent to manage it. So if you with one account aggregator, you can manage all your accounts with all different sections. Here one thing very important is, government is not coming and collecting your data. Account aggregator only come into picture when you give your data. You give your consent to keep your data there. Government, RBI, it is an RBI regulator entity. Account aggregators will be. RBI and regulator mean they will ensure that this data is safe. This data has highest level of encryption. If data transfer is happening, this is highly encrypted transaction tools are being used. So this is what only government does. Rest, government is not going to come and track your XYZ data. Government is, this whole system is operating only based on consent, and after the user give the XYZ data to the system or account aggregator. Go ahead. This is all the concept that is diagrammatically represented here. Now what else we have? This we have to move towards this trust based governance system. For that we have this IBC, RERA was there, decriminalization of minor offences. All this has been undertaken in the recent past. I am not going too much into it because this has been little old ones, and recent current affairs concept we already discussed. So basics of IBC, basics of RERA, I am not going into it. If you want, interested, you can read more about it. So go ahead. Promoting private sector as co-partner in development. This is very important. This is very much visible, clear objective of current government. That is, the private sector should be partner in development. Private sector should carry forward the government. It is also said that government has no role in business. Business all is responsibility of private sector. Government has only the role of regulator. Now disinvestment policy. What is disinvestment policy? What is the difference between disinvestment and privatization? Disinvestment can be done for 10% disinvestment, LIC disinvestment, something. It can be less than 51%, less than 51%. That means the ultimate managerial control with government only. Now, why government is doing disinvestment? To raise money. Now, privatization is a totally new concept. Government is giving the managerial control to private parties. That is, more than 51% of the stake will be given to private parties. So private party can XYZ take the decision. Here the objective is not simply to raise the money. Air India, why it is privatized? Not to just get the money for the government, to improve the efficiency in the system, to get better managerial practices, to get improved better systems in running the XYZ industry. That is the objective of doing privatization. While disinvestment is a broader concept, it can be done for 10%, 20%, even 100% disinvestment can also be done. Here the more objective is focused on raising XYZ money for XYZ purposes. Clear? What else? PLI schemes. What is PLI scheme? What is the objective? It is therefore 22 sectors and all. What is the objective? To create champions of in each sectors. And what is the, how is the incentive module? Like if you are producing 100 units today, if you produce 200 units tomorrow, for this extra produced 100 units, you will get 4 to 6% tax rebates and other incentives. This is the general structure model. So you are being incentivized to produce more. This produce more means it can be different for different sectors. In semiconductor sector, it is design linked initiative, design linked incentives. You make new chip design, then you will be given XYZ incentives. Or in other sectors, it can be assemble in India. Assemble in India initiatives are also promoted under this PLI scheme. Liberalization of FDI policy, more sectors are being open. I am not going to speak about it. National Logistics Policy 2022, that also not too much relevant. You can go and read about it if you are interested. Now this is PLI scheme XYZ, mobile phones eligibility. The objective is 4 to 6% incentive will be given on the incremental sales that XYZ company is achieving. The major objective is to create champions in different sections. Now, enhancing productivity in agriculture. What is one of the peculiar thing of agriculture? During all these pandemic years, when industry and services are registering shrinking of GDP values, agriculture was still going during the pandemic. Agriculture in last 6 years has registered a high growth of 4.6%. That is considerably higher growth. And these are different initiatives of government that prompted this growth, from soil health card scheme to micro irrigation fund, promotion of FPOs, ENAM, agriculture infrastructure fund, and Kisan Rail. We only discuss on this agriculture infrastructure fund. What is its focus? Whenever anybody talk about this, credit supply into the agriculture system. Most of the credit is talking about short term credit, like for buying the seeds or buying the fertilizer. For that the farmer is given, that is the credit that is being talked about. But farming, if you really need to increase the productivity of the farming, there should be a more focus on long term credit into the agriculture sector. So this fund, like agriculture infrastructure fund, the main focus is to give more long term credit into the agriculture sector. That is the objective. And 1 lakh crore rupees fund will be mobilized into the agriculture sector, and this XYZ development, startups, post harvest, cold chain, all these are will be focus areas of this XYZ fund. Go ahead. So that's all for today. What we have discussed briefly, first 2 chapters of economic survey. Conceptually, we have most of the things we have covered already. Only if there is a new element, you focus more on it. Rest, most of the things are factual elements, and some government schemes are there that you should more focus. Rest, conceptual economy, we already covered in our previous lectures. That's all for now. Thank you so much. Very good morning. So this is the second class on economic survey. So in this class, we will be focusing mainly on the third chapter of the economic survey, that is based on fiscal developments and other major aspects related to it. So as I said earlier, our main focus is learning economic survey from prelims point of view. All our discussion, all our debates will be based for something XYZ you are useful for prelims. All our mains discussion we will do later. Let's get into the business first. So this is a general third chapter, fiscal development and revenue release. This is the general trend in Indian economy. GDP growth is happening at, expected to grow at 6 to 6.8% this year. Fiscal deficit during pandemic time, it gone to a high of 9.2%. Now it steadily falling, it reached a 6.4% level. What is fiscal deficit? Government borrowings, technically it is how much is the expenditure of the government minus revenue without the borrowing component of revenue. What is inflation? Inflation, India is experiencing a high inflation of 6.8%. It is in this context, RBI has recently given the explanation that, like according to the monetary policy framework, if for 2 quarters there is inflation beyond the range of 2 to 6%, then RBI has to give an explanation to the government and what kind of actions can be taken for this. Now RBI for this 6.8%, it has been for some time. RBI given the explanation that this is a supply side inflation. This is a supply side inflation. So what is supply side inflation? Like crude oil prices. Global crude oil prices are high, and that high global crude oil prices is getting imported to the India. This is also leading to the concept of imported inflation. So RBI is saying it is supply side inflation, and RBI role is limited in this. Now what exactly RBI can do in this during supply side inflation? If RBI doesn't do anything, what will happen? Like basic amenities like food, fuel, all these become costlier. Now if food, fuel are becoming costlier, people's income, more part of their income will be spent to, more part of their income will be allocated to food, energy and all these expenses. If more part is allocated to this, there will be less private consumption they will be doing. If private consumption is reducing, then that will lead to fall in GDP. So how RBI can interfere here? Now if people are spending more money on this, there is one more option, people will borrow this money. People can borrow and spend more also. Now this borrowing is RBI, which RBI can control. How RBI control this? By increasing the repo rate. If this borrowing is coming from RBI by printing more money, then this will lead to total disruption. So this is the basic things. Then all other sectors are like after the pandemic, reversal. All other sectors are like services sector is growing at 9%. Industrial sector is also registering a growth of 4.1%. This 10.3% is due to the surge in exports during this period, 2000 FY22 period. There has been a sudden increase in exports from India that we discussed in the last class. Due to this, we are seeing a huge jump in this industrial sector. And this is what government is saying. This will act as a cushion for manufacturing and industrial sector in the upcoming years. Agriculture sector that has been consistently performing good from 3.33 to 3.5% it is doing. Forex reserves, it has fallen from, I already told so many times, from a high of 621 around $billion in September 2021, it is consistently falling and $560 billion it has reached right now. So that is basic data on Indian economy. Then we have this different fiscal indicators. Fiscal deficit, already told, it is falling into a 5 point, it is expected to be 5.9% in this year. The outgoing year it is 6.4%. So government is like, this is within the expected real limits of the government. What is primary deficit? Exactly. Fiscal deficit minus interest component to previous loans. That will give exactly how much the present government is taking, how much more loan. That is indicator will be getting from primary deficit. India's primary deficit is around 2.3%, that is expected. Now it is 3%. Now what is revenue deficit? Revenue expenditure minus revenue receipts government is getting. That is around 4.1%. Government try to reduce it to 2.9%. Effective revenue deficit. Revenue deficit means like there will be central government's revenue receipts. If you look in this revenue receipt, there will be some amount that is transferred to states, and when from this amount that is transferred to state, some part of this will be spent on capital expenditure. So if you remove that capital expenditure component, you will get effective revenue deficit. That is currently at 2.9% and government expected to reduce to 1.7% this year. Go ahead. All basic concepts you should know, and a fair distribution of data you should know. 10% in fiscal deficit is there, you should be able to say that is a wrong statement. That much awareness you should have, and all these indicators should be placed below the fiscal deficit only. Go ahead. Now developments in union government finance. Revenue side we are seeing it. The union government is on track. We already told that fiscal deficit is continuously falling from 9.2%. Now it reached 6.4%, and government is again expecting for it to fall. So the economic survey says government is on track to achieve the fiscal target for FY 2023. Conservative budget assumptions provide buffer for global uncertainties. Like we'll discuss this in later. It is coming. Performance of union government, non-debt service. All this we will discuss as things goes. What is more important right now is how government's revenues are coming. Gross tax revenues of government, it has direct tax component and indirect tax component. Which one is higher? Direct tax is 14.1, indirect tax is 13.0. So direct tax component is slightly higher. Which all it contains? Corporation tax. Recently, what is the development happened? In 2019, we have reduced the corporation tax to 25%. It is one of the most competitive corporation tax economy in the world right now. And what is other development that happened? For MSMEs, like for supporting MSMEs, for companies with 400 crore turnover, we have kept this under lower tax bracket. So 400 crore bracket means so many or most of the Indian MSME companies will fall into this bracket. Not just MSME, most of Indian companies will fall into this bracket. So this has been supporting Indian XYZ companies. Taxes on income other than corporation tax, that will include all this personal income tax, all these other taxes that is associated with this. Second, indirect taxes में क्या सब होगा? Service tax होगा, union excise duty, custom duty, and GST will be there. GST will be the dominating factor, contributing 7.8, whatever is the number, lakh crore rupees it is contributing. Go ahead. Composition of India's tax profile. Like same thing which we have discussed right now in diagrammatic form. Most of India's highest contributor to India tax is GST, that is contributing 28%. Now income tax and all is 26%. Corporate income tax is 26%. Excise duty 26%. Customs duty 8%. That is the broad tax profile of Indian government. Exact numbers are not important, but at least you should know that GST is contributing too high. Highest it is GST, it is much higher than all other XYZ components. At least that much you should know. Now what is interest receipts? This is like non-tax revenues of government. Numbers are not that much relevant. At least know that what all constitute non-tax revenues of the government. Interest receipts from XYZ, if government has given loan to other state governments or other external bodies. Interest receipts, dividends and profits, external grants, these all constitute the non-tax revenues of the government. Previously what we were talking were about tax revenues of the government. Now in FY 15 to 23 amount, like this is the disinvestment target. Not target, disinvestment what government have achieved. 4.07 lakh crore government has realized in last 8 years from disinvestment. We already talked what is the difference between disinvestment and privatization. Disinvestment is mainly done with the objective of raising money, while privatization, the objective is increasing efficiency in the system, better management. All these are the objectives of doing privatization of XYZ company. That's why privatization, even BPCL privatization was in news. So many people were opposing BPCL privatization. Why? Because this is not a loss-making PSU. This is a profit-making PSU. Why government is selling a profit-making PSU to the private sector? The objective is not go to get money to the government. The primary objective is let this institution expand. Let the private sector practices efficiency, all these gains, ease of taking loans, all these better improvements bring into this XYZ organization. That is the objective of privatization. That's why government substantiated this. Go ahead. What this is showing? Capex reserves. These also we already discussed. Like there has been a steady increase in capital expenditure of the government. Right now it is at 2.9% of GDP. That is extremely high, because if you look at here, it is only just above 1.5. So we in last 5 years we almost 2 times increased the GDP contribution of capital expenditure. Same you can see here, that is rising share of capital expenditure, union government expenditure. If you look at earlier, it was only 12% was union government expenditure was spent on capital assets. Now it is nearly 19% to 20% it is. That is one of the, you can say, greatest achievement of this XYZ government. Go ahead. Now where this capital expenditure is going, most highest is not railways, it is road. Road transport and highways are taking most of the capital expenditure. If there is option, it is high tendency to go toward railways, but it is not railways, it is Ministry of Road Transport and Highways that is taking most of it. Then there is all other elements. Healthcare and welfare come very last, not priority of the government, I think. The pandemic is over, so everyone forgetting it. There is split within the defense also, like some part of defense expenditure is going in capital and some part, most part is in revenue expenditure part component it is. Go ahead. Now states, performance of state governments finances, consolidation of what is happening in state governments. You can see here, this is the gross fiscal deficit, and gross fiscal deficit is of state is going at 3.4%. Even during pandemic, it went to 4.1%. Then it is mounting around 3.4%. What is the central government debt during this time? fiscal deficit, this point to 9.2%, and this here is some 6 point some percent, 6.8%. So if you look at central, what and state is doing, state has much smaller leg space during crunch time, especially during pandemic and other times. Now this is, we discussed this in Saturday class also. Like government, what government is doing, according to Article 293, if any state government has outstanding loan with the center. So technically all state has outstanding loan with center. If there is that criteria is met, state government should take center's permission for raising loan. So using these powers, center will prescribe how much of loan state can raise. And what is the prescription now? State can go up to 3.5% of GSDP. And there is performance based incentives. That means if states are implementing certain reforms, reforms in agriculture sector, reforms in discom sector, if these reforms are being implemented by the state, they will get plus 0.5%, plus 0.5% like this. Okay, so these incentives has been put forward, like performance based giving money system has been put forward during pandemic by the central government. Now why they are talking about this is, where it gone? Why we are talking about this is to discuss about this market based economic dispatch of power. We have done a question in Saturday discussion classes. What exactly this is? This is related to discoms. This is related to discoms. How it is functioning? Suppose Delhi is there. Delhi is there. Now Delhi discom is, suppose Tata is distributing or Reliance is distributing power in Delhi. Now this is our discom, and Delhi has certain demands, like it varies every day. Demand of electricity within a city varies every day. Now how it is functioning, there will be different electricity supplying companies, distributors giving to this discom. Now this discom has signed deal with, suppose ABC, it has signed a deal with A only for how much money it will procure. Suppose this is 10 rupees, 10 rupee per unit, it will procure from A. This money is fixed, 12 rupees per unit, it will procure from B. And suppose 14 units per unit, it will procure from C. This money already they signed the deal. Now what Delhi will do is, or discom will do is, depending on the forecast for next 3 days, it will tell A that I need 500 units, I need 400 units, I need 300 units. This number, depending on demand, they will communicate to the supplier and they will supply the XYZ units to it. Now this is what is happening right now throughout the country. Now what is the issue with this system? Here the most efficient unit is A unit, but it may not be feasible that Delhi will be able to allocate most of its unit to A. Delhi might, due to its already agreed pre-agreement, Delhi has to consume from other distributors also. So this may be selling at a much higher price, 14 rupees, then still Delhi has to buy 14 rupees electricity for this. Limited options will be there, like the prices are already not market decided, they are already pre-decided rate mein aata hai. So government is trying to solve this problem by bringing in market based economic dispatch of power system. How it works? There will be a central market. Every discom will take from this, every power producer put your electricity into this, like a national grid concept. Everyone put your electricity here and every discom take electricity from there. So the demand and supply, depending on demand and supply, price will be set, and this price will be same for all. So this is the new proposed market-based economic dispatch of power system. Too much technical is not required. At least इतना पता होना चाहिए. This is related to electricity distribution. This is a proposed scheme for improvement of efficiency in the electricity transmission as well as discom distribution sector. Go ahead. Now government is saying we have cooperative fiscal federalism drives the fiscal policy. What is cooperative? Transfer for centers to state has been increased. According to Finance Commission, 15 Finance Commission, 41% of the transfers from center to high divisible pools. Out of divisible pool, 41% will be distributed to states. Now supporting GST compensation, like this compensation, central government is saying they have given during the crisis, so they have helped the state government. State government is saying whatever compensation we had to get, we didn't got, we are losses in this. That is non-BJP states will be saying from this perspective. Enhanced limit of borrowing limit, like pehle it was 3%, now 3.5%, plus you can borrow more if you have implemented the reforms. Center policy for state capital expenditure, like Gati Shakti. Gati Shakti nahi, National NIP scheme, National Infrastructure Pipeline. Out of 102 lakh crore that is envisaged, 22%, that is not 22, 39%. How National Infrastructure Pipeline is being funded? 39% by center, 39% by state, and 22% by private sector. So states are almost pushed to spend more on capital and in capital expenditure. States are pushed to more contribution towards capital expenditure. So these all one we discussed. Now what is debt to central union government debt to GDP ratio? During pandemic times it was, pre-pandemic times it was in like 45, just above 45 ranges. Then during pandemic it spiked to around nearly 60, 59%. Now government is saying it is again normalizing to the standard levels. And one more concept here is outstanding liabilities of general government, gross fiscal deficit, all this you can see. Like this is combined rate of central as well as state government. If you remember the encasing committee was formed for revising of FRBM targets. And what he said, instead of fiscal deficit, our focus should be more on debt to GDP ratio. And he told us sustainable range is 60%, 40% for center and 20% for states. Now we are at a level of 86%. Previously we were at 70, 68%. So from here 60% was still achievable. Now we have reached a higher level of 86% due to pandemic basically, and it is also coming down. Government expect it to fall down in the recent past. Yes, you can see here, like you can see here. It will, like it is due to this state government is having financial stress right now, but that is also expected, like if central government is contributing major part to it, 59%. If this is falling, then eventually it will also fall. Debt profile of government in India. There has been UPSC PYQs from this also. Most of India's debt profile where it is. Government doesn't take loan from outside. All of India's loans are taken from, 95% of India's public debt is from internal liability only. Internal liability and only external liability. ये गलत लिखा है ना? 95% of India's liability is from inside and 5% of India's liability is from outside. Elongation of maturity, what does it say? Earlier times, like this yellow line, that is for 2012-13 and this green line is for 2021-22. Earlier there was more interest in short-term government securities or short-term maturity bonds. Now we are shifting more towards long-term. Like now, if you look at the overall health of the economy, more investment is going towards long-term capital XYZ. Now public debt, what all public debt components are? Public debt means internal debt plus external debt. If you look at FY latest data, internal debt is coming at 114 whatever the lakh crore, 114 lakh crore out of 121 lakh crore is internal debt. External debt is only 6.59 lakh crore. So this should be technically reversed, right? Now beyond that, public account liabilities and external commercial borrowings, extra budgetary resources or extra budgetary borrowings. What is this? Extra budgetary are like, instead of government taking the loan, some PSUs are told to, like Food Corporation of India, told to take the loan from the XYZ market. Now this loan will not be shown in the budgetary documents of the government, but this loan principal as well as interest will be repaid by the government from the budget in the future budgets. So these kind of loans are called extra budgetary resources. Good thing is government is moving towards eliminating EBRs, and this year there has been zero extra budgetary resources raised by the NEPSUs. So the basic structure you should know, rest exact 1-2 numbers are not important. If any statement can come, that can come on the general statements, like most of India's loans are based internal raised or external raised. This kind of question can come in the exam. That time you should have the clarity to correctly pick whatever it is. Public account means it will be spent during without parliamentary approval. Later that it will be put into that fund, that will small component. It will be like public account, there will be always money. First you spend it, then it will be XYZ raised to fund whatever it is. So total public liabilities means summation of all these, like internal debt, external debt, that is totally called as public debt. Now public debt plus extra budgetary borrowings plus these public account liabilities, that is totally is called total liabilities of the governments. So that's all from the third chapter of economic survey. In the next class we will do the rest of the chapters and we will wind up the economy session that is continuing. Thank you so much. Very good morning. So welcome to the third part of economic survey for prelims discussion. So in this class we are discussing first 3 chapters we already discussed. 4th chapter, 5th and 6th chapter we will discuss in this class. One thing to focus is whatever we are discussing in this class, all our focus is specifically for prelims. Anything that is related to mains or anything that is related to like historical aspects. So many historical aspects are there in this year's economic survey, like comparing 2010s with current crisis, comparing 1970s crisis with what is happening right now in the geopolitical world. So all these aspects we are not at all covering. If anything is important for mains, we will conduct another class. These classes, everything we are discussing will be solely from the point of view of prelims. Let's get started. Before starting the class, few things I shared in this Telegram channel. First one was recently the finance bill 2013-23 was passed. Now what was one interesting feature in this, which is so much relevant to whatever we are discussing right now? Debt mutual fund. Debt mutual fund. What it is? What exactly is mutual fund? There will be a fund manager, he will collect fund from local investors. Now he will pool the whatever investment, retail investment he is getting. Now he will have the expertise where to invest in the, where exactly he will go and invest? In the share market. Share market is what? Is it debt market or equity market? Mostly it is equity. So local normal mutual fund, It is equity. Basically, it is equity market. This mutual fund, normal mutual fund also, if anything came, don't consider concept of debt mutual fund. Wherever you see in mutual fund, it means they are investing in share market. They were investing in different equity options. Now, he will invest in share market and divide the whatever the returns he is getting with the retail investors. Now, this is what a normal mutual fund. Debt mutual fund means instead of share market, he will invest in debt market. Debt market means what? He will invest in bonds. He will invest in government securities, treasury bills and all this. So what is speciality of this? Where will be higher return, here or normal mutual fund or debt mutual fund? Equity mutual fund means there is risk element is higher and return is also, chance of return is also very high. While the debt mutual fund means here coupon rate or interest, they are mostly fixed. So the return what you get will be comparatively lower. At the same time, this will be having more, if government securities or treasury bills are there, this will be having sovereign guarantee, like government is the guarantee. So the risk element associated with negligible, very low, associated with debt mutual fund. Those people who want to keep XYZ money for short-term purposes, they are the one who keep the money with debt mutual funds. Local mutual fund is mostly for long-term investment, like 10 years, 20 years. This is for short-term investors are mostly preferred this. Now, why we are discussing this? Why we are discussing this? Because the Finance Bill 2023. There is a concept of indexation. What it is? Suppose one person in that example that is given in the Telegram group, suppose a person in 2010 invested rupees 1 lakh rupees. 1 lakh rupees in debt mutual fund. Now, in 2021, he is withdrawing 2 lakh rupees. Suppose whatever the return is, coupon, whatever it is increased to 2 lakh rupees by 2021. Now, what is the interest he is getting, or what is the profit he is getting? 1 lakh rupees. Now, it is having a term more than 3 years, so there will be capital gains tax. Now, when capital gains tax is been imposed, it is not imposed on this 1 lakh. It is imposed on indexed figure. That means, suppose during this period there was a 6% inflation. If we consider 6% inflation, every year if we increase 6%, this 1 lakh become, suppose 1.8 lakh by 2021. Now it is in this difference, 1.8 lakh and 2 lakh. It is in this difference, whatever he is earning is 20k. It is on this 20k capital gains tax or whatever government tax is applicable, that will be calculated, not on the net profit. This XYZ process is called indexation. Now what the Finance Bill 2023 does? It does do away with this indexation. Now if you are investing, till now if you are investing, you have the option of indexation and you can save some taxes when getting the profits out of it. After this bill or after April 1, if you are investing in debt mutual fund, you will not have this XYZ benefit. Clear? Go ahead. Start today's discussion. First is 4th chapter, monetary management and financial intermediation, a good year. These are, most of these concepts are like you might have heard. I am also taking this for 3rd time or 4th time. In PY, like question discussion classes, we have already discussed most of these concepts. Otherwise, in other part of the economic classes, we have covered these classes, concepts in one way or the other. Here we are just taking it as a very fast revision module. Now tell me, what is the inflationary pressure that is holding in the economy throughout the globe in the recent past? First one is pandemic. During pandemic, most of the advanced countries, what they do? They followed a easy money policy. That means they increase the money supply. They indirectly, many countries try to print more money. Now what is the implication of this? High liquidity. High liquidity means GDP growth was almost negligible, or there was no growth happening during this pandemic time. Less number of goods are chased by a huge number of money due to high liquidity. What will happen? Consequence will be inflation. This is one reason. Now, this is not enough. We had this Russia-Ukraine crisis. What Russia-Ukraine crisis does? Disrupt the supply chain. Crude oil prices shoot up. Agriculture commodities prices shoot up. And so many supply chains to Europe and other part of the world were disrupted due to this. So many sanctions were put on Russia. So all this affected the commodities. Supply chain XYZ was affected due to Russia-Ukraine crisis. Then during the same time we have this slowdown in China. China's zero COVID policy. All this led to slowdown in China. And what is the implication of slowdown in China? Lot of industries are dependent on raw material imports from China, like rare earth metals. Other metals are also so much dependent on China. These industries throughout the world faced crunch, including the semiconductor industry, solar panels. All this industry faced crunch due to slowdown in China. Otherwise, when pandemic was happening, second wave time and all, China was growing at that time. Even though the whole world was stuck down, China was growing. So if you took at globe as a whole, so much of this impact was, or growth impact was dampened by high growth rate of China. During this phase, this was also taken away. So all this contributed to situation of high inflation. Now in high inflation is there, what will be the response? Throughout the globe, this is the scenario. Every country is increasing the, whatever is the standard repo rate or standard operating Fed rate they are operating. Every country is increasing this. From India, if you look, from around 3 point something, we have reached now 6 point something is the recent repo rate we are having. Go ahead. SDF, what is SDF? All this we have discussed so many times. What is repo rate? Banks are lending from RBI and banks are putting their, banks are lending from RBI. RBI is giving money to the bank for short-term adjusting short-term liquidity, that is repo rate. Say collateral will be given as government securities as collateral. Now what is reverse repo? If there is excess liquidity in the bank, bank will keep the XYZ money with the RBI or central bank. Now the reverse repo was our earlier corridor, policy corridor. Now it is changed to SDF. What is SDF? Same as reverse repo. If there is excess liquidity in the market, banks can keep this money with the RBI. They will get whatever is the rate. But this, for this, banks will not get collaterals. No collateral. If no collateral, then that XYZ is called SDF. Now SDF and MSF is the standard policy corridor. Difference between these is called the policy corridor. MSF is repo rate without collateral is there, but this collateral is taken from SLR quota. Then that is called MSF. Okay, these all things we discussed in the monetary policy class. Go ahead. Now, if we look at the government securities, what we learned about this, how will government security yields respond to changes in the inflation? Government security yields and market interest rates. These two things are very much synonymous. Why? If an investor comes, if government yields are not, market rate is increasing, then this fixed deposit rate will increase. Now, if an investor is coming, if he is saying high fixed deposit, he will put all his money here. Now, he will put all his money here means what? Government debts will not be getting enough money. So, there will be less demand for government bonds. Less demand means prices will fall. Prices will fall means yields will increase. So, they will adjust itself so that the market interest rate and government bond yields are somewhere synonymous. But there are huge number of other factors. This is an ideal situation we are assuming. There are so many other factors which are impacting it. If we look at the recent performance of this bond yield, like till a point it was increasing, like Fed rate or bank rate was increasing, repo rate was increasing. So it was synonymously, it was increasing. But after a point, like after say June 2022, then there is a zigzag performance of bond yield. Why this is happening? Two reasons are being said by the economic survey. One is normalization post the pandemic. During pandemic, for money supply and for these all other macroeconomic parameters, there has been huge amount of volatility for exchange rate, everything. So this whole volatility is being normalized, or many part of the country is coming out of the pandemic phase. So this is one reason why bond yields started falling, or bond yields are responding in a different way. Higher interest rate in bonds by foreign investors. Foreign investors, we have seen that FPIs are taking money from India. FPIs are taking away money from India. Last year we find that rupees 1.2 lakh crore has been taken away from India. Despite this being taken away, foreign investors' interest in government securities and bonds are increasing. So they are giving more money into, they are creating a demand for government securities. This is increasing bond prices, which will ultimately reduces the yield. That's why there is a zigzag or flatness after some point in recovery of the government yield prices, government security yield prices. Go ahead. Capital adequacy ratio. This also we discussed. What is exactly is capital adequacy ratio? Economic survey is saying for all the scheduled commercial banks, capital adequacy ratio is considerably above what is the RBI mandate. And RBI mandate is above the Basel III norms. And the banks are having considerably higher. And what exactly is this capital adequacy ratio? CAR we already discussed in previous class. It is Tier 1 capital plus Tier 2 capital by risk weighted average of assets. Now what is Tier 1 capital? If suppose a ideal situation of bank run happens. Bank run means everyone is asking for money. Now if X amount is kept in Tier 1 capital, all this X can be liquidated and given to the whoever is demanding the money. If Y amount is kept in T2 capital, then whole of this amount cannot be liquidated. Maybe 0.7% of Y can only be liquidated. But this still can be liquidated. These two assets are called Tier 1 and Tier 2. What are these? All we have discussed in the previous classes. Risk weighted average means depending on who is taking the loan, we allocate weight according to it. If somebody who is having low credit worthiness, his weight will increase. So accordingly, we calculate the assets of the bank and put in the equation and find the capital adequacy ratio. Where this is mostly used to find out the health of banking system. That's why capital adequacy ratio, where it comes when we are talking about NPA issue or when we are talking about Basel norms. This is where this indicator come into picture. Go ahead. Resilient performance in share market. This also is may find strange phenomena because we already told that FPIs are leaving the country. FPIs 1.2 lakh crore FPIs leave the country. Now if FPIs is leaving the country, which sector it directly impacts? Theoretically, it should directly impact the share market. Share market prices, we should expect a fall. But if you look at the share market prices throughout 2022, there is some fall, then it is picking up. You cannot say there is a consistent fall in share market prices. It was here, then when ending, it was in similar ranges. So why this is happening? Because even though the FPIs are leaving the country, domestic institutional investors, and mutual funds interest in India are picking up. Retail mutual fund interest in India has grown considerably during this phase. So they are like counteracting to the FPI outflows. Due to this reason, we are not observing so much of a steady impact in share market prices. Go ahead. Now what is India Volatility Index or India VIX? It is a volatility index based on Nifty index option prices. What is options? Seller decide to hedge whatever investment in share market he has. He will keep his amount for 30 days, he will pick up this amount. for this rate, and these all be decided by investor. So this based on options prices, an index is being calculated. This index is called India VIX or India Volatility Index. Exactly what this index gives is how is the XYZ index option prices going to act in next 30 days. Next, every month it may be calculated. For next 30 days, how will the market or the options prices perform? That is what the exact indicator is giving out or indicating. Go ahead. There are two concepts from insurance you should be very clear about. One is insurance penetration. What exactly is insurance penetration? No, this is the issue, this is the mistake which people make. If 1,000 people are there, suppose population is 1,000, how much of these 1,000 people took insurance? That is not insurance penetration. Insurance penetration is if suppose 1,000 people are there, how much of out of this only 100 people took insurance. Now these 100 people are paying a premium of suppose 5 lakh rupees total. 5 lakh rupees 100 people का life insurance premium है. This 5 lakh rupees divided by GDP of the total population, that will give the insurance penetration. How much insurance premium is paid divided by total GDP of the country. Total insurance paid by premium paid divided by GDP of XYZ country. It will be mostly in percentage term. If you took the case of India, it was 2.7% in 2001. Now it has considerably increased to 4.2% in 2021. Similarly, there is a concept of insurance density. What exactly is insurance density? Here we got calculated divided by GDP. If this GDP is changed to same 5 lakh divided by population, per capita how much premium is being paid, that exactly is the insurance density. This is represented in US dollars. 5 lakh will be calculated into, usually it is represented in not rupee but US dollars. In India it was 11.1 US dollars in 2001. It increased to 91 US dollars in 2021. Insurance density and insurance penetration. Concept should be very clear. You should not get confused if 1, 2, 3 options are given. Take picture if you want. Both has increased. Obviously, it will increase. People are becoming more aware. People are spending more on insurances and all. Private companies are also becoming part of it all. Now, if you look at inflation in India, this is headline inflation. What is headline inflation in India? CPI. CPI combined, it is headline inflation. If you look at the headline inflation, we have 6% is our limit, which RBI should maintain within 6%. If you look at the 6%, for a considerable long time, we have crossed this 6% limit. And what exactly is prompting this? Two factors are part of this. One is the whole big story which we have been talking so far. Second contributing factor has been food inflation. Headline inflation does contains food and fuel, all these volatile components. So food prices are increasing means why food inflation is happening in 2022? Two reasons. One is heat waves is happening. Heat waves has impacted the wheat production. Even though throughout the year, if you look, there is very less impact. However, wheat we were producing earlier, we were producing now also. But distribution of where it is produced, what time it is produced, all these have been impacted by this XYZ heat wave. And similarly, the rain in tomato belt, like Maharashtra, all these countries, untimely rain during this cultivation period also impacted the vegetables. Lemon, tomato, all these has been impacted during different time. So all these have contributed to higher food inflation during some time. It is exactly the same time we have headline inflation going about the 6%, that is mandated limit. Core inflation, what is core inflation? That is headline inflation minus food and fuel inflation. These are the volatile components. If you remove the volatile components, you will get the core inflation. Go ahead. Now, if you look at India's WPI and CPI performance, for a long period of time, you see they are converging. CPI is much lower ranges, WPI is increasing or consistently remaining at a very high ranges, 12 to 14%. Why this is happening? What is major difference between WPI and CPI? Mainly WPI is something from producer's perspective and CPI is from retail perspective. Now, if WPI is much high and CPI is much lower, what does that indicate? Production cost has increased. Production of XYZ goods, production cost has been increased. But that is not reflected in CPI, means if you look at it to customer, somewhere this cost is being absorbed. When it is reaching the customer, somewhere this cost has been absorbed. That is one theoretical reason why we have huge difference between CPI and WPI. Second reason is WPI doesn't only contain goods, whereas CPI contain goods and services. So if service sector is having low inflation compared to the goods sector, then that will also play an impact in having lower CPI. Now, how these all are theoretical concepts. How this will construct to whatever is happening in the world? We have discussed this Russia-Ukraine war. Russia-Ukraine war, what is impacting? Supply chain. Supply chain means all the raw materials are getting impacted. So it is due to this exactly the WPI has been shooting up. Service sector is not facing that much of issue. Whatever service sector, education, schooling, all these are like, there is no inflationary pressure that much is in the supply side of the goods production, that much is not in the service sector. So that is one reason CPI was not shooting up as much as WPI. And after a point like after June 2022, we have seen a steady convergence between CPI and WPI. Why this happened? Because by June 22, like more than 1 year has passed after this Russia-Ukraine crisis. After 1 year means whatever the disruption it costed, it started to cool off. The impact on even crude oil prices are falling. If you look at the other commodity prices like aluminum, iron, all these prices are gradually falling. Whatever the impact there was earlier, it is not that much is being seen right now. So that's why we find a steady fall in WPI after a certain period. Now they are in a phase of converging phase. Go ahead. All these are written here. Now there is one news, one very interesting news. Read the news. This is from LiveMint. What exactly it is saying? RBI likely to cite supply issues for failure to meet inflation target. We discussed in last class also. What the news is meaning? We already showed in the last class that last slide. For many phases, we have considerably above 6% inflation. Now, if 6% is being crossed for 3 quarters, RBI has to give explanation or note to the government. What all it should contain, why this is happening, what measures it can take, and what is the time period up to which RBI expect the inflation will be brought under the control. These 3 things RBI has to convey to the government. Now, in this case, RBI most likely to it is saying supply side issues. Now, what exactly is supply side issues? Crude oil prices. If like most of our crude oil is coming from other countries. If something is happening in that country and prices are increasing, what can RBI do? Technically, RBI has no option because all the inflation is, most of the part of the inflation is imported inflation. India has nothing to do with it. Something is happening in the other country due to which all the commodities prices in the world are high, and that is being imported into India, means India is also facing inflation. So this is why RBI has limited role in this. Now due to these high commodity prices, India is facing inflation. India is facing inflation means what happened? People has to spend more. Whatever goods people were getting earlier, to get same amount of goods, people has to spend more. Now people has to spend more means, if government want, if people go to borrow this money, this RBI can control. How? It can increase the repo rate. If it increases the repo rate, borrowing cost will increase. If borrowing cost will increase, people will borrow less. If people will borrow less, then there will be less demand in the economy. It will affect demand. So mostly RBI control, repo rate control, money supply control. These are most effective in managing the demand side. If something is happening with the supply side, or something is happening like imported inflation, how much RBI can manage it, it is very difficult. Now how we can control this inflation? What is the other alternative if monetary policies are having limitations? What else we can do is, we need better fiscal policies. Fiscal policies means imported taxes it is. So like importing tax you reduce. Within the country tax reduce karo. Like if petrol prices were hiking, 5 rupees government ने reduce किया. So that will cool off the inflation for a while. So fiscal policies can come into assistance when there is supply side is the major contributor to XYZ inflation. Go ahead. Now we are going to next chapter, social infrastructure and employment, the big tent. What exactly this is? Government is saying, what is social expenditure exactly? Health, education, welfare of people, all this spending collectively we call it as social expenditure. Government is saying that we have steadily increased the social expenditure from, if we take the lakh crore number, it was pre-pandemic it was 51 lakh crore, now it is 80 lakh crore. There has been a considerable increase of total expenditure percentage also 23% to 26% by the pandemic period. What is government's like open slogan or long term vision, you can call it as sabka saath sabka vikas and all. Go ahead. Now even though we say sabka saath sabka vikas, what we are seeing in human development index is very gloomy picture. India is ranked at 132 in the 2021 ranking, and what we have to learn here is there is very less chance India's rank is coming. If you look at India's index, it is 0.633. It was a considerable 0.645 or something is the index in the previous HDA index. During this pandemic time, India's human development index has fallen, but it is not a peculiar phenomenon for India. For 90% of the countries have registered a fall in human development index during the pandemic period. Who publishes this report? UNDP. Basics of the report you should know, which are the indicators: life expectancy at birth, expected years of schooling, and mean years of schooling. What is the difference? If a new child came, how much education he is expected to get? This may be something like 12 years. Now if the current population, if you look, what is the mean level of education? This may be for 7 years, or it will be always lesser than expected schools of expected, what is it, years of schooling. Now there is gross national per capita income. These 4 indicators are for human development index. Who publishes the report? UNDP. These all are basic reports about the report features. Now similarly 2-3 reports economic survey is saying. One is gender inequality report, GII. You should have a fair idea of what is the indicators, what are the dimensions. Now we have 3 broad dimensions, that is health, empowerment and labor market. Under health, we have maternal mortality ratio and adolescent birth rate. Under empowerment, female male population with at least secondary education, female male shares of parliamentary seats. In labor market, female and male labor force participation rate. Then there is 5 different dimension indices. Then combining all this, we will reach the gender inequality index. What exactly it mean? If a country could have achieved, suppose India could have achieved 0.745 human development index if there has been gender equality within the country. Since we doesn't have this gender equality, we are only achieving 0.633 or whatever is this gap is exactly captured by gender inequality index. Who publishes this? UNDP same publishes this. 0 of gender inequality index implies that we have complete equality within the country, because this gap is what we are speaking about. 1 means there is total inequality. Men and female are as much as theoretically possible, that much inequalities. India's rank is very big, that is 122. Go ahead. Now we have one more index, Global Multidimensional Poverty Index, or MDPI, different names it is not. Now it has 3 dimensions, similarly health, education and living standards. What is one speciality of this? Yes. In health we have nutrition, child mortality, years of schooling, school attendance, some different variations is there. Now access to cooking fuel, sanitation, drinking water, electricity, flooring, assets. Assets includes this housing, all this. So these exactly are the multidimensional poverty index of global. Who exactly publishes this? UNDP and OPSD, that is Oxford Poverty and Human Development Initiative. These 2 institutes combinedly publishes this. India has 22.2 crore poor people. This is the highest poor people in the world. But even though India has reduced the poverty rate from 55.1% to 16.4%, 41.5 crore of people have moved out of poverty in last 15 years. These all are great things speaking about India. But one thing you should know, we in India have our own National Multidimensional Poverty Index that is being released by Niti Aayog. The dimensions are not same. Dimensions as well as their weightage are not same. Sorry. So in National Multidimensional Poverty Index, we have same health, education and standard of living, but we have more indices here. There is 3 indices in health, that is nutrition, child and adolescent mortality, antenatal care. Then in education we have years of schooling, school attendance, and there is more number of bank account, some electricity access. These are extra XYZ components that is a part of National Multidimensional Poverty Index, which has been brought out by Niti Aayog. Note down it. Go ahead. Now, what is the current trend of labor force participation rate and worker population ratio? What is the difference between this? In labor force participation rate, if there is 1000 people, out of this, say 700 is willing to work. Now 700 by 1000 is labor force participation rate. Now worker population ratio, this is workforce. Now workforce means age will be some 15 to 60 years. Some age gap will be there, 15 to 59 years. So there will be some population beyond this also. Suppose there is 1200 population, 200 population is beyond these age limits. Now worker population is out of the 700 people are willing to work. Only 650 people got work. 50 people are unemployed. then 650 by 1200. This will give worker population ratio. Here we have total population. Here we have whatever is the working age population that is taken in labor force participation rate. Clear? This is total population, like this is working age population, that will be like between 15 to 59 years. So 200 people, these are our assuming numbers, that is beyond these age limits, children and old age people. So mostly we will find that labor force participation rate is, it is more than worker population ratio, because denominator will be also bigger and there will be some level of unemployment always there in the XYZ economy. Now what is the general trend? If you look at last 3-4 years, from 5 years from 2018-19 to 2020-21, all the index you will find same trend, that is all indices are increasing. Labor force participation rate for male 51% to 57%, urban 57 to 58%. Throughout you will find that all these indices are improving. Even for female labor force participation combined, if you look, it was 18.6, now it is, there is considerable improvement, 25.1%. Okay, go ahead. Employment structure. If you get a statement like where there is most of the population employed, is it in self-employed, regular wage salary or casual employment? Casual employer means what? For some part of the day they will be like on contract, or for some part of the year they will get some employment, freelancing, all this will come under casual labor. Now if you take these three, India's more than 50% of India's labor is self-employed. MSMEs, all this come under this self-employed. Now there is a new government schemes that is you should aware of, that is PM Shri schools. What exactly is specialty of these schools? Government has came up with new education policy or national education policy in 2020. Now these schools has to be flag bearers of new education policy. Whatever the ideas this new education, national education policy 2020 is speaking, these schools will be in forefront of implementing those XYZ ideas. They will be equipped with modern infrastructure, showcase implementation of new national education policy, emerge as exemplary schools over a period of time, while offering leadership to other schools in the neighborhood. Technically, all the XYZ new modern facilities will be provided to, more funding, more expertise, more all the care will be provided. Around 14,500 schools has been identified. They will be developed as PM Shri schools. Which ministry is undertaking this? Obviously, it is Ministry of Education itself. Rest, go ahead. There are a few other important education sector schemes which has been listed by Economic Survey, that is Bal Vatika in Kendra Vidyalayas. What it does? It is preparatory classes with focus on developing cognitive, affective and psychomotor abilities for students in the age group of 3 to 5 years. So much it is, but major important thing you should know it, it is for age group of very small children of 3 to 5 years. If a statement is coming of higher age, you should be able to identify this. This is the most important element. If you remember this, rest of these students will not be given any higher level of education. Anything, whatever you can give is this cognitive, affective, psychomotor, all these things only you can provide to this age group. Now we have a Prashant app. This is a disability screening mobile app covering 21 disabilities. And this important point is this app will be functioning at school level. School authorities will be given access and XYZ training to use the app. They will screen the new coming children. Many times parents will not be even aware of the XYZ disabilities until the children come to a specific age. To avoid this, we have this Prashant app. Then we have a new scheme called STAR-S scheme, or strengthening of teaching, learning and results for states. It is a centrally sponsored scheme for some state. Not all states are not part of it. Basic idea is improve the quality and governance of school education. Now there is a Vidyanjali scheme. This is a portal which enables volunteers and organizations to interact and connect directly with government and aided schools and share their knowledge, skills and contribution in the form of assets, materials, XYZ to the school. Suppose government school is in need of a help, you can go to this portal and give whatever is your ability. Even assets, materials, equipment, XYZ you want to contribute to the school development of the school, you can do it through the unified or centralized portal, that is Vidyanjali portal. Good enough? Mostly question will come on what is XYZ purpose of this Vidyanjali scheme, what is the XYZ purpose. So there will be confusing options, you should be able to identify what exactly it is. Now there is a mention of government is doing so many great things for social sector. These all schemes are being developed, mentioned here, PM Shri schools, all this Manrega, LPG, Ujjwala Yojana, what is this? Jal Jeevan, Deen Dayal Upadhyay Gram, that one. This is Jal Jeevan Mission, Saubhagya. All this mission you can go and learn yourself. Jan Arogya Yojana, Ayushman Bharat. What is this? Housing scheme, Awas Yojana Gramin. So all these schemes are explicitly mentioned in the economic survey. It is saying government is achieved considerable progress through all these schemes. So these schemes details we are not covering in the class. If you want, you can go and directly look into the XYZ sources and find the what are the basic features or provisions of the scheme. All these schemes, the new one is PM Shri scheme, which we have covered in the class. All other schemes are not new schemes. It has been running for the last 7-8 years. So these provisions we are not covering in the class. Okay. So that's all for now. We have swiftly covered the 4th, 5th and 6th chapters of the economic survey. In the next class, we will cover next 3 chapters. That's all for now. Thank you so much. Very good morning. So welcome to the part 4 of economic survey for prelims discussion. So what we are going to do, what all chapter is pending? From chapter 7 to 9, 3 chapters we are covering in this class. In all the previous classes, we have already done the first 1 to 6 chapters. And one more class we will be having, in that we will cover chapter from 10, 11 and 12. So we will be covering all this economic survey especially from prelims point of view. All other data relevance, all other irrelevant data that is not having a chance for coming in the prelims, we are omitted it. We are only focusing on what exactly new government schemes are there, or where there is a trend in XYZ data which has a scope for coming in the as a statement in the exam. That's only we have taken from the economic survey. Go ahead. So the first 7th chapter is climate change and environment, preparing to face the future. Net zero targets. What exactly is net zero means? Does it mean zero emissions? If a country is emitting X and it is sequestrating or absorbing X, this becomes equal, then the country is said to be have achieved the net zero. Now India, what is India's targets of net zero emissions? 2070. By 2070, India is said to achieve the XYZ net zero emissions. Mostly the world was putting up a target of 2050. And what were India's major objections before putting this target, net zero targets? India really opposed or not so positive about mid-century net zero target. Why? India has 2 reasons. One is developmental reason. That means we cannot let the population live in poverty in the name of climate change or in the name of clean energy or anything. We need cheaper electricity and we need to burn coal for a considerable amount of future for this cheaper electricity. That is one reason. Second reason is India says that net zero targets countries are setting in early 2020s. In early 2020s, countries like the advanced country like Germany, Japan, US and all this are setting a targets of net zero in 2050. There is a gap of 30 years. Now, if you are not achieving, we will have to wait 30 years to see whether the XYZ country is achieving or not. So it's a very long-term target that doesn't make so much of sense. That was one argument. Third argument was, one more argument was there. It is not the net zero that exactly matters, but the how you reach the net zero. If by reaching the net zero you emit so much of carbon dioxide or greenhouse gas emissions, and by 2050 you reach the net zero, that is in overall, if you picture you look, that is not going to help. What you want is a cleaner or sustainable transition mechanism from right now to 2050. So overall, if you look, you are emitting less, not that you are achieving something at the end of the XYZ. So these were some objections why India was not so happy or not so appreciable about 2050 or mid-century net zero emission target, and India has came up with a 2070 net zero target. Now, despite India kept these net zero targets at a very long period, India has ambitiously expanded its NDC targets or INDC targets. What is our new INDC targets? There are basically three dimensions for INDC targets. One is emission intensity. What is emission intensity? For 1 unit of GDP, how much greenhouse gases you have? Greenhouse gases for 1 unit of GDP. So India's target was reduce it by 33 to 35% from 2015 level. That was the earlier targets. Now it has been revised to 45%. Now we currently by 2060s we have achieved that. By 24% we already achieved, and it is said that by now we already achieved 30%. So 15% is what we have to achieve by 2030. Another one is share of non-fossil fuel in installed electricity capacity. Earlier it was 40%, now India revised it to 50% by 2030. This is how much is the current value? We are already generating around 59% of 58 point something % of our generation is coming from coal or thermal sources. These are polluting sources or non-renewable sources. Rest 41% is already coming from this non-fossil fuel based sources, which includes which all are major contributions. One is renewable energy, then large hydro is a bigger contribution. So these all includes already 41%. So India can achieve, because only 8.5% is the gap that is existing in. Then there is a carbon sink. India will create a new carbon sink of 2.5 to 3 billion tons of additional sink will be created. There is no revision or there is no mention of this XYZ target. So these are the basic. How this is happening? By creation of new forest. If you look at the Indian Forest Survey reports, IFSR, every year we are increasing the green content or increasing the forest content. So there has been some progress, but exactly quantifiable data is not being released by Economic Survey or any other reports. Go ahead. These are like different countries, what is their year of targets they are having for net zero emissions. Not too much important, at least you should know India's emissions, India's emission targets. What is carbon stock? How much amount of carbon that is being sequestrated from the atmosphere and stored in biomass, dead wood, soil, litter, and this total carbon quantity you call it as carbon stock. Which kind of atmosphere this carbon stock will be highest? In forest it will be higher, but more higher will be in permafrost. What is permafrost? Where the ground is frozen for more than 2 years or beyond that. And if any carbon deposit is there, it will remain that for centuries. So permafrost is mainly in higher latitude areas or in higher altitude areas like mountains and all. This permafrost contains huge amount of carbon stock. Now one reason global warming is creating is it is causing melting down of these permafrost areas. This will create again like a cyclic event which reinforces the climate change or whatever greenhouse gas emission changes we are seeing right now. So in India, if you look, maximum carbon stocks are found in Arunachal Pradesh, after that Madhya Pradesh. So these are due to mainly forest. not due to permafrost or anything. Now, if you look at maximum per hectare carbon stock, where you find it in India is, these all come in permafrost or something like that. Because these are Jammu and Kashmir, Himachal, Sikkim, all these are high altitude states. Go ahead. Now, if you look at India's energy generation, we already discussed this. Around 58% of India's generation is coming from coal or fossil fuels. But if you look at how renewable energy is performing, there is a green content. Earlier it was only very small part of it. Now it has been increased to higher part of it. So growth in renewables energy is greater than growth in coal or thermal sources. So if you look at the energy trend analysis, you can say that India is overall transitioning from thermal to coal sectors already. The transition process is already going on. That's why you can see how much this green graph is increased, very little throughout the years. But the blue graph, but the green graph has considerably increased over the years. Go ahead.
Government definition is renewable energy is large hydro considered or not?
It is not considered in many definitions. In non-fossil fuel for INDC targets, it is considered. That's why we are getting this by including large hydro. We are getting 41.5% we currently achieved by including all these. But many definitions of this renewable, it is not included part of it. Yeah, this is sovereign green bonds. What exactly it is? Everything is exactly same as bond. It is a debt instrument, and government will issue this, or sovereign authority will issue it and raise money from the market. Only difference is this raised money will be used for renewable energy or green projects. What all it include? Renewable energy, clean transportation, sustainable water waste management, pollution prevention, green building, natural resource conservation, terrestrial and aquatic biodiversity conservation, energy efficiency, XYZ initiative, climate change adaptation initiative. All these projects will be included as green projects. What you should note down is some projects are exclusively excluded from the sovereign green bonds. If you are investing, you cannot invest the sovereign green bonds in this. Which all are it is? New or existing extraction projects like coal extraction projects or something like that. Nuclear power generation. Nuclear power is not a part of it. Direct waste incineration. What is incineration? You are burning the waste at higher temperature in excess presence of oxygen. Alcohol, weapons, tobacco, gaming, palm oil industries. Why palm oil industries are added into this?
Because they consume a lot of oil, water.
Not exactly. Palm oil industries, most industries are in tropical region, in Indonesia, Malaysia, these countries. In India, which areas are good for palm oil cultivation? Northeast countries or like thick forest countries. Now, if you are converting these areas into palm oil cultivation, you will lose huge amount of biodiversity or ecosystem. So, due to this, palm oil industries are also included in this. Renewable energy projects like biomass feedstock, all these are not part of it. Landfill projects are not part of it. Hydro project large hydro projects, that is hydro project beyond 25 megawatts are also not part of the sovereign green bonds. Very high chance a question can come on this. So much it may complete. Biogas plant is also not included. Biomass using feedstock, that kind of exactly it is not included. Take a picture. This is exact wording from the framework that is XYZ given. So take a picture and you should have some clarity on this. Now, what is some speciality of this bond? These are eligible for repo as well as SLR operations. Why RBI is doing this? For promotion of this. Then only the banks and other institutions will be interested in this, buying these bonds. NRIs are also eligible to invest. Objective is to mobilize more funds into it. Payment of principal and interest on these bonds are not conditional. Not conditional on what? Not conditional on performance of the eligible projects. Suppose you took money and invested in some projects. This sovereign guarantee is given by the government. What X% interest you will get, government will pay you the interest irrespective of how the project performs. Understanding? Like this is also a step to promote the, give more security for investors to invest in these kind of projects. Go. These are not market linked. Like these are like bonds, government long-term bonds. Long-term bonds means what? There will be a fixed coupon for it. Now mostly you will get this coupon at the end of maturity. And it is not, this coupon is not linked to the performance of XYZ where the investment is done. Go ahead. Now India has came up with Lead IT. What is exactly Lead IT? Leadership Group on Industry Transition. What it focuses on? Clean energy transition basically. This has been initiated by India and Sweden at UN Climate Action Summit in 2019. You should be very clear about the countries, India as well as Sweden. Basic idea is to provide the know-how, technologies, cross-sectoral learning on commercialization of new technology to facilitate the XYZ transition. Achieve industrial net zero emissions and all these by 2050. That is a broad objective of Lead IT. Take fast. Okay. Now we are going to the 8th chapter, that is agriculture and food management, from food security to nutritional security. First thing is agricultural growth. What do you have to see about agricultural growth? Agricultural growth is depending on so many XYZ factors. It is depending on monsoonal dependencies. There, if rain is coming at wrong time, it will be impacted. If rain is not coming, it will be impacted. Now, despite rain, if rain everything come good, then there will be surplus production. If there is surplus production, then the market price of commodity will fall so much. Then also it can create loss to the XYZ farmers. So there is so much risk farmers are supposed to. And due to this, you can see the growth rate is always zigzag. If some El Nino year is there, you will see a considerable fall in agricultural growth, and maybe within next 1 year you will see the growth shooting up. So this has been a feature of Indian agriculture. If you look at the current growth, its trend is in decreasing direction. Like we have 6.5% growth, but recently we are getting only 3 or 3.3% growth. Despite being that, during the pandemic age, it was one sector that was consistently showing a positive growth rate, whereas the industry as well as services has been completely limited due to this lockdown and all other things. Go ahead. What is very important concept? What is crowding in of private investment?
Government invest and it promotes investment and private sector.
Exactly. Suppose government build a road. Government invested in building this road. This road government invested how much? Suppose 100 crore rupees. Government invested. Now due to this, government had already invested and created a very good road. So many private people have came and created food processing industries here. Now if you look at throughout the road, how much food processing for 1,000 crore investment, food processing industries has been established throughout the road length. Now government, this happened because government put X money. Now if government put X money, a 10x money has been put in investment as private sector. This XYZ phenomenon we call it as crowding in of private sector. What is crowding out of private sector? Government is like, there is market. Whoever wants fund is going to the market. If government is going to the market and taking huge amount of money and government is investing in whatever XYZ sectors, if government is taking out too much money from the market, it will increase the borrowing cost. Now if borrowing cost is increased, private industries will find it difficult to borrow or will not borrow. Now if private is not borrowing, government is taking out all the money, so that private is left with no money to invest, or private is not doing the investment. This expected phenomenon we call it as crowding out. Here government is investing something, this is pushing private sector to invest much greater amount into XYZ associated allied industries or allied projects. Go ahead. In agriculture we see the phenomenon of crowding in of private investment. Even if you look at the recent data, government investment is only 4.3%, whereas the private investment is almost beyond 2 into times, that is 9.3% we have private investment in the agricultural sector with respect to GDP. Throughout here we are like same trend is being followed throughout the part. Go ahead. Now if we look at the what is trend of food grain production in India, we have seen that India is facing so many disruptions in climate, like heat waves is impacting this wheat production, or the extra rain is impacting the tomato production, vegetable production, lemon production, all these. So if these all, despite having all this, if you look at the total grain production, that is consistently increasing over a period. From 2016-17, it has been always in a higher direction. If a question come in last 5 years, this is being consistently increasing, you have to take it as a correct statement. Food grain production, despite all the disruptions we are talking about, food grain production is increasing in India. Now 2023 has been declared as International Year of Millets by United Nations General Assembly. What is speciality of millets? It can be a solution to India's nutritional security, India's anemic problem. All this can be addressed by millets. Now what is something about millets this economic survey is speaking about? What it is saying? India produces more than 50%, like 20% of world's millets are being produced by India. And more interestingly, if you look at the yield, what is yield? How much kg it is being produced per hectare. India's millet yield is greater than world average. Only on very few crops India has higher yield than global average. So India's yield on millets is greater than global average, and India itself produces 20% of the global millet production. Now millet is mostly rabi or kharif crop. It is mostly a kharif crop that is grown in rain-fed conditions. Mostly in rain-fed conditions. Millets is a like collection of different items like foxtail millet, finger millet, barnyard millet. So many millets are there, different parts of the country. This you can learn which millet is coming in which part of the country. Have a broad idea of this. Rest, these are the basics and geography of the millets. You can learn more about it. Go ahead. One more thing you have to add is government is promoting 500 startups in millet value chain, like food processing in millet, food transportation in millets. Government is promoting, and the scheme is called RAFTAR, RKVY, RAFTAR scheme, Remunerative Approach for Agriculture and Allied Sector Rejuvenation. Under this, 250 startups are already working on XYZ millet supply chain. Go ahead. All these schemes you note down. Go and learn more about these schemes if there is a chance to come in the exam. Now what else trend you should know in agriculture sector? If you look at the farmer's income or agriculture contribution to GVA, what we observe is, what the green line is, that is the gross value added from crops. Now if you look at last 10 years or 2011-12 to 2021, in 11-12, 65.4% was gross value added or GDP or GVA was contributed by crops. Now it has been consistently falling to, now it reached 55.1%. So where this shift is happening? From crops to other sectors or allied sectors. What are these allied sectors? Livestock, forestry, fishing and aquaculture. So farmers are getting more income or more gross value is being generated in the allied sectors. Trend is these sectors are being getting more revenue or more remunerative than XYZ crops. Go ahead. Now, if you look at the food subsidy, the trend is India is almost spending a huge amount of GDP on food subsidy. And you can see a very huge spike in, like almost 3 times or more than that, you can see a spike in food subsidy bill. Why this spike happened? Due to pandemic. And what exactly was the scheme name? Pradhan Mantri Garib Kalyan Yojana. 5 kg of extra and some other cereals were also provided along with this to huge amount of population. Due to this, there has been increase in food subsidy bill during pandemic, but the current trend is it is getting normalized. It is on during this time itself, government for Food Corporation of India, government came up with suggestion of extra budgetary borrowings. Food Corporation of India was told to source some of its food subsidy bill from the market. So FCI will go and take the loan or XYZ from the market. It will not be included in the budget of that year budget. But it is the responsibility of the government to pay the extra budgetary borrowing from the budget itself. Go ahead. Now we have some very important thing, that is agriculture infrastructure fund. Why? What was the requirement of this fund? When we always talk about the credit supply or credit being given into the agriculture sector, the focus is on short-term credit. What is the short-term credit? Credit to buy the seeds, credit to buy, continue the agriculture process, like fertilizer. It is only like for one short term, one XYZ cycle or 2 cycles, that investment, to continue this investment, that is what being called as agriculture credit. But if you really want to improve the agriculture sector, what we want to improve? We want to improve the productivity. Productivity of agriculture will only improve by increased mechanization, increased use of technology. All this require long-term credit. So with the objective of increasing long-term credit into agriculture sector, this agriculture infrastructure fund was formed. Objective is, size of the fund is 1 lakh crore fund. 25 projects per individual beneficiary in different locations will be set up. Now you can see the details of this. It will act as a fund of fund. It will give different allocation to different funds, and they will distribute it among the farmers or different projects under this. Interest subvention is a part of this. What is interest subvention? Suppose you will be given loan for 5%. Now if you are timely repaying this loan, then government will give you some reduce your interest rate. Earlier the interest rate was 5, now it will be reduced to 4% or 3%, depending if you are timely repaying this XYZ repayment. So this is interest subvention is also a part of it, but interest subvention is only applicable for projects up to 2 crore rupees. Beyond that, interest subvention is not applicable. Credit guarantee is extended by the government. This is also for up to 2 crore rupees projects. 7 years is the moratorium period. 7 years is the repayment period that is given for projects under this. Government of lending process will be facilitated. Lending institution will be convergence of different other projects, so that you will get from just money will be given by one institution, expertise will be given by another institution. To remove this confusion, all this will be combined and you will be given training as well as money as well as other what is required for starting a new business in the agri infrastructure. All this will be provided at one place. Convergence will be also a part of this. Now these are the focus areas like post harvest projects, cold chain, viability gap funding, and hub and spoke model. All this will be promoted under this XYZ scheme. Can see more about this. And loan will be not just given to farmers, farmer groups like food farmer producer organization, FPCs, all these are a part of it. Agripreneurs, what is agripreneurs or agri entrepreneurs? Startups that is based in agriculture sector. large business groups who want to invest in agriculture. All these are eligible for, even large business groups are eligible for funding under this area for agri infrastructure funding. State agencies are even eligible for this. When statement come, you should identify this, you should remember this. Go ahead. These all basic things we discussed. Operational from 2021 to 2029-30. Interest subvention is a part of it. Scheme does not have a minimum or maximum cap. There is a rupees 2 crore criteria. Within the 2 crore you will have credit guarantee, within the 2 crore you will have interest subvention and all this. But there is no such criteria that you will get only 2 crore. There is no minimum or maximum limit defined under this scheme. And you cannot take 100% loan. You cannot start anything with 100% loan. At least 10% of the project cost should be paid by the investor or the organization which is investing in it. These are all features of agriculture infrastructure fund. Go ahead, 1 lakh crore investment is being provided under this. Now let's go into the 9th chapter, that is industry steady recovery. So what is the industry sector means? Basically it is manufacturing sector. What is importance of manufacturing sector? If you look at the development of a country mostly associated with transition of population from low productivity sectors to high productivity sectors. Mostly countries start with agriculture. Agriculture issue is low productivity. If whole population is depending on agriculture, your GDP will be extremely low, there will be poverty. So you transfer more into manufacturing sector, there will be higher productivity. Then countries go into services sector. But what is issues with India's transition? India jumped from agriculture to services sector. And what is consequence of this? Here agriculture productivity is low. Like even if you look at, consider India's current case, 15 to 17% of GDP is contributed by agriculture. But 45% of population is dependent on this. So this will lead to inequality. Small amount of wealth is being distributed by so much of people. Other 83% of the wealth will be distributed by other people. This will lead to inequality. This will lead to so many other problems also. In services also, what is the issue? Services need specialized skills. It is productivity is extremely high here, but it requires specialized skills. And the employment elasticity, how much job for even like a company of 5 people can generate revenue of crores by building an app, by building some service companies. Even a small number of people can create revenues in crores or very huge numbers. So service sector, number of people the XYZ GDP or can provide the job is very less. That is one. And even if you are providing the job, you need a specialized skilled workforce. And in current scenario, what is happening? This definition of these specialized skills are constantly changing. Which is applicable for 5 years later, new kind of programming language is coming, new kind of market skills are becoming in demand. So service sector cannot absorb the huge amount of population that is coming from agriculture. If India has to develop, India has to depopulate from agriculture sector. And this depopulation cannot be absorbed by service sector. So where this will go? This has to go in manufacturing sector, and manufacturing sector is considerably a little bit weaker in India. That's why we have so much government schemes or government support that is available for MSMEs, for companies, for everything that is manufacturing companies. PLI scheme, different schemes, government support is extensively provided for manufacturing sector. Objective is the developmental objective which we have discussed so far. Clear? Now what is the sectoral performance of this industry? It is contributing around 31% of the GDP and around 10-12 crore people are employed in this. So this industry is capable of absorbing more people. So that's why we are promoting the XYZ industry. Go ahead. What is employment elasticity? If your GDP is 100, suppose 100 rupee or 100 US dollar, whatever it is, it becomes 101. Then how much number of new jobs is provided, or how much number of new jobs is being created? This is called employment elasticity. For 1% increase in GDP, how much number of new jobs is being created? There has been a, what is the current trend in Indian economy? It is from 1980s, if you look, it is considerably falling. Why it is falling? Our labor productivity has increased. We are also, our labor is more shifting into services sector. So it's a huge productivity sector. All these are reasons for over the decadal performance or decadal trend. If you look 1990s to 2010s, this employment elasticity is considerably falling. Now FDI. What is FDI? Basically, foreign investors are investing in Indian companies with the objective of acquiring the company, with the objective of controlling the management of the company. Quantitatively, it will be, if about 10% investment is done in a company, we call it as FPI or FDI, for indirect investment. And industry, manufacturing industry is one of the biggest sources of FDI. And where the most investment or FDI is coming? Computer software and hardware is the highest FDI absorbing sector in India. Second sector is trading. All these are part of it. 22 services are part of it. All these are high FDI absorbing sectors. Go ahead. Role of MSMEs. What is MSMEs? We recently changed the definition of MSMEs. Earlier there was very complex criteria. Now MSMEs are defined on two criteria, that is investment and turnover. If investment is less than 1 crore or turnover is less than 5 crore, we call it as micro in category. If investment is less than 10 crore, turnover less than 50 crore, we call it as small. If investment is less than 20 crore and investment turnover less than 100 crore, we call it as medium, MSME industries. So in India, if you look at huge percentage of the companies, this is a very broad definition government has kept. Why this is kept? So that most of the Indian companies become eligible for whatever the tax subsidies or whatever the capital subsidies, whatever other XYZ government support schemes are provided, they will become eligible for this. That's why a very broad XYZ definition of MSME is adopted by the government. Now, what is the contribution? Around 40 to 50% of what is this? GV exports. Exports in India are contributed by MSMEs, as well as in GVA, as well as manufacturing GVA, considerable share, for 30 to 40% share is being contributed by MSMEs. So MSMEs contribution is much considerable in all the sectors, especially the manufacturing sectors. Go ahead. What is Resilient India Fund? Self-Resilient India Fund. It is a part of Atmanirbhar Bharat that has been launched during the pandemic. Basic objective is continuing the credit flow into MSMEs. During pandemic, what happened? MSMEs were highly constrained because they don't have this issue of lack of access to institutional credit. And if institutional credit is there, the cost of funding become too high, or the provisions, even if some government was giving you don't pay this EMI for X number of month. All these are applicable only if you are taken fund from institutional credit. If you are taken from private authorities, all these become validless, like it is not applicable to you. So to avoid this and consistently increasing the institutional credit flow to the MSME sector, government has came up with Self-Reliant India Fund. That is the objective. NSIC Capital Fund Limited. This is a 100% subsidiary of National Small Industries Corporation Limited. This will be the operating the XYZ fund. It will be regulated by SEBI. All these micro details you can read from here. Go ahead. This is a very interesting concept, that is flipping of startups. Can you guess what exactly is flipping of startups? Flipping and reverse flipping is also in news recently. What is flipping? Suppose an X company is being founded by a person. A person founded this X company and he found that it is very beneficial for him. He is the founder of the company. He, at a particular point, he found that it is very beneficial for him to sell this company to any foreign brand or foreign investor. Now, if we find a foreign investor and he sell his shares to this investor and take money from him, this deal we call it as flipping of startups. Startups which is owned by Indian citizens or Indians are being sold to the foreign brands or foreign companies. Now, why this is happening? Either it can be happening due to the founder lost interest or founder doesn't want to engage with the companies anymore, or it can be due to suppose this startup is more engaged with its sales are happening in the foreign countries. So if a foreign investor is acquiring it, the expansion of the country or can happen in much larger scale. So due to economic reason or the interest of the investor, these are happening. Now government if doing something so that this flipping of startup is doesn't happen. Government brings some regulation. Government gives some added taxes. Government are creating a system so that the so much of flipping of startup is not being promoted. So such a system, such a scenario we call it as reverse flipping. That is, government is creating constraints so that flipping of startups is not becoming a very rush trend. So that's all for now. We have discussed which all chapters? 7, 8 and 9 chapters. Next class we will be discussing last 3 chapters of the economic survey. That will be the end of the economic session that is going on. Thank you so much. So good morning everyone again. So this is our 22nd session on current affairs. So this will be our last class from economy. Today we are going to cover the last 3 chapters of economic survey. So far we have covered all these economy sector wise topics from I guess lecture 12 to 22. Around 11 lectures we are done on economy. All these sectoral different aspects like monetary policy, fiscal policy, budgeting, external sector, all these basics of macroeconomy, all these aspects has been covered like a revision format in the previous economy lectures. After that we have gone for economic survey, and this is the 5th class of economic survey, and here we will finish out the economy as well as the pending chapters of the economic survey. Let's get started. So this is chapter number 10, services, source of strength. Why it is called source of strength? More than 55% of India's GDP or GVA is coming from services sector. That's why it is being like India has called it as a service economy from this perspective. Even though 45% of our population is dependent on agriculture, most of our GDP is coming from services sector. And if you look at the growth rate over the years, you can see that pandemic there was a lower growth rate like every other sector. After that it has been growing in a very high rate. Global export share, India is among the top 10 countries having this services exports, and 4% global share is India having in 2021. Now this is the different growth rates you can see. During pandemic year there has been negative shrinkage of growth. Rest all of the year it has been performed exceptionally well. Go ahead. Now if you look at the what is the share of different where the exports are happening, huge percent, 62% of India's service export is happening to USA. Then it is to rest of the world, Europe and all other countries. But what you have to know is most of our service export is going to USA only. That's why USA is also India's, China is the largest trading partner. Second largest trading partner is USA. And with Depends on the trend of what is politically happening. It keeps on changing every now and then. Now, if you look at which our sectors are giving more services or more exports in service sector, IT services are contributing more than 50% of the service exports from India. All other services are contributing only 49% of it. Go ahead, general big trend you should know. It is not required to know every single how much is contributing. At least 51% IT services and 62% of India's XYZ exports are contributed going into US. This much data you should be well aware of. Now, if you look at this trade profile, you can see that this is merchandise trade profile. What you can see is in pandemic there has been a dip, then there has been a sudden increase. Why this sudden increase? Merchandise sector, India also reached this 400 billion US dollar 400 billion targets in FY22. Why this happened? After pandemic, Indian exports grew exponentially or witnessed a sudden growth. Why this happened? One is agri exports has boost from India. India has set a target of 50 billion in a year agri exports. It was very ambitious target. India hasn't reached it, but still India reached very close, something like 45 billion India reached. Even this was considered as a much greater achievement. That was one reason. Secondly, mostly what happens is export performance is highly correlated with global demand. Global demand, you can say, as well as global trade. So after pandemic, before the Russian war happened, Russia-Ukraine crisis happened, global demand was picking up. The first phase of this pandemic has settled down. Second phase is also going away. After that, the global demand throughout the world has been picking up. And it is due to this global demand, we have achieved this considerable, along with this agri exports, as well as one other sector which has get like strides during this period is pharma sector or pharmaceutical sector. So these all contributed to India's greater demand for merchandise export in post-pandemic phase. Similarly, one more factor you can say is pent-up demand. What is pent-up demand? During pandemic, what happened? Everything is gloomy. People will think that something bad is going to happen. They save all the money. They doesn't spend. Even though government reduces all the repo rate, people doesn't spend the money because they think something bad will happen. They will need the money. Now, once the pandemic or gloomy atmosphere changes, there is pandemic, number of COVID cases fall down, and it has reached a safer level. People will come out and spend all whatever they have saved. So this will lead to a sudden increase in demand in the economy, which will also acted as a factor for increasing merchandise exports from India after the pandemic. Now move ahead. Indian trade to GDP ratio. How much of our trade as a percentage of GDP? Indian trade is, world average is 56.5%, whereas Indian average is 45.3%. Despite India being 10% more than 10% less, it is said that India is catching up with the difference. More trade means what? More trade means there is more efficiency in the economy, there is more logistics efficiency in the economy. So all these different fronts, Indian economy is making progress, and the percentage of trade with respect to GDP, India is being catching up. But if there is a trend that is to be drawn, that there is no particular trend. It is not consistently increasing, reducing or anything. It is totally a zigzag trend. Go ahead. Current account balance. What is current account balance? Basically exports minus imports. Negatives, you will get it. So what exactly is happening? India's current account balance is, or current account deficit in case of India, is consistently increasing. Why this is increasing? Because commodity prices, we discussed in last class, is high. Due to that, India is absorbing all importing. India is importing economy. Due to this, India has to spend too much on its imports. Spending too much on imports will lead to higher current account deficit. Composition of current account deficit, net transfers, net services, net merchandise trade balance, all these are different equations that is on. Net services we have positive, but net income everything is negative. Net transfers are also positive. Net merchandise trade imbalance, that is the biggest component that is contributing to our current account deficit. Merchandise is imports are much higher than what is the merchandise exports that is happening from India. Go ahead. And the CAD for the recent years, it is 3.3% of the GDP. Next, what you should know is India's, even though we have told that FPIs are running away from India. Why they are running away? Because there has been this taper tantrum like effect. The higher interest rate in US market, more safer market is available. So investors are taking money from Indian or emerging economies and investing there in US bonds or US market. So this is also leading to appreciation of dollars. Dollar is not just appreciating against Indian rupee, dollar is appreciating against all the world currencies. And economic survey has categorically said that whatever dollar has appreciated against Indian rupee is considerably lesser than how much it has appreciated against all other currencies. So it is not the rupee that is falling, but dollar that is going up. That is what is exactly happening. That categorically has been substantiated by the economic survey. Now, if you look at this India's current account deficit, we already told that 3.3% current account deficit we are having. Still, we not face any BOP crisis or any issue with this because we have considerable of capital investment coming into the country, and FDI is one of the major components. Even though FPI is going out of the country, FDI is consistently increasing, or there is consistently maintaining of positive FDI in India. What does that indicate? FPI is mostly hot money, that is volatile money depending on small fluctuations in geopolitical atmosphere. This investment will shift across the economies, while FDI is more interested in controlling the assets, asset creation in the economy. All this is based on broader, greater macroeconomic performance of the economy. So Indian economy is still considered as one of the good investment options. That's why India is, despite pandemic and all these vulnerabilities, India is considered able to attract considerable amount of FDI into the country. And from which country India will get most of its FDI? Highest is from Singapore. After that, around 37% is coming from Singapore. Then Mauritius is there 12%, UAE 11%, and USA 10%. These are the top 4 countries from which India is getting the FDI inflows. FPI, we already told there has been a phase in 2022. After 3 years of considerably positive FPIs, we have registered FY23 as negative FPI year. Around 1.2 lakh crore rupees has been taken out from Indian FPI market. We discussed so many times, not spending time on here. So this also the same adequacy ratios, import cover, BOP balance, all what we have discussed over, that is diagrammatically being shown. Let's move ahead. What is India's external debt situation? These data are sometimes quite important because statement previously has been framed from this. Most of India's debt is internal or external. Around 95% of India's debt is internal debt, only 5% or 4.9% of Indian debt is external. India is just taking a very micro amount from the external market. Rest all these are coming from the internal market itself. Debt to GDP ratio, it has fell from 19.2% to 20.3% in September 2021. There has been improvement in this. Like in 1 year, it has reduced from 20.3 to 19.2%. And long-term debt or short-term debt, most of India's debt is long-term debt. That is 80.4% of India's debt is long-term debt. As well as India's short-term debt, if you look, 90% or 97% of short-term debt is from trade credit. Like you have given some XYZ commodities and there is a gap in getting the payment. That kind of debt you are having for 97% of the short-term debt. So what does this two indicates? Whatever India's external debt is having, India's debt is highly sustainable. One, most of the debt are long-term, not short-term debt. Secondly, even in the short-term debt, 97% is trade credit type of debts, not like you are taking something for your own XYZ other expenses, revenue expenses, not taking for revenue expenses. 55% of Indian external debt is denominated in US dollars, and 30% of India's external debt is denominated in Indian rupee. Where there is currency risk, currency exchange risk, here the currency exchange risk is with borrower, or that is with India. If rupee fell, then India has to give more money. Here the currency exchange risk is with lender. Mostly it is with lender. If rupee fell, despite of whatever it happens, we will pay only in 1 lakh rupees or 5 lakh rupees or whatever the XYZ amount is. Okay. What else? Near and rear we already discussed in detail. What is equation of near? Just near is geometric mean of E by EI all raised to WI. Weightage will be given to this. E means how much SDR you are getting with Indian rupees. EI means how much SDR you are getting with the XYZ new currencies. Now if you calculate this with appreciation of rupee appreciate means you will get more SDR. Your more SDR means numerator is increasing. Numerator is increasing. If you are assuming all other variables remain constant, with appreciation of rupee, near will increase, and rear is nothing but inflation adjusted near. If you compare the inflation in both countries and add into the variables, then you will get real effective exchange rate. This graph you can study the performance. There is high and very less chance a question will come on this XYZ. Mostly if question is coming on near or rear, it will be a conceptual level question. Like last year we have quite a tough question from this conceptual part. We discussed this in detail. You can go through the video if you are having any confusion in this. Now there is a sharp increase in government's capital expenditure. If you look at government's last 3-4 years, what exactly government is doing? Every year government is saying that we want to invest more in capital expenditure. We need to spend more on capital assets. We need to create more routes, more airports, more railways, modernization. All this you are constantly hearing in the news. Now let's have a reality check. Is government exactly doing something or just talking? If you look at this last 3 years, if you look at the last 3 years performance, it was what is the unit? Lakh crore. It was 4.1 lakh crore that was government was spending in capital expenditure into FY21. In FY22 it becomes 5.5. That is a 34% increase government has done it here. Now from 5.5 next year government has again increased it at 35%. So government is not just doing the talk, it has over the years or over the last 3 years you can see almost not 2 into but 1.8 into increase has been made in the capital expenditure. Capital expenditure has been priority of the government in the recent years, and there has been considerable progress in in the sector. Let's go ahead. Now if you consider the infrastructure policies in India, there are 4 major policies that you should know. We also discussed this in little bit in previous classes. What are these 4 policies? First one is National Infrastructure Pipeline. Second is National Monetization Pipeline. 2 pipelines. Third one is National PM Gati Shakti. And the fourth one is National Logistics Policy. These are 4 policy priorities of Government of India in the recent action. All infrastructure policies or decision government is taking, you one way or other you will find relation with these 4 policies. Now let's briefly understand what exactly this is. You maybe already know this, but still have more clarity on this. There is high chance if a question is coming from infrastructure, it will be coming in either of these. The first one is national infrastructure pipeline. So we have already told that what government is saying, capital expenditure is so much important. Capital asset is the lifeline of economy. Why capital asset is so much important? It's crowding private investment, like we seen in agriculture. If a road is being created, somebody will create an industry there. So it crowding private investment. What are other effects of this? Job creation, poverty reduction, all this is. If a road is being constructed, a direct job is being created for constructing the job. Now, if a road has to be created or a bridge has to be created, there is demand for steel, there is demand for iron. So net demand in the economy goes up. Land prices in the area goes up. What is other? There is this exactly is called multiplier effect. You are spending X money in this, but the impacts are felt different parts of the economy or much greater. If you spend 100 rupees, what you see, if you spend 100 rupees, what you see the growth in economy may be 1000. So a 10 into growth, like multiplier effect is seen for capital investment. What else? There is positive externalities. If road is there, people may go to school, or people may spend less time in, like agricultural commodities, it can be transported from one part of the country to the other. Market will be in the cities, production will be in the rural areas. There is no good road, then there is no way the perishables can reach this. So if there is good road, there is improvement in these trade aspects, improvement in farmer income. So there are so many positive externalities that is associated with capital expenditure. But what is the negative side of capital expenditure? Or why governments are reluctant to spend, or why economy is reluctant to spend more in capital expenditure? From government side, one is political pressure. Because whatever you envisage for a capital expenditure, government term is 5 years. 5 years election come, next government will come. And you cannot expect a result in 5 years. Most of the projects will be 10 year, 15 year, 20 year. So the effect will be spread during this whole lifetime. And you will get considerable effect maybe after 20 years. So in this scenario, there is political pressure on the government to better you give some money directly, freebies, distribute freebies, so that politically government is safe. So political aspect is there. What next? Negative, more than negative externality, banking sector issues. Because banking sector, most of the credit is short-term credit. And if you are investing from banks are investing in this long-term credit, there is a mismatch of liabilities and assets of the bank. This is leading to NPAs, this is leading to evergreening of different NPAs, and other problems are creating in the banking sector. Twin balance sheet, similar issues will be popping out. So Indian financial, at least Indian banking system is incapable of taking up the long-term investment. Banking models are more like a short-term credit models. So these are some of the issues government want to address in this by bringing up different projects or different models. First important policy is national infrastructure pipeline. What it envisages? Physical infrastructure creation. How much government is saying? We will create around 9,000 new projects, and these 9,000 new projects will be total worth of rupees 111 lakh crore rupees. This much huge investment has been envisaged under this policy. Almost all other sectors, from energy sector to road, railways, irrigation, rural infrastructure, urban infrastructure, all these are a part of this mega investment project, that is national infrastructure pipeline. 9,000 projects, 11 crore rupees worth. All the whatever investment is being done under this will be updated under Invest India Grid portal. And there is if a project is, this is investment details will be available here. And if a project has started, how much progress has been made, all this will be uploaded in the project monitoring group. Especially it is monitoring project beyond 500 crores. So why these both are doing, what these two elements are doing? Basically, it is bringing technology and bringing transparency in implementation of whatever the project government has said. Now, what economic survey say? You are doing very similar things. Better integrate both these and create one portal for all of this effect. Because basically, it is implementing XYZ portal for increasing the transparency of the XYZ project implementation. So, government may this year combine these two and come up with a same portal, single portal for all the projects in this national infrastructure pipeline. What else? What is the funding model for this? This 1 lakh crore, where it is coming from? 39% will be contributed by center, 39 by state, and 22% will be by the private sector. You can go ahead. Now, what is more important? Now, what government here does is, we will give money, government, private, give money, create infrastructure. That is the objective of national infrastructure pipeline. Now, there is some funding gap, excuse me. Yeah, sorry, let's continue. So there is a funding gap in the infrastructure investment. Government, just by coming and saying give more investment, center will give that, state give that, things will not mobilize by this. So we need some innovative system to mobilize the projects or mobilize more funding into infrastructure funding. For that, what government came up? What was the innovative step taken by the government? Asset monetization. What asset monetization? If a road is there, this road is already being created by the government. Already government mobilized the fund and created the road. Now what government do is, give this road for suppose 30 years. Give this road which is created by the government to a private sector A. Now he will take the maintenance of the road for next 30 years and he will collect toll or whatever revenue is coming out of the road, he will collect from this. Now for collecting toll or whatever revenue for 30 years, he will give a lump sum amount to government. This lump sum amount will be invested in creating greenfield projects. Greenfield project means new projects. So what government is doing, there is an existing project that is being given to a private sector for maintenance for X number of years, and for taking this X number of years, revenue will be collected by the private sector, and for this government will give a lump sum amount. Lump sum amount may be 1 time, maybe 2 time also, maybe 3-year time also. But this amount that is collected can be invested into create greenfield projects that will be used in the national infrastructure pipeline projects or some other projects. Now here, is there any transfer of ownership? Is it related to privatization? There is no concept of transfer of ownership. After say 30 years, the road will be returned back to the government. Ownership remains with the government, not with the private entity. Go ahead, the same diagram is shown here, you can go through it. Go ahead. Now what is the target for this national monetization pipeline? We have discussed for 2021 to 25, the target has been rupees 6 lakh crore. Government has put 15 railway stadiums, 25 airports and 160 coal mining projects for asset monetization. These all are like different roads and what are the value that has been allocated to different sectors for asset monetization. You can at least remember that the highest value is coming from roads itself, then railway, then transmission lines and all of this. Go ahead. Now if you have, first government told that you invest and create the asset. Second, government give an innovative method to find funding for doing this. Now if government do all this, government tell that we will put more capital funding, then government find a method to mobilize more fund to it. Everything is done, but capital assets who will create? Ministry of Road and Highways will be creating one type of assets. While the gas pipelines will be led by Ministry of Gas and Petroleum and Natural Gas. So what is happening? A road will be made. Next day the drillers will come and drill the road and put the gas pipeline. And once it is done, the next people will come. We will need fiber optics, digital infrastructure. ये बोल के field drill करेगा. So what exactly is happening? There is no coordination between different ministries. Asset creation, whatever infrastructure creation we are talking about, it is not done by a single entity. It is done by almost spectrum of ministries, departments, autonomous organization, groupings, and all this. So there is need to for some level of coordination between all of these. This coordination has been envisaged or brought up by PM Gati Shakti. PM Gati Shakti is nothing but a portal that will bring everyone together. You come here, your approval for the project, your implementation stages of the project, all will be happening at a single portal. So if there is a need for integration, if there is one drilling is enough for doing so many things, that kind of coordination and cooperation between the ministry, interministerial cooperation will be ensured through PM Gati Shakti. Rest of the details you can read from here. I'm not too much going into the micro details of this. Go ahead, you can pause the video and go through this. Now, what is national logistics pipeline? If you created all this infrastructure, still it is not enough. Why we are creating all this infrastructure? The basic idea is improving efficiency in the economy. How we improve efficiency? If we transport goods from one part to other part of the country with very minimum cost, or if we export XYZ goods from India to the outside part of the world at a very minimum cost. If that is our core objective, that is not happening, then the whole infrastructure development become meaningless. So we need a concentrated policy so that whole our focus will be coordinated and whole our infrastructure development will be coordinated towards improvement in logistics. Now, what is issues with India's logistics? Currently, issue is India is spending around 14% of GDP on logistics. This is considerably higher than the advanced level economies. What India is trying to achieve is reduce it to 8% of GDP by whatever year 2024-26, whichever year it is, reducing the logistic cost of the economy from 14% to 18%. That is the major objective of the logistics, national logistic policy. And why we are having this high cost on logistics? What is major reason for this? Exactly, like 2% or very small number of routes are carrying huge number of traffic, or huge number of cargo are being carried in a national highways. If a national highways in total road network is 2% only. So what is the consequence? There will be blocks, there will be congestion of roads, there will be accidents. All these are a regular thing in the Indian roads. And this is one part of it. Major issue is, if you look at the global trend and Indian trend, logistic cost 14% we already told. 60% of Indian cargo is transported through roads. This is considerably higher. Like if you look at 35 is through railways and only 5% is coming from waterways. If you look at the global average, very less is coming from, this is wrong, very less amount of logistics is transported through roads. Most of the most preferred ways of transportation is waterways, after that railways, then come roads. Roads are having high cost as well as high other charges, high risk of all other security risk, everything is high with roads. So these are the preferred modes of transportation or preferred modes of logistics. And this is Indian model is completely ulta compared to the efficiency. So we need to promote waterways, we need to promote, have better like railway system. And what we are building for this? Dedicated freight corridors. From north, south and east, west, we are building dedicated freight corridor, means special railway tracks through which cargo only will be transported. So we have higher speed trains running through this without delaying any other, over congesting the whatever the network we are having. Here we have the national waterways projects, different national waterway 1, 2, 3, 5, 6, all these are developed and investment has been mobilized into these directions. So another target is when World Bank's Logistic Performance Index reach in top 25 rank by 2030. That is another target set under this National Logistic Policy 2022. Other features of the policy you can read here. You can pause the video and go through this. So now we have talked so much of logistics. Now we want to create a sub-federal system or competitive federalism model for logistics also. For that, our index is leads index, or you can say logistics is across different states index. What is the most important thing? If exam it is coming, examiner is framing the question, he will put Niti Aayog in this, and you should know that it is no report not published by Niti Aayog, it is published by Ministry of Commerce and Industry. MOCI, this ministry is publishing or releasing the report, it is not Niti Aayog. First logistics report was published in 2018, after that continuously it has been publishing. It has divided the states under 4 categories like coastal areas, hinterland, locked areas, northern states and union territories. Now it will create separate ranking for all these. Then in states also there will be achiever state, there will be performer state, there will be underachiever state, like 3 division is based on 3 divisions on the result also there has been divisions has been created. Most important point is it is not being published by Niti Aayog, it is published by Ministry of Commerce and Industry. Now one more concept we need to have some clarity on, that is viability gap funding. What is viability gap funding? Suppose a project is there, if suppose a road is there, a road is, we told that this road is having huge social value. That means if the road is created, there may crowding of private investment may happen, or there may be better access to hospitals, so maternal mortality, all these health indicators will improve. So there is social value as well as economic value associated with building this road. But private sector is not able to raise fund for this road. Maybe the private sector is worried that there will be lesser traffic through the road, they will not get the toll collection as they are expecting, especially if the roads in a hinterland, hilly areas. So these areas you are investing, you cannot expect too much of traffic to come. Even though social value, economic value of this road is very much, but there is fear of investing in this, so private sector is not too much interested, and whoever taken the project is not able to raise fund for building this road or any other infrastructure. Now in that case, government will come and say, don't worry about funding, government will give 40% of the financial funding. If 100 crores is the road project, 40 crore will be given by the government, only 60% the private has to raise from the market. So this will be done, this exactly process is called viability gap funding. It is done for economically viable but financially unviable projects. Why government is doing? Because there is huge social and other benefits associated with building this infrastructure. Now this is the basics of viability gap funding. Now in 2021-22, government has brought some amendments or brought some modifications to this. What is it? If it is a project for water treatment plant, if it is a project for water treatment plant, the funding will be center, state as well as private sector. State government is also coming into picture, and 30% will be given by center, 30% by state, and only 40% has to be raised by the private sector. So government is expanding the government's contribution into it by bringing together states also into it. Beyond that, operational cost recovery, 100% will be recovered from this. Like suppose after the capital investment is done, now operating cost, daily electricity charges will be there, all other charges, employee fees, everything will be taken from the users who are beneficiaries of this, collect money from them, there will be no subsidy on that. Only in the capital investment on making the infrastructure, there will be center, state coming into picture, and 40% only has this private sector has to raise the money. Secondly, the case of hospital. This is very important because this has been done in 2021-22 when there was pandemic was happening. So during that time there was so much stress on health infrastructure in the country. So here it is for first 5 years. The initial capital investment, 40% is given by, if you are creating a new hospital, 40% fund is given by center, 40% by state. Only 20% private sector has to raise from the market. Now for operational cost also, 25% you will get from center. Like if a hospital has to be run, you need 5 lakh rupees to run the hospital daily. Out of this 5 lakh monthly or daily expenses, 25% will be given by the center, 25% will be given by the state, and 50% will be collected from beneficiaries. who like patients or any other services you are giving, 50% only will be collected from them. So this is the basics of viability gap funding. Basically it is, if the project is not financially unviable, government will give funding, and due to circumstances, for some project government has given extra help. Otherwise all the projects are getting 40% of government viability gap funding. Now we have discussed two things. One is ONDC. What is ONDC? Creation of, like what UPI does. There were so many banks, there were so many applications. Now what UPI does is a single platform where every bank, every other payment system can integrate and do the transactions. Now what government is trying to do through ONDC, you have different online medias. Like you have different app for ordering food. If you want to travel, you have different apps. If you want to do e-commerce, buy some products, there is different app. So all these different apps you have to use. Now what government is trying, through a single framework, you are bringing all these into one framework. Now this open framework will be provided by the government. Here people when come for whatever applications, and then they can do the whatever services they want to avail, they can avail. What it does is it will have a free, it will have 0% of, like if you have to put your product on Amazon or Flipkart, you have to give commission. It will have 0% commission. So even very small retailers can put their product under this. Then there will be no minimal algorithmic bias. Like there will be no preference given to certain buyers. All these malpractices within the e-commerce industry will be eliminated under this. So these are the objectives government is trying to do through ONDC. Now second thing, we have very interesting concept we discussed is account aggregator. What account aggregator is doing? All your financial data is spread across different platforms. Like mutual fund will be with a demat account holder, bank account will be with somebody else, your credit account will be with somebody else. So all this different data, you will give your access of data to an account aggregator. He will collect all your data and keep it at one place. So this is what an account aggregator is doing. What you need to know is, this is an entity regulated by RBI, and this is not coming and taking your data. This is not a government surveillance mechanism. An account aggregator get data or access to data only when you give access to your data. You provide your financial details, then only account aggregator will get the XYZ details. Now this is a third concept that is in use, that is Open Credit Enablement Network, OCEN. What it does is, suppose you are a XYZ person, you want a 5 lakh rupees loan. Now what 5 lakh rupees, what you will need to know? You need to know whether banks are ready to give you 5 lakh rupees. Now if banks are ready to give you 5 lakh rupees, which all banks are ready to give you 5 lakh rupees, and at what interest rate or cost you can get this funding. So all this financial information you need, and if you personally go this, you have to go to every bank. You go to SBI, then you go to HDFC, then you go to urban cooperative bank. Everywhere you run across, then only you will know whether they will give you the loan or whether they give you at what interest they will provide you the loan. So this is a very Herculean task. So due to this credit system is being impacted. So what this OCEN does is, it will create a platform which links the lenders as well as whoever want to take the lending. There will be different mobile apps for applying for lending. You come here, use your account aggregator data, you give it to this app will go and it will check which lender is giving you the loan, and it will give you complete details. This lender will provide you the loan, this is your credit worthiness, this is what XYZ you are doing. Then all your data will be collected, and this will give you exact information where you get the money and all this. For this financial integration, we create the Open Credit Enablement Network. This is an example of fintech. This is said to be an upcoming sector. Like we discussed, what is neobank, no only digital banking and all. So this is said to be an upcoming sector where there will be new companies like Jupiter and all will be making their XYZ presence in this area. Very important three concepts: ONDC, account aggregators, and OCEN. Must know every XYZ dynamics associated with this basic concept I have explained. Now micro details, you at least Google it once, because these are so much important for the prelims that is upcoming. Who will? You have to give the data. OC, yes, whatever it is. That depends. There will be a regulator for this. Government will be only acting as a regulator, or government will be providing like a platform. Not P2P lending. This is banks itself or institution itself are sitting here. Not P2P lending is not part of it. P2P means there is no concept of bank. You are lending to me through a platform. That is not the concept. Here banks, institutions are all part of it. To streamline the application of loans, this is being brought up, not P2P lending. Clear? So that's it. We have almost covered all the basic concepts. That is all the concept as well as trends within the economic survey. By this, we are concluding the economy lecture series. That's all for now. Thank you so much.